इधर असेंबली इलेक्शन नहीं, लोकसभा चुनाव के बाद महाराष्ट्र के इस चुनाव, इससे पहले हरियाणा का, इन दोनों से जनता के संदेश स्पष्ट है और महाराष्ट्र से ऐसे अनएक्सपेक्टेड, अनप्रेसिडेंटेड विक्ट्री is a big message towards Vikasit Bharat.
Welcome back to Power Breakfast on CNBC-TV18. Now let's talk about Maharashtra's new CM. The suspense is finally over as Devendra Fadnavis is set to take oath as the Chief Minister today at Mumbai's Azad Maidan. This will be his third time as the Chief Minister. For more details, let's go across to Santhya, who is joining in with us. Santhya, good morning. Finally, the day has come when we are seeing a Maharashtra CM taking oath. More details on that.
Absolutely, Winnie, and I know how glad we all are, specifically you, because you really wanted to know who the next Chief Minister is going to be. So, especially for you, it is going to be Devendra Fadnavis. As you rightly mentioned, this is the third time he's going to swear, he's going to take the oath as the Chief Minister of Maharashtra. Devendra Fadnavis has once again emerged as the most prominent figure in Maharashtra's politics. Now, there are certain interesting angles to his swearing-in ceremony, but before I talk about that, Devendra Fadnavis is the second Chief Minister in the history of Maharashtra to repeat his complete his term, because all these Chief Ministers in the history of Maharashtra, barring Mr. Nayak, nobody could complete their term. So Devendra Fadnavis, after Mr. Nayak, is the second Chief Minister to complete a full 5 term. For the first time, for the second time, it was only for 72 hours. Devendra Fadnavis is the first and only Chief Minister of BJP in Maharashtra. And he's also the first Chief Minister to first become a Chief Minister, then become Chief Minister again for 72 hours, then become a Deputy Chief Minister for 2.5 years, and then become a Chief Minister once again. So a very interesting profile this man really has now. Now let's talk about the swearing-in ceremony, Winnie. It's going to take place at Mumbai's Azad Maidan at 5 p.m. It's going to be an extremely grand swearing-in ceremony because that's what BJP was aiming for. So let's talk about the details of the swearing-in ceremony. It's going to be attended by the PM, 9 union ministers and 3 chief ministers, and a crowd of over 50,000 people is expected. Winnie.
Thank you so much, Santhya, for that update there. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV18. Thank you so much for tuning in. Bazaar Morning Call up next.
हमारे असम में हमें गो हत्या को निश्चित करने के लिए कानून लाया थे। ये 3 साल हो गया, उससे हमें काफी सफलता मिला हूं। लेकिन अभी आगे जाके हम ये निर्णय किया हूं कि असम में गो मांस कोई भी रेस्टोरेंट और होटल में सर्व नहीं होगा और साथ में कोई पब्लिक फंक्शन में भी या पब्लिक प्लेस में भी ये सर्व नहीं किया जाएगा। सो ये हमने कंप्लीटली होटल, रेस्टोरेंट और पब्लिक प्लेस में बीफ को हमें कंजम्पशन ऑफ बीफ, मांस को खाना हमने आज से बंद करने का निर्णय लिया। पहले हमारा ये निर्णय था कि मंदिर का 5 किलोमीटर तक, लेकिन ये अभी हम पूरा स्टेट में एक्सपांड कर दिया हूं कि कोई भी कम्युनिटी प्लेस में, पब्लिक प्लेस में, होटल में, रेस्टोरेंट में आप इसको खा नहीं पाएगा। तो ये हमारा जो हमने शुरू किया था 3 साल आगे, इसको आज हम थोड़ा और एक कदम आगे बढ़ा के लेके गए। আছে বহুত শাস্তি আছে তাতে, আপোনালোকে পঢ়ি ল'ব। এইটোতো অলৰেডি আছে, জেল পৰ্যন্ত।
अरे भैया अभी तो कहा, देवेंद्र जी ने भी कहा, मैं भी कह रहा हूँ, रुको थोड़ा, अभी शाम तक रुको, अभी कल शपथ ली है ना।
उनका समझ में आएगा, मैं तो लेने वाला हूँ, मैं रुकने वाला हूँ।
दादा को ले ले, अरे भाई दादा को अनुभव है, दोपहर शाम को भी लेने का और सुबह भी लेने का। अरे भैया अभी तो कहा, देवेंद्र जी ने भी कहा, मैं भी कह रहा हूँ, रुको थोड़ा, अभी शाम तक रुको, अभी कल शपथ ली है ना।
उनका समझ में आएगा, मैं तो लेने वाला हूँ, मैं रुकने वाला हूँ।
दादा को ले ले, अरे भाई दादा को अनुभव है, दोपहर शाम को भी लेने का और सुबह भी लेने का।
India's market news headquarters. Cutting edge analysis. Influential insights. Market moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning. We are coming to you from the CNBC-TV18 Motilal Oswal studios. Yesterday was a bit disappointing for bulls because the market gave up gains twice. Once at about 11:30, the second time a little before 2:30. And the Nifty ended flat. But banks is another story. And PSU banks, of course, were what really did very well. I'm Prashant. With me, my colleagues Nigel and Surbhi. Guys, hi, good morning.
Hi, morning, folks. And the good thing is that we had another round of FPI buying.
Yep.
Though you can never say these days, right? With so many blocks happening, so many companies doing QIPs.
Yeah.
So whether that's actual real money coming in or not, that's always going to be a little bit of a point of debate on whether the data is skewed.
Well, in political cues, we'll officially have a new chief minister today of Maharashtra. So the long wait is over, and I think the suspense will be ended later this evening.
Absolutely. And did you? All of us watched that clip.
We
right?
saw that clip.
That press conference. I mean, I think very few things come close to. I mean, just the moment was something else. Right?
Yeah, absolutely. But yeah, I think the three of them put together.
I am going.
And then Mr. Shinde's quip after that कि कभी-कभी सुबह भी शपथ लेते हैं, शाम को भी लेते हैं.
I mean, that is television for you, right? And you know, it's quite amazing what happened. And of course, today is going to be heated political developments, and really, I mean, actually, it's a holiday here in Mumbai. Schools and I think a lot of that. Those are pictures, of course, from that press conference. And I think I'm not sure if this is after or before that. I think this is maybe as they were sitting down. But yeah, I mean, oath taking here at the government, people are eagerly looking forward to, and of course, then the business of governance under this new government will start. I mean, I think Mumbaikars have also got high expectations in terms of, you know, what the government can do especially for infrastructure, roads, etc. I mean, simple issues like that, but of course, which matter a great deal. More on this as we go along. But let me just quickly run you through the market cues, really, before we go any further. So equities last night had a good session. They ended higher. S&P was up 0.6%. NASDAQ ended about 1.2, 1.3 odd percent. So it was tech stocks which did very well. Now, I'll sort of, I'm just sort of going in reverse in that sense, but US ISM services data came. It was resilient, but compared to expectations, it was missed estimates. You had services, by the way, is more sticky as compared to manufacturing across data points. The 10-year yield, consequently, actually across the treasury curve, there was about a 4-5 basis point sell-off. The yield on the 10-year was around 3.5 basis points. We left off at about 4.19. But it was just not macro markets which impacted, the NASDAQ and how well it did as compared to other indices. You also had results. Marvel Technologies, which does integrated chips, integrated circuit boards and chips, etc. That stock ended 23% higher. It gave a strong guidance, citing robust, strong demand for chips which go into AI demand. And I think that sort of supported the entire complex. So there was the macro, but there was the micro as well, why tech stocks did well. Dollar roughly unchanged, 106.3. You had Fed Chair Powell, who spoke at that New York Times Deal Book Summit, and he essentially, his approach was cautious. He essentially said that the economy is in a remarkably good shape. He did not say this or that in terms of what the Fed will do in December and January. Market pricing in terms of what the Fed will do is also not changed. So if you look at it, for December, markets are pricing about 20 basis point cut, and they're sort of factoring in a pause as far as January is concerned. The other cue today, of course, is OPEC Plus, which is meeting, and oil prices slightly lower going into it, of course, but oil prices yesterday were up about 2.5%. You had Donald Trump, the president-elect, announcing some appointments. And Paul Atkins is the new SEC chairman, Securities Exchange Commission chairman, who's the market regulator like SEBI here. But Mr. Atkins, of course, is also a big advocate of cryptos. And, will cryptos and things like Bitcoin be mainstreamed in over the next 4 years? That's the thing. Of course, the entire crypto complex did very well as well. Just to circle back and tie in the levels, resistance for the Nifty, although we kind of ended absolutely flat, the resistance remains the same, 50% retracement of the entire fall, 24,770. Important support comes in at about 24,281. You could also see, the last highs which the market took a long time labor to really get above, which is 24,350 or so. That could be the first support. And then the more important near-term support is 24,281, 40 hourly exponential average. Bank Nifty decisively broke above the high of 52,760 yesterday. And this is where, stuff can happen. If momentum sustains, are we looking at all-time highs? Right? The all-time high, of course, is 54,467. It's 1,200 points away, about 2.5%. So we'll see if that is possible and there is enough in the tank here. And supports again here come in the hourly average, 52,424 is that number. GIFT Nifty will give you a sense of how we're likely to start. It's about 40 odd points lower. Surabhi.
Okay, well, Asia is actually a pretty mixed picture today. I'll get to that in just a bit. A few more data points from the US. Now, we all know that on Friday, we're watching out for this big jobs report, right? The private sector payrolls data came in yesterday, and that was actually a little softer than anticipated because the ADP report said that the number of payrolls added was about 146,000. The estimates were northwards of 160,000. Not just that, ADP revised its October numbers lower as well. So some softness in the private sector data, but the main one is the Friday jobs report. Now, ahead of this jobs report, the Fed chair is telling us the US economy is looking really good. So just to take that entire statement, Prashant mentioned, I just want to pull out the whole statement. He says the labor market is better and the downside risks appear to be less in the labor market. This is very explicit commentary coming in from Mr. Powell. He says growth is definitely stronger than we thought and inflation is coming a little higher. So it's got the debate going all over again. The probability still is that you'll get about 25 basis points in December just because they did a massive cut with 50 basis points earlier. So how can they suddenly do a knee-jerk reversal and say, oh, now the economy is okay? So that's on the Fed. The Fed guessing will continue. As I said, more importantly, Friday, the jobs data will give us a clearer picture. Now, coming to Asia, markets are a little mixed. The Chinese markets are trading slightly lower. Hong Kong, Shanghai, Taiwan, however, is slightly higher. You're seeing some gains in Japan. The focal point continues to be a lot of this political uncertainty in South Korea. Now, the Kospi is actually, for the time being, it's trading down 0.2% or so, but everything's happening out here from, martial law to not having martial law to now an impeachment of the South Korean president, Yoon Suk Yeol. So that whole political upheaval is very much in focus. Speaking of political upheavals, yesterday the vote in France went through, the no confidence motion. So the Prime Minister is out. And on the back of that, the dollar-euro has been moving all over the place, but it's stabilizing at around 105, the euro to the dollar. So let's see, that's another watch point when we're talking about global politics. Now let's come home. Yesterday's session, yes, the Nifty managed a flat close, but those sudden drops were very, very unnerving. The good news is that the FPI buying continued second day running. You have a 4-digit buy figure, almost 1,800 crores of net buying coming in. Now, whether it's through QIPs or blocks, I mean, people argue, and you see the rationale in that. At the end of the day, it's the color of money, and all that money is coming into the Indian equity market, whichever way you're looking at it. Domestic institutions were on the sell side yesterday, almost 900 crores of selling. Let's come to some stocks and news, and you'll want to hear more from our team for sure on this. Vodafone Idea and Indus Towers, both of these will be in focus because Vodafone PLC is going to be selling 3% of its stake in Indus Towers, and Nimesh was telling us about it. He's got it spot on. So more details on this. The market believes that this money eventually will make its way back to Vodafone Idea, though initially the statement said that Vodafone PLC will use some of the proceeds to clear off some of the loans that it has, the dues that it has. Apart from that, Bharat Forge, PG Electroplast, there are QIPs that these companies are doing, so let's watch out for them. There is IGL, which is going to be considering a bonus very soon, so plenty to keep us busy this morning. Watch out for Indraprastha Gas as well. And finally, just placing this on the record, the 11th round of commercial coal mining auctions is starting off. There are 27 blocks on offer. And, as we all remember, and Nigel will tell us more, sometimes if the mine is really hotly debated and it's a very contentious one, sometimes you'll see a flip on these stocks. But we'll watch out for Nigel. You'll remember, I still remember that Gare Parma 4 block. I can never forget because there was intense bidding for that one a couple of years back.
Well, and that was very different, right?
Yeah,
because that was a captive source.
That was a captive
talking
mine.
about commercial, commercial mining. By the way, I think what you need to track right now is Bitcoin. You know why? It's hit that mark. That 100,000. 100,000 mark is what the Bitcoin has hit as we speak. I was just looking at CNBC, our web team has put it out. So 1 lakh on the Bitcoin. But coming back to the equity markets then, today is going to be a big day because we've had a last couple of good trading sessions and today is the weekly expiry, which always calls for some more attention. So can the bulls take the Nifty to those highs on the weekly expiry? Going to be important. The Nifty Bank, that's clearly the one that's taken up leadership because HDFC Bank has found its form. But for today, can the IT index come to the party? Overnight as well, the Nasdaq was rather strong. So let's see whether or not there is some rub-off on that front. What about the FIs? Well, in the cash market, things are looking much better. And in the F&O market now, things have turned around because now they're adding long positions. And in fact, they're covering some short positions. They continue to remain net short on the index with 62% of the positioning on the short side. But otherwise, we have been seeing these shorts are getting covered out. And now, because of the kind of short covering you've seen from the FIs, on their short positions, that's why at around 83,000 net short contracts, this is the lowest net short position from the FIs we have seen since October 8th. So a fair bit of that short covering bounce has been seen on that front as well. But now cash market buying as well is there to support. The clients, well, they have got it spot on. They have been right, bang on. So they have been booking their long positions and they have been net long for the last 2 series. And in November, they didn't get much success because the index ended lower. But now, in fact, they're still sitting net long, but they booked some kind of profits on that front. Moving to the options data, since today is the weekly expiry, well, there's there seems to be a short straddle that's at play. That is, you write the same strike, the call as well as put, and you pocket the premium, which the premium will be roughly around 200, 250 rupees or thereabouts. So this gives you the broad range. On the downside, 24,300 is the mark that you're looking at. On the upside, 24,700. That's the broad range you're looking at for today's trading session for the expiry. The levels that you're looking at, higher levels, well, 50 and 100 EMA. So if you can get past the 24,550, or then you're looking at higher levels that come up for you on the screen. The Nifty Bank, it appears it's got its mojo bank. And now I think the near-term support is that level where, it was having a bit of a tussle. So 52,500 becomes important. The all-time highs are at around 54,500 odd. It looks on course to move out there, led by HDFC Bank. Stocks in focus, there are 2 stocks that have been running along. That is Graphite as well as HEG. Both of them in the last few trading sessions, they're up between 30 to 40%. That's on the news that, in fact, China has put in some curbs with regard to their exports, but that is on graphite, not on graphite electrodes. So after this kind of move that we have seen, will there be some cooling off? Because graphite is the one that in fact is mined. The graphite electrodes is manufactured. So let's see whether or not there is some cooling off. Incred as well has put out their viewpoint that in fact things are very, very different. So I'll be watching both these two stocks in today's session.
Okay, all right. We'll definitely look out for both HEG and graphite. Thanks for that, Nigel. Now that news flash is on, 1 lakh is finally here on the Bitcoin, so all the crypto bulls would be rejoicing. In fact, I'm just checking, checking the others as well on the crypto side. In general, I mean, most of them are up and about. Bitcoin is the surge this morning is about 6%. Ether is up about 7%. Solana in the the famous Dogecoin 4.5%. So the whole complex is moving higher, with Bitcoin taking out that big level as well. But let's keep it with the commentary coming in from the Fed chair, as we've been telling you that Mr. Jerome Powell yesterday said that the U.S. economy is stronger than the central bank had expected in September. And the central bank can afford to be a little more cautious. I mean, he was referring to the pace of rate cuts. So he's saying we could be a little more cautious and calibrated. He also rules out the risk of Fed losing its independence under Donald Trump.
Okay, well, things are happening, aren't they? Bitcoin at $100,000 level now. Daniel DiMartino Booth is CEO and Chief Strategist at QI Research, who's joining us. Daniel, it's a pleasure having you here on CNBC-TV18. Good morning. Thanks for your time. So, crypto most likely is going to be mainstreamed, looks like. No longer an outsider in that sense. Paul Atkins is SEC Chair, crypto backer, believer. What's your sense, Danielle, and what does it mean for markets as well?
Well, I have a tendency to agree with Chair Powell in that right now, at least, because it's not, it can't be used for transacting per se, that right now it is still what we would consider to be a speculative asset class and really a reflection of risk appetite worldwide and people's rejection, if you will, of fiat currencies and looking to find a safe harbor in the same way that he drew a parallel from Bitcoin to gold. So less regulation, I suppose, is going to ease the path for greater adoption. But again, until it's truly a store of value and a medium of exchange, these are the ways that we define a currency. I would simply say that there's now a greater ability for people to get into the market.
Daniel, hi, good to have you on. So there are a lot of moving parts, right? Because while the Fed chair was talking about the U.S. economy looking better than September, and it has, right? We've seen a lot of the data points since then. Let's see what the jobs report this Friday says, because the private sector report was slightly weak. So, which way would you be playing? And if you're talking about deployment, then would U.S. equities still get top billing for you, or would you look at other asset classes? Are you looking at other emerging markets as we step into the new year?
I think certainly right now that every single valuation metric in the world right now is suggesting that the U.S. stock market is overvalued, regardless of which gauge that you would choose to look at. The skew index, for example, that gauges how far stretched the stock market is as far in the left tail as it's ever been in the history of markets. So I think that there's something to be said for not just the payroll report that's coming up this Friday, but also tomorrow's tomorrow's revisions that are coming through from the Census Department. Actually, Chair Powell mentioned them when he was on stage today. And to give you but one example, when we had the last revision come out, personal income in the United States was revised down for the second quarter by 91 billion. Leaving only 65 billion for the entire quarter. So when you see revisions of a magnitude that wipe away 1.2 million jobs for a given year and more than cut personal income in half, I would say that as from the perspective of the Federal Reserve, you have to be very careful about how you interpret kind of immediate economic data versus what the revisions then show months later. We've already seen in the very short month of December, 3 trading days, 3 business days, 3 very large bankruptcies in the United States, and the layoffs continue to mount. We're seeing it in soft survey data as well, where people are very optimistic about the future, but yet they're still reporting layoffs and at least freezing their job levels. We saw that today in the Fed's very own Beige Book, which is an internal document that's closely tracked by Fed officials.
Hi, Danielle. Good morning and good to see you. Ben, India was your top market the last time we spoke from the emerging market basket. Does it continue to hold pole position?
Well, I certainly think that India is also very high up in terms of being overvalued. There's been certainly a lot of tremendous response to IPOs in India, but we are seeing what I suggested last time, and that is that your central bank is readying itself to be more aggressive in rate cuts going forward. And I think that this could certainly benefit the Indian markets going forward. And again, on a demographic level, unlike so many developed economies in the world, there is so much promise and potential in having a younger population that is so highly educated at a time when American companies continue to cut costs and look to offshore business and professional types of positions into India. So there is still tremendous potential going forward.
Got that, Daniel. It's a great conversation as always. Thank you very much for joining us, and look forward to our next one. Thank you. We'll take a quick commercial break here, but before that, let me quickly tell you what's coming up here over the next 2.5 hours. Coming up at 8:35, Rishi Anand of Aadhar Housing Finance talks to us about the H2 outlook for the business. 9 o'clock, we'll be joined by Gaurav Malhotra. Lots to talk about in telecom, Voda, Indus. There's at block 9:20 a.m. Dheeraj Agarwal of Ambit Investment Managers is our market master of the day. 9:30, Metro Brands, the GOM GST proposals. Sanjay Kumar Jha of Mishra Dhatu Nigam will join us at 9:40. Lots happening on the defense side as well. A little later, 9:50, we have Aurudip Nandi of Nomura, who talks to us about impact of Trump tariffs on a market like India, if any. And of course, it's the economy with Lata. She's in conversation with Arup Rakshit of HDFC Bank on what to expect from RBI MPC meet tomorrow.
Well, time to slip into a short break. We've got a lot of stock-specific action to track for you. Get at that in just a bit in our special Top 10 segment. We're looking at Indus Stars, Vodafone Idea, Bharat Forge, Fusion Finance, Hero Moto, IGL, Torrent Pharma, Metropolis, and Unicommerce Solutions. All of them will be reacting to positive news flow, while PG Electroplus, because of that QIP, could be starting off in the red.
परंतु ऐका पूर्वी आम्ही सकाळी दोघांनी घेतली होती तो हे राहून गेलेलो होता आता पुढे 5 वर्ष आता ठेवणार आहे काय
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Welcome back. So mixed picture across most of the Asian markets. We have lots of stocks to watch. So let's straight away take it to the CNBC-TV18 list of top stocks to watch. Our team is standing by with all of the details. Lots of names to go over, guys. Morning to all of you. But first, the big, block that we're awaiting. Vodafone PLC looking to sell stake in Indus Towers. Nimesh, you were alerting us, and it's finally happening.
Yeah, so finally it's happening. Vodafone PLC is going to sell 3% stake in Indus Tower via block deal. The price indication is up to 4% discount, but my sense is the deal will get executed in the block window today, which means it's a 1% discount. Now, in June, PLC had sold 18%, so technically it's a clean-out trade from Vodafone PLC as far as Indus Tower is concerned. The important to watch will be the proceeds. Now, we understand that officially 2,000 crores of this entire proceeds will be plowed back into Vodafone Idea, and Vodafone Idea then in turn will pay back to Indus Tower. The outstanding dues of Indus Tower from Vodafone Idea is close to 3,500 crores. Now, Citi believes that this money will be paid 2,000 crores, which is equivalent to 7 rupees per share. That would be paid out again by Indus Tower as a special dividend. So, Citi and most of the analysts now believe that the dividend yield for Indus Tower over to, on FY26 and FY27 can go up to as high as 6%. So, 6% dividend yield, outstanding dues getting cleared, a clean out trade. Looks like it's going to be a big positive for Indus Tower in the morning trade.
All right, Nimesh, got that. That's going to be the stock of the day, probably, Indus Towers. Let's find out about Vodafone Idea, though. Towards the end of the trading session, that as well did perk up a little bit. Rima, it's a positive read-through for them as well?
Yeah, a positive, but not a big positive. So first, the news. There is a board meeting scheduled on the 9th of December where they will consider a preferential issue of up to 2,000 crore rupees to one of the promoter entities. Now here, it's likely to be Vodafone PLC. So as Nimesh pointed out, the money that Vodafone PLC, which is the UK promoter, not Vodafone Idea, UK promoter, the telecom company, will be, raising some money via the Indus Tower stake sale. Part of it goes for reducing their debt, and close to about 2,000 crore rupees will be raised by Indus by Vodafone PLC, which will be plowed back into Vodafone Idea, which in turn will be given to Indus Towers. So basically for Vodafone Idea, it's like a pass-through. They're getting money from one pocket, but they will have to give it out to Indus Towers from the other pocket. So in that sense, it's a neutral for Vodafone Idea. But the other way to look at it is at least the receivables that Vodafone Idea owed to Indus Towers comes down. So money doesn't go into Vodafone Idea for its own capex and organic growth, but it will help in bringing down the receivables owed by Vodafone Idea to Indus Towers. So that is a positive. Board meeting on 9th, pref issue of 2,000 crore rupees to one of the promoter entities. We understand that should be Vodafone PLC. So it's part of the same deal that Nimesh spoke about.
All right, and of course, the big one is going to be on AGR, right? And no clarity on whether that will happen or not. That's 30,000-40,000 crores. We'll see, but we'll talk about all of this. Gaurav Malhotra of Axis Capital is going to be with us, and he's going to join us at 9 o'clock to discuss all of this. Now, Bharat Forge is the next one we want to focus on. There's a fundraising exercise. Abhishek is here with details. Abhishek, morning.
Morning, Prashant. So to begin with, Bharat Forge has launched a QIP. The indicative issue price is about 1,290 to 1,320 per share. As per the term sheet, the SEBI floor price is about 1,323.5 per share. So the indicative price shows that it is at a discount of more than 4% to 6.5% with respect to yesterday's closing price. The indicative issue size is about 1,650 crore, and the BRLM to this issue is Kotak Mahindra Capital as well as Morgan Stanley. Now, we also had North America November Class 8 truck orders, which shows that the total orders is down 9% YOY and it's up 18% month on month. The North America Class 8 truck orders are at 11-month high. Class 8 truck orders for more than 30,000 has happened for the first time in 2024. So hence, Bharat Forge will be in focus. Back to you.
Okay, all right, got that. Abhishek, thanks very much. So Bharat Forge on our radar. Sudarshan's joining in. He's watching out for, I think, Hero MotoCorp and IGL. So good morning. What's the news?
Morning, Surbi. So first, going with Hero MotoCorp, we continue to see launches in electric scooter segments, and recent one is Hero MotoCorp launching Vida V2 in 3 variants, and the price of base variant is sub 1 lakh rupees. Talk about some of the features. One, it has 5-year, 50,000 kilometer vehicle warranty. Also, battery pack is covered under a 3-year or 30,000 kilometer warranty, and it will have removable battery which will allow you to charge at your homes. Now, I have just tried to compare with two of its peers, Bajaj Chetak 2903 and Ola S1 Air. So first talking about the price. Price of base variant is rupees 96,000. It's almost at the same price as Bajaj Chetak 2903, but it's rupees 10,000 lower than Ola S1 Air. Coming to the range, it's almost at the higher range if you compare with the peers, and range is 165 km. And even in the top speed, it is at the higher range if you compare with the peers. The second stock that will be in focus is IGL. It's going to consider bonus issue on December 10, and it's the first time this city gas company is considering the bonus issue, and also amongst all the city gas companies, IGL will be the first company to consider bonus issue. But these city gas companies have been in the focus for the last 1 month, as government had recently cut the APM gas allocation by almost 35% in 2 rounds.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's hop across to Vinny. She's here with some more stocks in the news. Morning, Vinny.
Good morning. So let me start with some of the pharma names. We have Torrent Pharma that's going to be in focus. We're expecting a green year. Now, the company has entered into an agreement with Boehringer Ingelheim, which is one of the partners of the company. They were already working with them to market one of the brands. Now, they're acquiring 3 brands from the company. This is anti-diabetes brand. So this is going to be a positive coming in for the company. But do not forget that BI will be ending its patent sometime soon. So we'll be seeing other brands also and other companies also who will be tying up for similar reasons. As of now, the market share for one of these GLT-2 brands is around 3,200 crores altogether. So we're keeping an eye on that. It's going to be an interesting one for Torrent Pharma. Let's move on. Metropolis Health, we're expecting green here today on in trade as well. The company is scheduled to meet on December 9th. They will be discussing a preferential issue of equity shares. So keep an eye on that one. PG Electroplast, now the QIP has been launched for the company. They're going to be raising 1,500 crores. Issue price is around 690 to 699 rupees. So some bit of a discount versus yesterday's closing price. So because of that, we may see some bit of a fall coming in the stock because it's at a discount. It's an equity dilution of around 6.7% of the total equity. So keep an eye on that. And lastly, we have Unicommerce that's also in focus. Now, this is after the company has tied up with the Danish sportswear brand. And this is going to be the brand Will Hummel will be using the e-commerce operations of Unicommerce. So an important one to watch out for there, because Unicommerce in the recent analysis also highlighted that the sportswear and fitness category has done quite well. They've seen a 65% uptick in terms of orders during the Black Friday sale. So it's going to be an interesting one over there, and we're expecting green here.
All right, Vinny, thank you very much for that. And we'll keep an eye out on many of these stocks as we open up. Fusion Finance, stock's been absolutely bombed out, but Abhishek has got news flow. Abhishek, back to you.
Well, Prashant, as you mentioned, the stock has been bombed out. It's the worst performing MFI player that we have seen on exchanges. So over the last 6 months, the stock price is down more than 60% or nearly about 60% so from May to now. And it's also the only MFI player to report net loss for 2 consecutive quarters. So they have a board approval of fundraise of rupees 800 crore via right issue. Board has also approved a pref issue of up to 20% of this amount. So calculation shows that if they raise 800 crore at CMP, the CRAR, that is capital adequacy ratio, will increase to 31.7% from 24.4% that it was there at the end of Q2 FY25. The book value will decline by more than 34% to 164.5 per share, and net worth will increase to nearly 3,323 crores if they raise 800 crores at one go. Back to you.
Okay, all right. Got that. Abhishek, thanks very much. So lots of names over there to track. Let's quickly recap the list, in fact. The stocks to look at today, the ones that have positive news flow around them are Indus Towers, Vodafone Idea, Bharat Forge, Fusion Finance, Hero Moto, IGL, Torrent Pharma, Metropolis Healthcare, and Unicommerce eSolutions. The only stock with negative news flow around it is PG Electroplast, and that's because of fundraising, the QIP that they are likely to go with. Okay, but the big morning headline is that 100,000 mark has been conquered by the Bitcoin, and we have the Bitcoin and all commodity lady now joining in, Manisha Gupta on the phone line. Manisha, hi, what a morning. So what is it? Is it Paul Atkins at the SEC? Has that been the final trigger?
Oh, well, absolutely. It was last week that we saw 99.6 40 off an all-time high. So 100,000 was just inches away in that case. But yes, this perhaps has led to that final nudge for you to be trading above 100,000 at this point in time. But even more interesting, Surbhi, is that it's not just Bitcoin which is seeing higher gains. You know, earlier it used to be a thing that the money would move from one crypto to another crypto and stuff like that. But this time around, the money is coming across. So whether it's about Bitcoin, it's about altcoins, stable coins, meme coins, you have money flowing everywhere. It has been one big run that we've seen it across cryptocurrencies here. So if you look at Bitcoin is up 140% right now, but you have other altcoins which also have gained up anywhere between 200 to 400% in this year itself. So well, yes, this is one segment that the markets absolutely are trading very, very firm on.
Okay, all right. That's the big headline of the morning. And Manisha, once we touch base with you once again, we'll look at the other commodities as well and see what else to track beyond the Bitcoin today. But thank you for that quick synopsis. Bitcoin really moving higher. That's the big one today. We'll take a break on that note, come back on the other side, and we'll have Dipan Mehta of Elixir Equities joining in for some fundamental stock talk.
For 20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC TV18's 20th India Business Leader Awards.
Presented by Standard Chartered in association with Reliance Industries Limited.
Committed more than 400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. Two different manufacturers came back to us and said, look, we just cannot deliver to the time frame that we had committed. There's going to be a delay. In one case it was 6 months, in the other case it was a little longer. So the program that actually should have physically started on the aircraft already will now not start until next year. The 787 aircraft, the first of the retrofit ship sets, will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that 400 million that you spoke of, that was committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes. In one case we've had to change seat vendors. This refresh I talk about, which is an interim step on the 777s, is something that we hadn't provisioned for originally and is only necessary because of the delay to the seat deliveries. But look, we've made this decision to invest more because we realise that this is, we can change everything else about the airline, and we nearly have changed everything else about the airline. But until we change the last 40 of our legacy wide-body aircraft to the standard that we expect of ourselves, let alone what customers expect of us, I think people will not consider the job complete, and we won't consider the job complete.
So how much more are you going to have to spend over and above the 400 million which have already been committed?
Well, I won't say, but it's...
Welcome back. Lots of stocks to track today, and we have Dipan Mehta joining in with some fundamental ideas and perspective now. Dipan, good morning. Always great to have you on the show. So, you know, just taking off from yesterday, the move in PSU banks was absolutely fantastic, right? I don't know if it was all the finance minister speaking or if it is, I think more realistically, this hope of a CRR cut tomorrow. But your sense, whether you would play for the, even a, you know, quick trade, assuming that there is policy softness ahead, and if you like anything in the PSU banking space.
Yeah, good morning, Surbi, and thank you for having me on your show. See, generally, we want to be neutral to underweight banks because there's a lot of competition and the entire NPA also related issues are cropping up in the quarterly numbers. But within the banks, I think the PSU banks, especially tier 2 banks and SBI, their growth rates, their NPA management, their quality levels, technology platform is fast catching up with private sector banks, but their valuations are still at a huge discount. And I think we are seeing a very strong shift of capital moving away from the private sector banks, the likes of HDFC, ICICI, Axis, back into the PSU banks, where I think there's a good trading opportunity. And medium term to long term also, they may outperform the private sector banks. So within the banking space, I think investors are making space for PSU banks at the expense of the private sector banks.
Okay, all right. Got that. Dipan, stay on. We just have to address what was happening with these graphite stocks yesterday, Nigel. And I think you were yesterday also saying that maybe we should just hold our horses. I think you've spoken to a lot more people after market as well. So what's the take?
Well, that's right. You know, what we said yesterday, graphite is mined, while in fact graphite electrodes is manufactured. Now, graphite electrodes, well, they're used for steel making, while the graphite is used elsewhere, maybe in batteries. This entire excitement started because China has fixed the quota on graphite exports. You know, so that's why this entire excitement started. But the graphite that they are talking about and the graphite electrodes that are manufactured by both these two players, which is HEG and Graphite India, is very, very different. You know, and Incred has come out and they have put some few facts on the table. They're saying that the graphite electrodes are used for electric arc furnaces and they're manufactured from needle coke. So effectively, they have no relation with graphite itself. HEG, neither they mine natural graphite nor they produce synthetic graphite for the use of EV batteries, which is the graphite that, you know, the supply will be restricted coming out of China. And also, if you want to look at it positively, then HEG, they proposed establishing a plant for synthetic graphite production, but that's a few years away. So in short, the graphite that will be restricted in terms of global supply is very different from the graphite electrodes that both HEG as well as Graphite India are manufacturing. And I'll tell you what, things will look up in the second half of the year. But the way the stocks have run up, it appears they've got a little bit ahead of itself. Dipan, what's your view? You know, it's that sort of a market where things get very, very exciting and then, you know, people jump onto it. Yesterday, I think HEG almost ended at circuit. Maybe these stocks are due for a cool off. Your take?
Nigel, these things happen in a bull market and, you know, such misunderstandings, for lack of a better word, can take the stock price significantly higher. Any case, in investors looking for good ideas and new trading ideas and investment ideas. But the long-term prospects of both HEG and Graphite India link very closely to steel industry. And you know our view on commodity stocks like steel. End of the day, I think it's a cyclical business which is valued at very high P multiples. I think HEG goes at 60 times, Graphite about 25, 26 times or so. And there are times when these companies have created a great deal of value when there is something in the sector which results in significantly higher end product prices. But then those also tend to cool off because capacities come into play. It's not that difficult to raise the capacity for the graphite electrodes that these two companies manufacture. Both of them are anyway expanding capacity at a steady pace. So I'm not that keen on any of these two companies for the time being. If there is a cyclical play, then the best time to buy is when they're at absolute lows, which they are not at this time.
Well, the thing is, sometimes people stop asking the most obvious questions, and those are the questions we were asking Nigel, and he was, you know, telling us, giving us perspective yesterday while the stocks are flying. I was also wondering that graphite electrodes are used in, you know, steel furnaces, electric arc furnaces.
Yeah.
And the graphite that's getting banned to the US is, you know, the mined graphite perhaps, or some other category of graphite that's going in defense uses or, you know, some kind of, you know, semiconductor uses, etc. So steel arc furnace, electrode, mined graphite, it wasn't making any sense to me. But I guess that's the market.
Well, that's right. That's the market for you, Bhav Bhagwan, right? So we'll have to see how that moves today.
You know, you know, saying, Dipan was saying misunderstanding. I call it willingly suspending sort of reality or whatever you want to call it. Kuch to ho raha hai, dekhenge, you know, and
buy now, think later. I call it the buy now, think later psyche.
Well, but yeah, this is important, and I think it's good that we are putting this on the record. We did this yesterday as well. Nigel put this on the record yesterday in the afternoon as well. So, you know, important to remember. Well, let's welcome in the management of Aadhar Housing Finance. They are with us now. The RBI MPC, of course, is tomorrow. Decision will be out. Housing finance is one space which, of course, I think has got the cleanest and the longest runway and the most steadiest runway in terms of growth, unlike, you know, consumer finance or MFI or what else have you. Rishi Anand is MD and CEO at Aadhar Housing Finance. Is with us. Rishi, good morning. Good to have you with us here on CNBC-TV18 as always. Prashant this side. How's the quarter sort of panning out for you, Rishi? I'm talking about the third quarter relative to Q2. Is it as steady? Is it, you know, a lot of talk out there in the market about a bit of a slowdown at the margin, etc. Have you seen any of it in terms of offtake, credit offtake?
Correct. So, morning everyone. First thing first, Prashant, Nijel, Sulbi, it's a pleasure always to come back to your channel. And before I get into answering your questions, I must congratulate CNBC-TV18 on completing successful 25 years. Congratulations to all of you and to the channel and to the viewers.
Thank you so much, sir. Thank you so much.
Great. Okay, so let me give you a little flavor of what is happening at the industry and what is happening at Aadhar. Versus quarter one, quarter two, we grew our AUM at about 21%, disbursement at about 18-19%, profit after tax at about 16-17%. While I can be quoting, you know, a great deal of numbers on quarter three, but I would say we are on better footing versus quarter two. You know, that's the indication I can give. And I think your opening statement answered all the questions, saying that this is one of the most safest and the most stable, you know, industry to be in. Housing finance, especially after the PMAY 2.0, which formally got launched on 14th of November, has started seeing a lot of traction, seen a lot of movement in the demand, as I would say.
Mr. Anand, so give us some color. I mean, of course, the second quarter was really strong for you. I'm just going back and revising the numbers for our viewers. AUM growth was almost 21% year on year. Even quarter on quarter, it was up about 5%. You know, net interest income had a very healthy up move as well. Some sense, full year growth, not just FY25, but given this momentum in the housing market, maybe even FY26, what's a steady state number that looks very achievable to you?
So, Surbi, the way we look at the next 3 years, if I were to put at some numbers around 3 years, we are looking at a comfortable 18 to 20% disbursement growth, which will you know, result in about 22 to 24% growth on AUM. NIMs will be very stable at about 8.75, 8.8, while we recorded 9% in the quarter that is under question, but 8.75 is a stable state that we are looking at. So yes, the industry and Aadhar are in for good times, and I'll keep coming back to the PMAY 2.0, which targets the EWS LIG segment. You know, majorly 80% of the target happens to be EWS LIG, and that's the play area for companies like us.
Hi, Mr. Anand. Good morning and good to see you. And could you tell us what is the current incremental cost of funds versus your average cost of funds? If you could give us a couple of numbers on that. And also, I think a lot of your liability is floating. So whenever the rate cuts come about, you all will be in a good position. Explain that to us as well.
So, Nijel, our YTD cost of fund as we speak today is at about 8.4%. So very comfortably placed. There is a 20 bip hike that has happened over the last 7 months. And from here on, we see you know, the cost of fund going stable or down, depends on what happens tomorrow. So sorry, I missed your second part of the question.
I think 80% of your liability is floating,
yes,
right? So when the cost of borrowing goes down, you all will be in a good position. How much of that will you all retain? How much of that will you pass it on?
Okay, so 80% of my borrowing is floating, 80% of my asset is floating. So it's like for us. So whatever comes in is moved back to the consumer. Depends on what is the quantum coming in. If it's like a 5-7 bips, obviously it doesn't make sense to do that whole exercise, the high OPEX exercise. And if it's substantial, upward of 25 bips, it will definitely be passed on to the consumer.
Okay. So, Rishi, the expectation out there is no policy cut, but maybe a CRR cut. If there is, say, a CRR cut of, say, 15, 25 basis points. What will that mean for your cost of funds?
So the way, Prashant, it works for people like us is, we have our borrowing spread across either on a quarterly rest or a half-yearly rest or an annual rest. The moment the cuts happen on the banks change their MCLRs, which will have a I would say a lag of a quarter. And the moment that happens, and based on our rest, the moment it is passed on to us, it is eventually passed on to the consumer. So it might be if I were to do a door-to-door window, it might be anywhere between 3 to 6 months.
3 to 6 months. Got it. Rishi, we'll leave it there. Thank you very much for joining us. It's always a pleasure having you with us here. And
Thank you so much.
speaking to you and getting a quick sense of, so steady as she goes. And Q3, that is October to December, turning out to be better. That's the indication that Aadhar is getting in terms of offtake, etc. Well, we'll take a quick commercial break here. There's 12 minutes to go for the pre-open session. Sudarshan and Mitesh are going to be with us with some technical trading ideas. Stay tuned.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you'd need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy when you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. That was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power, I'd refer you to an article that was literally just released by IATA, which traces the how airfares have tracked relative to the CPI and relative to oil prices, not just in India, but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down. And not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable. And of course, we want to fill our planes. So there's always going to be a benefit to the customer in that respect.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start.
Okay, welcome back. There's 8 minutes to go for the pre-open session. Mitesh and Sudarshan are with us with what they want you to do as we start another session. GIFT Nifty is indicating a 35-point lower start. Gentlemen, good morning. Mitesh, how would you approach things? Yesterday there was a sharp cool-off. This morning, a small lower start. On the indices first?
Okay. So my belief is that, Prashant, on the index, we had a good breakout about this 24,350, which was recorded on Tuesday. And then we kind of, tested the 24,500, 550 zone, slightly tapered off. Now this zone of 24,350 will become a very interesting support area. So I don't expect that to be taken out in the short term. Also is the fact that any declines, I think to those levels I would be willing to buy over there. So in that sense, 24,350 is the zone for me. And once we get a closing about 24,500, good chance that we are heading towards 24,750, 800 zone. So I have a positive bias. Unless until we see a Nifty sustaining or breaking below 24,350 zone.
Okay, all right, got that. So, Mitesh, let's also ask Sudarshan what his trading setup is looking like today. Sudarshan, good morning. So, on the index, any trades, long, short, or are you staying away?
Yeah, good morning. Well, there are two undercurrents in the market always. The first is the short term or the intermediate trend. That intermediate trend for the Nifty, essentially for the market, it's up. We have broken out of a trading range. We have built a small base. So every trader should be looking to buy, whether it's on a breakout, on a dip, but you must have some long positions intact. That's the larger trend which we should be interested in. The second trend is the day's trend. On some days, there is a conviction that today the markets would be likely to go up, so let's go long. Today is not such a day. I don't really have any conviction up or down. And remember, it's also weekly expiry for the Nifty. It's difficult to say what would happen today. You can just follow momentum as the market builds up, prices. But if you find a dip, be a buyer and make sure that you have long positions intact for the next week.
Okay. All right. Sudarshan, what about your stocks?
Well, it's a all buy list with a lot of mid caps. One of the reasons why I'm upbeat is that as mid caps have been slowly coming out of their congestions, trading ranges, dips, retracements, and now giving buy signals. Chola Finance is a buy at the stop under 1260. ICICI General Insurance is a buy at the stop under 1880. PI Industries is a buy with a stop under 4100. And Balkrishna Industries is a buy with a stop under 2840. All four of them have similar patterns, sharp corrections, bases, and now imminent breakouts.
Mitesh, what about you? What are your trades?
So I also have a buy list. Just tactically would want to buy it at on any pullbacks also in some cases. So I have a buy on Hoodco to begin with. Hoodco is a buy with a stop at about 235. Look for a target of around 255 to 58 over here. Then I have a buy on ICICI GI. I think that's a common stock with Sudarshan. Good price and volume breakout. The stop is about 1920 here. So I would want to buy it with a stop just below 1920 and a target of around 2020 is what I'm looking at. A buy on Jindal Steel. See the metals pack has done very well, and if you look at the last few days, especially the ferrous pack is what is more interesting. So I have a buy on Jindal Steel. Buy here on a breakout above 942. That's my trigger. Yesterday the high was 937, so I want to see the stock get past 937, 940 zone and then buy. Keep a stop at about 926 and look for targets of 980. And you buy on LT Finance, which is last and finance. LT Finance, that's a buy. Keep a stop below levels of 144 here and look for a target of around 155.
Well, it seems the street is sniffing something on the ferrous names. Let's see whether or not there is some kind of support that is coming in there from the center, the government of India. Mr. Sajjan Jindal has been rallying for that. Let's see whether or not there is some relief before the end of this calendar year. Slip into a short break. You come back, we'll get you the pre-open rates. We'll also have Gaurav Malhotra of Axis Capital to discuss the telecom sector. Stay tuned.
Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com.
Welcome back. Well, Deepan Mehta is still with us. We'll get the pre-open rates in just a bit. We're getting some initial numbers that are coming for you on the screen, but I think that needs to stable down. Deepan, what about you? What's your view on Bajaj Auto as well as on the two-wheeler pack? Because yesterday there was that nervousness because of that UBS note that spoke about those price cuts. Sudarshan will join to give us some clarification on that. But your view on the stock?
No, I think it's fairly valued, and at a time when so much of competition is coming in on the electric vehicle side, at the same time, the numbers were not absolutely up to the street's expectation, and valuations also are pretty much fair. So let's see how this wedding season evolves for the two-wheeler companies. But at these levels, I think it's more or less fully priced. I wouldn't want to buy into. There's no trigger for the stock price to go up as well. But on the whole, I think it's fairly valued. So you may remain invested, but I don't think a fresh position should be initiated.
Deepan, a few other stocks. This new listing, Niva Bupa Insurer, I think it's up 30-40% in 2-3 days.
Yeah, Prashant, I'm sorry, I'm not tracking that company, so I wouldn't want to comment on it. But on the whole, I think view on insurance industry is pretty decent. I think good long-term growth dynamics over there.
What about this, the company called Black Buck? Again, recent listing. Sharp run up last few days.
Yeah, Black Box. Yeah, that's an interesting company. And a few weeks ago, you were discussing about which are the companies benefit from the explosion taking place in the data center business. And this is one company which benefits from the data center, kind of capacity increases which take place over there. They provide the hardware and the architecture and all the networking equipment and then actual implementation for large Fortune 500 companies, data centers as well, and a lot of other commercial organizations. And large portion of the revenues come from the US market as well. And gradually they are moving up the value chain, which is reflected in higher operating profit margins as well. So very positive on this company. It just has run up a lot, so valuations are on the higher side, but it's a company definitely worth watching.
Got it. Deepan, Honasa, again, bombed out. Yesterday came back up, promoters bought a little bit. I mean, I think it's just it's an indication to the market with that purchase shares. We see that happening. Any thoughts on Honasa? And the other one is life insurance companies. Again, Stocks had fallen 20-25%, and yesterday SBI Life and HDFC Life and a few others did well. So your thoughts here?
No, see, I think that Honasa, we need to give it some more time and see how it actually evolves as well, because, these numbers were very disappointing. And what I did not like is, the management should have communicated this thing in earlier conference calls that something like this is happening and they can expect a sharp decline in the profitability for these reasons. That would have been good kind of communication and transparency from that point of view. And now there's a whole host of uncertainty as to when the sales start to revive again. But definitely it's worth tracking Honasa, because within the FMCG space, there are very few categories left where there is decent growth. And the categories which Honasa is operating in certainly has got a good, I would say, runway for growth. So we are keeping it under watch. I think 1 or 2 quarters when the numbers are better, you should perhaps have a look at it. Coming to insurance companies, I think, they are great long-term plays and value will get created over time. But as I said, in terms of valuation, our preference is for LIC, where it's trading at a discounted enterprise value. And that also has corrected from its highs. So I would, like to go with LIC. Usual disclosure, we and our clients are invested in it.
Okay, so going with the LIC in insurance, yeah, I mean, even if there's some tightening of the bank assurance channel, I guess LIC is the one company that, will not be impacted. Got that, Deepan? Thank you very much for joining in. We will move on now because the sector in focus is telecom, and look at what these stocks are doing in the pre-open market right now. Both Indus Tower and Vodafone Idea, last I checked, they were up almost 9% apiece. Yeah, 10% on Vodafone Idea. Indus Tower has now cooled off a little bit. It's a more measured 4-5% move. But why the excitement? In case you've missed the news overnight, Vodafone PLC is going to be selling 3% of its stake in Indus Towers, and the street believes that, a nice chunk of this money eventually will make its way in Voda Idea, and then Voda Idea could be using some of this money to repay its dues to Indus Towers. So that's how, both the stocks are quite excited.
Should be has sold. The block has happened already.
Oh, okay. Yeah, while I took my coffee break, I think. All right. So the money is basically going to start trickling in. Now, where does it leave things with respect to Voda Idea? I mean, this is a small trickle, perhaps of, fund infusion that's happening. Let's ask Gaurav Malhotra. He, of course, tracks the telecom space. He's executive director at Axis Capital. Gaurav, great to have you on the show. So the block has happened, as Prashant was pointing out. What do you make of the development? And let's talk about your rough estimates in terms of the money flowing back to Voda Idea and maybe in turn to Indus.
See, the thing is, Indus is selling around 2,800 crores Vodafone is selling 2,800 crores in Indus. Out of which 2,000 crores is coming to Vodafone Idea, right? Now, this is actually part of the security package which was agreed to during the Infratel Indus merger, that there will be some second lien on some stake of which Vodafone owns in Indus for the purpose of repayment. Now, from our perspective, see, Vodafone has been repaying its outstanding dues back to Indus over the past few quarters. So the peak was around 5,800 crores, which end of second quarter was around 3,500 crores. So 2,300 crores has already been repaid. And in the last quarter, actually 1,100 crores was repaid. So our base case was that, Vodafone will use its internal accruals to repay the remaining 3,500 crores over the next 3-4 quarters. Now with this 2,000 crores, maybe this gets accelerated by 1 to 2 quarters. So nothing really changes from our perspective, whether it is for Indus or for Vodafone from that perspective.
Okay, but I guess it gives the comfort that the money may be just coming a little earlier than you earlier expected. In that sense. And I get it. I mean, for Vodafone Idea, this is, I think, a very small part of their overall, situation that they have to look at. Do you have coverage on Indus? For Indus, things seem to be a lot more clearer. What's your view on Indus overall, beyond this development?
See, the thing is, the way we think about Indus, obviously, things have improved majorly from the past 2-3 years. But in some shape or form for Indus, a large part of Indus's incremental revenues being built in by us and by consensus over the next 3 years is premised on Vodafone expanding its network the way they have guided to. And that network expansion is premised on the equity plus debt fundraise. Now, equity fundraise has happened, but the debt fundraise, there has been certain challenges. So to put things in perspective, 40% of the incremental revenues of Indus over the next, say, 3-4 years come from Voda. Now, if there is some challenge or issue with that debt raise, whether in terms of quantum or timing, then obviously that creates an uncertainty. So from that perspective, we are not sort of positive. We have an ad rating on Indus. We feel that we require clarity on the debt raise in Voda Idea for us to get more constructive. Stock obviously has also run up quite well over the past say 12 to 18 months.
Okay, that's really interesting. You're saying 40% of Indus's incremental revenues are dependent on Voda, not so much on Airtel or the other telecom players, which obviously need the tower infrastructure as well. So that's interesting. That's on Indus.
Bharti has already done majorly of the 5G rollout. So Bharti will continue to roll out. But going forward, with that 50,000 crores, 50,000 crores, that obviously part of that will be spent on the network, which will come on Indus Towers.
Okay. So Indus's fortunes, incrementally, if you're talking about fresh triggers, are in that sense very closely linked to Vodafone Idea. That's important to keep in mind. On Vodafone Idea itself, the next watch point or the next trigger, anyone's guess, right? They're getting this reprieve on the bank guarantees at least. So that's a good news that sort of came through. What else would you recommend on Voda Idea? And also just leave us with perhaps a quick view on Bharti as well. If you see any major upsides ahead, maybe more tariff hikes ahead.
See, in terms of Voda, the next trigger obviously is, in the management in the earnings call had mentioned that banks are looking for certain clarity on the AGR dues, before which there's some conclusion happens on the debt raise. So I think the next trigger for Voda Idea is obviously the debt raise. I think that is what everyone seems to be waiting for, including us. In terms of Bharti, Bharti continue to remain positive. It continues to execute well. In terms of tariff hikes, we feel that going forward the frequency of tariff hikes could actually accelerate. The last two hikes have had a 3 to 2.5 year gap between them, but given that the transmission of tariff into the ARPU and revenue for operators has moved up quite sharply. For Bharti, it was almost 80% in the last hike. So going forward, you don't need to take very large hikes to see a decent uptake in ARPU. So maybe that 2.5 year gap can sort of reduce to 1.5 or 2 years in the next hike, because you don't need to take a very large hike. So that's the way we are sort of thinking about the frequency of tariff hikes. But on the whole, we are generally positive on Bharti.
No, absolutely. And by the way, are you inclined to believe that they will get, because AGR, Gaurav, is the big one, right? And are you inclined to give them the benefit of doubt that something will be worked out?
See, we feel that eventually there will be some sort of equity conversion for some part of the dues. I think that's the base case which we are sort of working.
Okay. So not a clean kind of reversal of what was said earlier, right? That is not the base case.
Yeah.
Okay. All right. Got it. Gaurav, in terms of telecom equipment players, do you have coverage at all?
No,
on names like Tejas Network, etc.? No. Okay. All right. We'll leave it there then. Thank you very much for joining us. Appreciate you being here on the channel this morning. Thanks very much for taking those questions. I think, there's 4 minutes to go for market open. Let's get the 9-10 calls out of the way. Mitesh and Sudarshan are back with us. Sudarshan, what do you have?
I will buy ICICI GI with a stop number 1880.
Okay. That's a general insurer, ICICI Lombard. And Mitesh, what about you?
I would have wanted that as well, but I'll go with the Hoodco. See, it's also managed to get past its 200 average, which it was struggling for the last 3 days. So Hoodco should see levels of 255, 260 very soon.
Okay, Hoodco and ICICI Lombard. Gentlemen, thank you very much, both of you, for joining us. Let's shine the spotlight on Bajaj Auto once again. Sud is here with that. Good morning.
Morning, Prashant. So yesterday there was a note from UBS saying that Bajaj Auto has taken price cut for select variants of Pulsar and some of the variants of Freedom 125 CNG bike. Now on that, Bajaj Auto has clarified. It has said that top-end variant that forms 72% of total sales of Freedom 125 bike, company has not taken any price cut for the same. Since beginning, price has been the same, that is rupees 1.10 lakh. Now, the price has been revised for the base variant, and it's just to reach the larger audience. One more thing is that mid-level segment. Company is saying that during the launch, that what company had announced for the mid-level segment, it was different from what now the company has launched in the mid-level segment, and it's in the price of rupees 95,000. Another stock that will be in focus is Bharat Forge. Now, North America Class 8 truck orders have come, and orders have seen a strong rebound. On month, it has increased 18%. YY, it's down 9%. But the orders are at 11-month high, that is highest since December 2023. And apart from this, there is one more news. Bharat Forge has launched QIP to raise up to rupees 1,650 crore and indicative price at a discount up to 4% to yesterday's closing price. So keep an eye on these two stocks.
All right. So thank you very much for that. That is the list of names that we're watching out for. I mean, of course, the two straight outright kind of movers are Indus Towers and, what happened with Vodafone Idea, 5 and 10% respectively. There's, of course, Bharat Forge, there's Hero, there is Bajaj. Fusion Finance, maybe we could look at as well. Abhishek was giving us that indication earlier. That's the biggest underperformer as far as the MFI space is concerned. Stocks down about 60% from its highs. Torrent Pharma maybe as well, as was highlighted earlier, perhaps something to look out for. So there is a fair bit happening.
Graphite India cooling off a little bit, down close to around 2%. HEG is trading more or less flattish. We don't know about the stock prices, but we can tell you fundamentals. And, the fundamental news flow didn't really warrant that sort of a up move that we saw in both those two stocks. Just laid that down on the table for the time being. Graphite is down, HEG a little bit higher in trade. So let's see how both these two stocks go.
Yeah. Maybe as I've been saying, we've been inviting both managements to come and sort of speak with us. We'll have them join us and sort of talk to you directly as well. But I think we put out the information that maybe this is, the China news flow in that sense is really unwarranted. If that's the reason behind this near 30-40% rally that we've seen in both stocks in the last two trading sessions. We've got a few seconds to go for the market open. We'll look at the prices and then we'll look at individual names and how they're starting. So the opening bell, 71 points higher, 24,540. You've got the Sensex, which is starting at about 81 something. You've got the mid-cap index, which is starting in the green. Bank Nifty is absolutely flat. Actually, the open seems to be like what we actually got yesterday. So nothing on it very much. And then, of course, there was a big spike and then there was a big sell-off. So we'll see. IT index is down about 0.4%, 44,156 on the Nifty IT index. Advanced decline very early, but still it's positive. And the heat map on the Nifty is up on your screen. It's more up than down, at least to start. Surabhi.
It's far more quiet, more measured today. Basically pausing for breath. The large cap screen is seeing 32 points of a gain on Nifty, but mid caps are also quiet today. Just about a 0.25% increase. Slow and steady, so let's see if it builds. But in terms of gainers, you have the IT names right on top. Infosys, TCS, about 1% each on those two stocks. Hero Moto is up about 0.5% as well. Apollo Hospitals is having a positive opening. Reliance is up 0.5%. Some of the insurers like HDFC Life are still notching up a little bit of green. Airtel, Bharti Airtel, it's been cooling off for the last 2 days. Today, finally, it shows up on the green side of the screen. But anyway, the first major trend of the morning is large cap IT. Wipro, Infosys, TCS, all of these stocks are up and about. Let's see what's falling then. A couple of PSUs come up on the screen immediately. Power Grid, NTPC, ONGC, all of them are cooling off. The cuts are not deep, just 0.5%, 0.25%. But this is what's bringing up the downside. HDFC Bank is the other one that's keeping a lid on the gains. So even SBI is weaker. So after having a fantastic week and running hard, the Bank Nifty is cooling off. In fact, it's flashing a little bit of red as well as we speak. So very quiet. IT up, banks down. That's the large caps.
Well, that's right. That's why the sector of the morning that I'd given was IT index, because overnight as well, you had the Nasdaq did it quite well. And a couple of companies have reported fairly decent numbers with positive guidance going ahead. So today it seems the tech index is back in play. Divi's Laboratory, I'm not sure what's gone on over there, but that stock is down close to around 5% as we speak. So it's falling on very, very large volumes. So that's the stock on the downside of the morning. You have Genus Power as well. That stock has seen some profit taking and made a fresh 52-week high. but now it's down close to around 3%. The one on the upside, though, is Juniper Hotels, the largest owner of Hyatt Keys in India. They have a brokerage note coming in from CLSA. They have initiated buy with a target price of 430 rupees. So explains why that stock is flying away as we speak. Very, very strong move is what we're seeing on that particular name. A few more movers from the broader market should come up for you on the screen. HEG is up another 4% now, so that had a bit of a dip, but that's moved up yet again. So we'll have to keep an eye out on that one. Fundamentally, I don't think it's warranted this sort of a move, but yeah, that stock is up close to around 4%. Niva Bupa, last couple of days the stock has moved up. Today as well, the stock is up close to around 3% or thereabouts. Very, very limited float. I think there's only 5% of free float in the market. And Ola Electric, after the good run that it's seen in the last few days, from 70 to around 100 rupees. Now the stock is down close to around 1.5%.
All right. Well, that's a list of names which are moving around. And we've got 30 points now on the Nifty to show for it. And 24,500 around is where the Nifty is hanging on to. So there is a fair bit which is happening. I mean, HEG, it's moved from 400 to 600 and in 2.5 days, 2 days and 2 minutes. That's 50%. Very few things should move a stock 50% in 2 sessions, let alone what's, of course, gone on. So we'll see what happens. For now, it seems to be in a strong momentum grip. We'll have more on this one.
But Prashant, sorry to come in over there. There's divergence between the twins today. Graphite is down, HEG is up. Nigel, you were telling us one of these companies is setting up a plant in the future, right?
Yeah. HEG has announced that they will be setting up in the future.
This is synthetic graphite.
This is the graphite. I mean, it has some relation over there. It is at least 3 to 4 years away, and it will come with a big capex as well. But for the time being, it's up. In fact, it slipped a little bit from the top. Graphite India is down. I've spoken to a couple of buyers of graphite electrodes as well yesterday. That's the research normally I do. And they also said, Nigel, there's no relation whatsoever. Not that graphite electrode prices are moving up. Otherwise, the steel companies would be crying foul, what's going on out there. But that's a large trade that's taken place. 30 lakh shares have changed hands. So maybe that explains why we're seeing a bit of an outperformance on HEG.
Yeah.
But I think some kind of cooling off in the near term could be warranted, but we'll have to see how that goes.
Okay, well, more on graphite electrodes. I don't think we've spoken about this much graphite and electrodes.
No, we've spoken about this in 2018.
17 or was it 18?
17.
When these stocks, the huge move started.
They went up.
I'm saying not this early in the morning.
At that point of time, everyone was talking about that. And the stocks, they went up one way.
They go through these years of massive outperformance and then for many years.
And to be fair, when the management joins us, they said, Nigel, please don't remind us about those days. Those are the days we're making 65% margins, and now they're struggling at 20% margins as well.
Okay, well, let's move on to a few other things. Deepak Fertilizer, 3% higher, 1385. Stocks up, and it's doing well. It's got decent sized volumes as well. I mean, maybe it's too early, but volumes are a little on the lower side. Last 2 days, volumes quickly ramped up in the broader market as well. Kaplan Point is up 5%. I'm not sure if there's any news flow, but again, this one has also moved up very sharply from 1900 levels to 2500 levels in about 5 or 6 days. That's Kaplan Point. Skipper Limited is up 7%. Skipper is a big mover. Again, it's coming up, it's within the top 5 in terms of volume-led gainers right now. There is Reliance Power, which is up 5% as well, about 43, third biggest volume-led gainer. And there is Tejas Network, which is up about 1.5%. I think from the highs of the day, which is about 1400, it's already come off about 60 rupees. So those are a few others. Atul Auto, oh my God, what a move. Atul has moved again 550 to about 700 in about 4 days. Today's the 4th day. And coming up with strong volumes as well for this point in the day. So that's essentially what you have. Divi's, Nigel mentioned, 4.5%, 5% lower. Ola, I think we mentioned. NTPC Green is the other one, right? I mean, ramped up. The high yesterday was about 155 and it's cooled off to about 145 right now. And Genus Power is down about 5% as well. It's got decent sized volumes. Genus Power at about 442. PVR Inox Pushpa 2 or no, but it's down about 1.25% for now. Manappuram is down about 1.25%. And keep an eye out on some of these PSU banks. They all did very well. And at least the start seems to be a little more subdued. Names like Sirma, they all also came off about 2.5% yesterday. Sirma, and I think there was 1 or 2 other names there. Another 2.5% cut. Honasa was up 10% yesterday. It's down about 2%. So yeah, things are happening and things are moving, and more stuff is coming up on our screens, which we will continue to highlight. Dheeraj Agarwal is our market master today, Managing Director at Ambit Investment Managers. Dheeraj, good morning. Great to have you with us here. Thank you for your time. I mean, the banks are essentially what have come back the fastest. The Nifty Bank is about 2% from its all-time highs, Dheeraj. What's the environment like? I mean, 2024, news channels, we look at the end of the year, we look at what have been the big themes. One of the big themes that we kind of identified is that 24 has been the year when the central bank really cracked the whip in terms of asking financial entities to toe the line, both in letter and spirit. Right? So much happened there. Do you think 25 maybe we'll see, them taking the foot off the pedal a little bit more easy, light touch regulation, or you think it'll be as tight and as hard?
It's a difficult thing to forecast, right? I mean, I don't really know what's RBI's mind at this point, but it looks like and RBI's or the regulators' strictness, for the want of a better word, on the sector has been long coming, because it's not that they've suddenly tightened on the screws at this point of time. They've been actually warning about rampant growth in unsecured lending book of the banks as well as NBFCs, and they've been slowly indicating that this is a risk that we've been watching. So them coming a little bit harder on trying to prevent something untoward happening in that space at this point of time was not totally unexpected. And I don't really think, I mean, they might, so there are two different parts to it, to your question. Would there something to ease the liquidity in the system? Perhaps yes. Would they ease the regulation to undo what they have done in the last few months? I think not. I think unsecured lending is perhaps still in a little bit of a risk area, not for everybody, but for some people. And RBI will continue to watch it very closely, I think.
Okay. You just put up the Vodafone Idea stock. That is now I think it started higher. The pre-open, at least, we were looking at it up being about 10%. Vodafone Idea, if you will. I think the high has been, you can't see it, but there was a sharp ramp up. The high was made at about 8 rupees 79 paise. And it's just a complete collapse since then. And now we're about 8 rupees and 30 paise or so. That's down 1.5%. So it's a big move which has happened already within the first 5 minutes or so of trade. So that's Voda Idea. And the second one is Indus Tower. Maybe we could just quickly look at that one as well and see if that has also given up gains. That is also come off very sharply. Look at that. Indus Tower, I think the high has been made at, the high is at about 375. And the stock's at about 360 now. So both Indus and Voda, after a sharp ramp up, selling off very, very hard. Surabhi.
Okay. The analyst told us, right, that incrementally, what does it do? For Voda Idea, they have far bigger issues than, a little bit of money that's coming in. And even that 2,000 crores that comes into Voda Idea, they anyway will have to give it off to Indus to pay off the dues. And for Indus, why is that not too much of a hurrah moment? Because like the Axis analyst told us, that it was anyway being penciled in that Voda will pay. Maybe with its internal accruals, but it'll pay in the next couple of quarters. Now it just gets accelerated with the fund infusion happening from Vodafone PLC. Dheeraj, hi, great to have you on. I have a question around this whole FPI selling business, right? Last couple of days have been a little better. We've got some buying, 2,000 crores odd buying coming through. What's the chatter you're hearing? I mean, this home market bias is still so strong, right? You can buy stocks in America, buy bonds in America, now buy crypto in America. So one can understand the compelling reason to be in the US. So where do we figure in the larger scheme of things as we get into the new year?
So, I mean, while there are two parts to it. So while India's weight in the emerging market indices is now quite high, 18-19%, very close to China, one should keep in mind that our weightage in the global benchmarks are still in the 5% kind of a range. So from most global funds point of view, we are still quite small from that perspective. And hence, India literally becomes from most, I mean, there are about 27, 28 or about $30 odd trillion of total equities under management globally. And India's FI holding to there would be about $1 trillion. Just India, from a global standpoint, still forms a little bit of a diversification, a little bit of that additional zing that you add to your portfolio because it's a faster growing economy and you can find stocks here which can beat the benchmarks, etc. So it's becoming a little bit more of a bottom-up market. So my sense on the FI selling is, I mean, it's very difficult to pinpoint the exact reasons, but with the US elections, there were greater expectations of tax cuts and hence US companies doing better in the short run. There were perhaps expectation of dollar strengthening even further, which is always negative at the margin for the leverage money which might have come in. Mind you, I mean, that's not all of the FI money which is coming, right? So the leverage play is always small and at the margin, and it tends to come in and go out very fast. And maybe bulk of it has already moved out and we are back to status quo and back to business as usual. So I think global investors will keep India in their portfolio despite a strong home bias and despite a very strong performance in the US market at this point of time, because there are opportunities here which can do better and are doing better than even some of the benchmark large cap names in the US.
Hi, Dheeraj. Good morning. Good to see you in. No, I'm not going to ask you about Zomato, but what about Swiggy? Is it looking enticing enough? 55-60% discount in valuations in comparison to Zomato. And the management intends on doing the right things. They're sitting on cash as well of around 8,800 crores, and they sounded quite optimistic when they joined us yesterday. Do you believe that this can narrow the valuation gap with Zomato?
It's a tricky call. So without commenting on the valuation specifically, one thing I can say is that Zomato, in terms of their performance metrics, is way, way ahead of Swiggy at this point of time. And that's what the valuation gap shows. And Swiggy will have to do a lot more work to bridge that gap, if at all. So it's not easy. It's not easy. Zomato has taken a big lead. Blinkit, which is now the current driver or large driver of Zomato's valuation, is doing exceedingly well and much better than the peers. So the valuation gap is largely due to the performance difference as well.
So you stick to what you liked in the past then? Dheeraj, you would rather stick to what you liked in the past?
That's right, yes.
Okay.
Stick with the leader, stick with the top market share company, unless there are some strong reasons to change. I mean, just chasing valuation gaps is not usually a good idea.
Dheeraj, okay, so got it. So Zomato remains your top choice. And I'm pretty sure we're not going to speak again before the end of the year, Dheeraj. So tell us, give us, two scintillating ideas for 2025. Okay, maybe Zomato is one. Give us two more, so that'll make it a nice three.
And just to set the record straight, I mean, I never said Zomato is one of my topics. I like the company. And
businesses that you like. I'm not asking for a specific buy call on a stock.
Yeah.
But, businesses that you like, companies which are doing a great job and you think there can be a value created.
See, at this point of time in the market, the one message that I want to leave for 2025 instead of going into specific stocks is that the biggest learning from the October sell-off for me was that the companies, even if the companies which are very, very loved in the space right now, if there was even the slightest amount of earnings disappointment, the stocks were getting punished really, really hard. So what this tells me is that in many of the loved sectors, the valuations are priced to perfection. And hence, going forward, narratives will not work. It will be numbers which will drive the stock prices in the markets, which will make stock picking harder than what it was in the last 3 or 4 years. We'll have to focus on numbers with a microscope. And gone are the days where just because a company is loved, just because the story is loved, even if the numbers don't come in, the stock prices keep going up. So that environment has certainly changed. And that's what my key message is. At this point of time, it's very difficult to say which sectors will do well and not do well. I think it's more about which individual stocks within those sectors are delivering the numbers and can actually outshine. So 2025, I forecast or I see a market of huge dispersion. where within a sector you might see stocks falling 20-25% and stocks rallying 25-30%.
So it's going to be the year of a stock picker. Can't paint everything with the same brush. All right, Dheeraj, great speaking with you, and wish you a very happy new year in advance, and look forward to more conversations in 2025. Well, the market's holding on. I mean, not much has changed, about 50 points higher on the Nifty, so it's quite steady. Bulls are trying to build on the small gains at the start. Mid-caps are doing slightly better. But the one stock that's already under pressure so early in the morning is actually Divi's Laboratories. Let's pull up Divi's. It was down, I think, 5% last I checked it. Yeah, about 4% lower. Let's ask Vinny if there's anything new. Vinny, what are you picking up?
So, what has come overnight is that Novartis, which is an innovator, has lost an appeal against MSN in the US District Court. Now, what this means and why is it important for Divi's? Because Divi's is the API CDMO supplier for Novartis for this drug called Entresto. Now, Entresto drug was a big one in the CDMO portfolio for Divi's as well as the API portfolio. And that is why the impact that we're seeing coming in, because Novartis lost this battle against MSN. And now this means this ruling will indicate that there will be more generic players that will come in the near term in terms of a competition for them, and that could mean that this could impact in terms of the volume of take for Divi's. That is what the analysts have also highlighted. So that is why we're seeing pressure coming in, because the innovator has lost the battle in the US District Court, which means the supplier Divi's will also face some bit of a volume impact coming in for the CDM and the API side, and this is for the Entresto drug.
Okay. All right, Vinny, we'll keep it on the radar. Thanks very much for getting us the latest on Divi's. Could be the reason why the stock is under pressure because of the fear of maybe lesser revenues from that drug in the US markets. Let's move on now. The next company on our radar is Metro Brands, and there's so much that's happening within the footwear sector. Now, this all ties back to the story that our colleague Tim C did on GST, right? We all remember that this is a larger thing. It's not just shoes alone. Basically, the group of ministers seem to be of the view, and this is perhaps what they are going to be proposing to the GST Council, that differently priced items in the same category, for instance, shoes or watches, they should be taxed differently. So there is some thought that shoes which are above 15,000 rupees a pair should be taxed now at 28% GST and not at the 18% slab. Let's try and understand the implications with Mr. Nissan Joseph, CEO of Metro Brands. Mr. Joseph, great to have you on. So, Anjan, now it becomes very important for us to understand that from Metro's perspective, out of your total inventory, how much would be above 10,000? How much would be above 15,000? Because you do have a lot of the top-notch brands like Fila, Vans as well. So give us some sense, because there is this view building that higher priced footwear should be taxed more.
Yeah, I know. When you say there's a view building, I think you're implying that there's a proposal in the government to raise the taxes over 15,000 rupees. When you look at the business over 15,000 rupees for an individual item in the footwear business, it's very limited, right? It's not a huge market. So one could also argue that raising it does not help neither the center nor the consumer necessarily. All it might do is slow a little bit of demand in that sector. So I think it's a small piece of our business right now, so I'm not really focused on it.
Much? We just need to know. Is it 5%, 10%, less than that?
It's in a single-digit range, Surabhi. So.
And this would be pricing above 15,000, right?
Correct.
What about 10,000? If we just from our perspective, because we don't know what the final slabs would be or the threshold levels would be, how much of your business is footwear above 10,000 rupees?
So I don't think we bifurcated necessarily by that. We look at our footwear business over 3,000 rupees as we've shared in the past publicly. And, that's not a number we've divulged out. So what I can share with you is that over 3,000 rupees, we do in excess of 50% of our business. So you can extrapolate that number. There's going to be a, markedly downward sloping curve on that price to demand ratio there. So it's just not something we publicly discourse. And furthermore, we don't like to speculate on what the government is going to do.
No, that's okay. But we'll work with what you've told us, that business or footwear above 15,000 is the contribution is in single digits to the overall revenue, right?
Correct.
We'll work with that.
Okay. So Joseph, good morning, Prashant here. But the story has been premiumization, right? The hope has been that not just you, but other footwear makers and so many other industries will keep going up the value chain, not trade down, but trade up. Consumers also. So they'll effective purchasing power of consumers will keep going up as per capita goes up, and people will be able to afford higher price products, which means higher margins for you. So just your sense of how this, if this does happen, this does go through. I mean, how do you read this, the proposal itself and the thinking?
So premiumization is a little bit in the eye of the beholder, Prashant. So for somebody that's buying a 2,000 rupee shoe, a 3,000 rupee shoe is premiumizing their purchase, right? So there's a huge amount of people in that 3,000 to 10,000 rupee space that we cater to. We're not ignoring people underneath the 3,000 rupee range either. So premiumization is really to some form relative to where you were, right? It's aspirational, but aspiration starts with, I'm here today, I want to be there tomorrow. And that's how we look at a customer's journey with us. So, again, we try not to speculate too much on what ifs out there. When we get the actual notice, then we start looking at it and responding to it.
But do these items higher price, but we're talking about a specific cutoff. So we're not talking about 3,000 to 10,000, we're talking about higher price. In that category, as someone who heads a consumer business and you'd have a sense of it, does it hurt? Higher taxation hurt sales of these products?
So
at the very premium end?
So we currently do have a slab already in footwear, Prashant, right? So we have the 5% up to, 12% up to 1,000 rupees and then 18% over that, right? So it's not like we're not in the slab business already, right? Taxation always increases prices, and that always dampens demands, if you look at it from an economist standpoint of view, right? So that is something that would happen, but I think that we always consistently looked at how we mitigate those things and how we are able to continue our sales plan and our sales growth as a business.
Okay, all right. Hi, sir. Good morning. This is Nigel on this side, and good to see you, and thank you for all that clarification. Let's talk about business on the whole then. Everyone's hoping that Q3 has been much better than what we saw in the first half of the year. And for you, you'll also get some positive impact of the wedding season as well as festivities. Could you tell us, has Q3 been as strong as what everyone has anticipated and as good as what you were estimating? And is it good enough for you to do that 12 to 15% revenue growth for FY25?
So I think we guided to 12 to 15%, actually, to be honest, not 25, 12 to 15%. And I think
12 to 15%, beg your pardon. Yeah.
And we're definitely comfortable with the numbers we've seen. Fortunately, there's been no surprises, pleasant or unpleasant, through the quarter. But also, if you look at what's happening out in the market, there's been a lot of talk about slowing demand and slowing consumerism. Didn't we just read this morning about $10 billion worth of Apple phones being bought? There's also travel is on the rise, specifically international travel is now at 70-30 to domestic, international to domestic. Whereas if you look at it in 19, it was 30 to 70 the other way, domestic to international. So, what you're seeing is the consumer is spending in a hierarchical, seasonal manner, right? So when we came out of COVID, they rushed out and bought new wardrobes. They were sick and tired of seeing their clothes, sick and tired of seeing their shoes. Some of the shoes probably had dry rotted in their wardrobes, right? They went from that into eating out. We saw that big splurge. Then we see that going into travel. And now travel is going into international travel. And there's iPhones selling like crazy. So demand is still there. It's just a matter of where you fit in the hierarchy of a consumer's demand cycle, right? And that'll vary. We had the COVID bump up, and then we had the COVID dip, and then we've seen the normalization year come through this year, pretty much on track.
So you're sounding quite optimistic on what you've seen on demand on ground. In fact, very encouraging commentary, and also you're on track to hit that 12 to 15%. Tell us about the e-commerce business. I think it was around. It contributes, I think, double digit to your total sales mix. Are you seeing things plateau out there, or are you seeing decent growth out there as well? And for the year, what kind of a number will you look at?
Yes, I think we had a lot of catch up to do in the e-com space, right? And we weren't very invested in it pre-COVID. We started our investments at COVID, and we've continued to have some significant growth come out of our e-com business. At some point, you're going to see that normalize to it be in line with the rest of our businesses, because the rest of our businesses aren't exactly slouch businesses. They're very good businesses, right? So we are starting to see that it's going to be more in line with the normalized expected growth of the e-commerce business. Don't forget, we can always pump up that e-commerce growth if we're willing to go the discount route. And as you know, that's something that we believe as a brand. We do not believe as a brand to do is discounting. So, there's ways we can accelerate that growth if you wanted to, but it's really about being disciplined about how you grow that business.
What about Fila and Foot Locker? You said in FY26 onwards, the real impact will gradually start reflecting. In the next 3 to 4 years, you'll scale up these brands. Could you tell us on an annual basis, how do you see these brands scale up? If you could throw in a couple of numbers with a broad range.
Yeah, so I think, annually we'll be opening up Foot Locker stores and Fila stores. The exciting part probably would be at the latter calendar half of next year, you'd start to see opening Fila stores. As I said, the first year that we acquired Fila, the first year to 18 months was really a cleanup year. The last quarter to the next 2-3 quarters is going to be repositioning it. And then starting off in early calendar 26, you'll start seeing acceleration. But, we are seeing good indications from my initial launches of Fila that we now have in our Metro Mochi and our 2 lab stores of Fila. So we're quite pleased to see that. I think you mentioned that I seem optimistic. It's not about being optimistic. It's about business being on track, right? To me, I'd rather have a business on track than a business on fire. Either way, whether it's extremely good or extremely bad. We love businesses on track because, as you know, we love consistent performances. We love planned. We like performances coming in on plan. And Fila and Foot Locker, have a very solid plan behind it. It's, as always, not super aggressive, but it's definitely not conservative by any means. But we are building that bricks, and you will see us open a few more stores early in 25, calendar 25 of Foot Locker, and late in 25 calendar, you'll see us opening a few more Fila stores.
Okay, Mr. Joseph, just winding up the chat now. Quick 2 points. One, if you could tell us where you are on that stated journey of moving towards 30% EBITDA margin. I think you're at around 26% as of Q2. So what are the timelines you're looking at? And if you could give us some idea of CapEx, I think the earlier stated intent was to open 100 stores. You're naming a couple of more Fila stores that you'll be opening soon. So just want to understand the cash requirements right now. How much cash is in the books? Are you looking to raise any more money as you go ahead with the store expansion plans?
Great. So I think from the store expansion standpoint, we had guided Surabhi that we would open 225 stores in the 2 calendar years, this one and the following, 2 fiscal years, this one and the following year. We're on track for that. So that's definitely not an issue. And, I think that fortunately, Metro has great financial discipline and has a very positive cash business. So we would not need to raise cash to do those new stores and be on track with our 225 stores for the year.
And the margin, 30%? By when?
Oh, so we do track right at about 30%. We're not that far off 30%. So there will be some years that we go a little bit north and some years we go a little bit south. And, the Ind AS accounting also does affect that from time to time. But when you open a glut of stores in a certain quarter, but, we're very confident that as a business, we'll deliver right around the 30% EBITDA pretty much year on year.
All right, Mr. Joseph, we'll leave it there. Thank you very much for your time. Great speaking with you here on CNBC-TV18 as always, and good luck to you and your team. We'll take a quick commercial break here. We're going to come back. We have Sanjay Kumar Jha of Mishra Dhatu Nigam. That's a sort of alloy maker, supplier to defense companies, the space program here in India. We'll talk about Defense Acquisition Council approving projects worth 21,772 crores recently and what this could mean in terms of fresh orders for Mishra Dhatu. Stay with us. Welcome back. Let's revisit Indus Tower, which of course is sold off from the day's highest point. Nimish, of course, told us about the block, the fundraise, etc. He's back with us to put the spotlight on this one. Nimish, over to you.
Well, Prashant, as you rightly pointed out, deal done. And as I had suggested that it might happen in the block window, it indeed happened in the block window. So that suggests that the demand was quite strong. So 3% clean out rate from Vodafone PLC. From a buyer's perspective, I understand there was a good mix of both FIs and DIs who bought in today's block deal. Now the next step, which is what it means for Indus Tower and for Vodafone India. Vodafone PLC is now going to infuse 200 crores into Vodafone Idea, which in turn will pay off the debt of Indus Tower. As of September, the outstanding dues of Vodafone Idea is around 3,500 crores for Indus Tower. So that looks like 2,000 crores will be paid off from that fundraising which Vodafone Idea will do from Vodafone PLC. This means that this works out to close to 7 rupees per share for Indus Tower, which a lot of analysts believe, and Citi, JP Morgan, all have written as well, that this will be given back to the shareholders as dividend. In fact, Citi goes on to say that, after this entire proceeds getting paid off to Indus Tower, going forward in 26 and 27, the dividend yield could be close to 6% as far as Indus Tower is concerned. So a big overhang is out of the way. Now the next step would be how much money does Indus Tower gets, and two, if Vodafone survives, then obviously it means a better business for Indus Tower going forward.
All right, Nimish, thank you very much for that. That's Indus Tower, which is in focus. Well, let's go back to Mitesh for a quick check on markets as well. We're down 40 points. So after everything is said and done, the Nifty now down to what the GIFT Nifty was indicating at 8 o'clock in the morning. Mitesh, how do you read things and any trades?
Yeah, Prashant, I think, as I said, this still feels like some intraday volatility to me, and closer to 24,350 is my pivot level. So I think anything close to about 24,380, 375 would invite longs on the index with a 45-50 point kind of a stop. Having said that, on the stock side as well, I have a positive bias. Tata LXI, I think that's the stock which I would like to recommend. Buy here with the stop below 71.90, and look for a target of around 7,500 to begin with. And the other one which I like is Bosch. That's after correction is showing signs of bounce back. So keep a stop just below day's low of 34,950 and look for a target of 36,200.
All right. Two big names, Bosch and the other one as well. Just a quick word on check on BSE and CDSL. I just want to highlight these names. Mitesh, I don't know if you have any thoughts here. 4% on BSE and CDSL is up about 4% as well. And of course, I think we were highlighting the Zomato stock at the bottom of the screen, almost at about 300 rupees. Any trades here on BSE or CDSL?
See, BSE, I'm not sure, but CDSL, I think, is still showing continuation signals. So as long as the stock is above 1730, I would look for targets of around 1900, and on any 10-20 point decline, longs can be taken with the stop below 1730.
Okay, just want to point out, thanks Mitesh so much for that. I just want to point out, folks, look at the market.
Yeah.
Completely turned, the color. Absolutely turned, and again, like yesterday, it's a very sudden fall. We were nicely cruising along. The Nifty was up about 50 odd points, and now look at it. Suddenly it's down 50 points, and not just the Nifty. Bank Nifty is also weak. Mid-caps have lost their mojo. Just pulling up the list of Nifty losers for your reference. NTPC, Bajaj Auto, JSW Steel, SBI Life, Cipla, Shriram Finance, Power Grid. As you can see, it's not just one sector. It's like an all fall down situation.
Well, that's right. And I think the stock of the morning actually is Zomato. The last from the time Swiggy has listed, Swiggy is up close to around, I think, 20%, while Zomato is up only around 9.5% at the start of today. Now it seems that Zomato is pulling back that underperformance, and as we speak, the stock is nearly 300 rupees or thereabouts. At the start of this series, we had mentioned, that this could be the stock of the series and maybe the next one as well. It comes into the FNO. It probably gets into the Nifty as well because that criteria gets fulfilled, and it was a relative underperformer in comparison to Swiggy. But as Karan Taurani as well told us, there is a valuation gap between the two, and he believes there's a good case that this valuation gap will stay as well. Mitesh, any view on any of these two names? Both those two, Swiggy as well as Zomato, now at the high point of the day. For Swiggy, I think, there'll be some of that shareholding that is blocked that gradually comes to hit the market. But any view on both these two names? How are they looking on the charts?
Well, in Swiggy, the data is very limited to, understand it the chart properly. But Zomato, I'll start with the disclaimer that I have positions over there, so there's vested interest. And yeah, the stock has broken into fresh highs. I think a breakout like this could possibly suggest further continuation. And now the buying zone will be around 290, 288. So if you get it there, I think buy with a stop below 280, and I'm looking at a target of 320 here. But as I mentioned, I think there is vested interest. I have call options positions in Zomato.
What about Sirma? Any thoughts here? Last 2-3 days actually starting to correct from its recent highs. I mean, I think high was about almost 600, 540, 550 now. Mitesh?
Which stock is that, sorry?
Sirma.
Oh, I'm sorry, I'm not tracking the stock, so I have no idea. Actually, never looked at the chart.
Okay. And Divi's is the top volume-led loser on this one. Any thoughts? I mean, it's news-related, but it did very well, and it basically, I think, got back to high. I think last month crossed the highs of 2021 at about 6,050.
That's right. Also is the fact that I think it's first signs of profit booking over here. While the medium to long term charts remain good, I think in the short term the stock is signaling loss of momentum and could go into consolidation. My advice is very simple. If people are long here, exit, take profits, wait it out. The stock could be available between 5,800, 5,750 again. That's the area to enter.
You know, put up the stock price for Castrol India, which is up 4%. 216, and Mapma India. Mapma India is the other one, which landed itself in a fair bit of controversy on corporate governance issues, etc. We spoke with the management, by the way. It made a low of about 1575, and the stock's recovering a little bit. So 1634 or so. High on this one is almost about 2,700, 2,800 rupees. But as promised, I think we have the management of Midhani with us.
Well, let's focus on Midhani then. Yesterday I had news that the DAC had approved proposals of around 21,000 crores. So there's an immense opportunity for a lot of companies, and the metal alloy manufacturer as well, Midhani, which is focused on defense as well as space, could stand to benefit. We have with us Mrs. Sanjay Kumar Jha, the chairman and MD of the company. Hi, Mr. Jha. Good morning. Always good to see you win. Well, the stock has seen a big rally of late. It's up more than 20% from the recent lows, though it's still 30% off the peak. Let's find out about business. Could you give us an updated order book? The last we have is, I think, that for the first half of the year, the order inflows was around 1,000 crores and you were guiding for another 600 crores. Is that on track? And break it up for us. Most of your order book currently is still defense, right?
Yeah, first of all, regarding order book, this year we are expecting total order book inflow of around 1,700 crores. So already 1,100 crores already we have received, and another 600 crores is expected in next 3 to 4 months. And regarding the composition of the order book, yeah, of course, defense is maximum today. And we are expecting that, in fact, other sector also will pick up. But more important part in this order book is a component of export. So export order book, I say this year the booking is highest so far, and also expected to increase further. Last year we did export of around 67 crores. And this year we are expected to cross more than 100. So we are targeting around 120 crores of the export this year. And we have a good visibility for the inflow of the orders coming from the leading, mainly the aerospace companies of the world.
Correct. Tell us a little bit more the order book then, sir. 1,700 crores is the order inflow. The titanium segment, that is gradually getting a lot of attention. As a percentage of your order book, how much is it? And how do you see, that segment shape up?
Titanium in our order book is taking the place of around 25 to 30% in that segment. And superalloys is another area which also is having a very good inflow. So both the segments, superalloys and titanium, is almost the order book position is more than 1,000 crores out of 1,800 crores which we are having today. So this is a very good change in Midhani's profile of working, because earlier we had most of our order used to come in the special steels category. So that specialist steel category is still there, but then superalloys and titanium has increased further. So,
okay, all right.
And these are the very specific to certain high-end applications in the defense and aerospace. So we are expected to improve our performance of the company based on the execution of superalloys and titanium production in the large quantity.
Got it. Mr. Jha, before my colleagues come in, I just wanted to clear up three numbers. That's the near-term guidance. For the first half of the year, the revenue growth has been only around 3%. But we know for you, Q4 is the biggest quarter. You were earlier guiding for 20% growth for this fiscal year. Do you stick by that? What will the margins look like? And give us an idea on the working capital days. Because for you, that was large. You were looking at bringing that down as well with inventory days under control. So three numbers: revenue growth, margins, and working capital days.
Yeah, revenue growth, as you have rightly told, that our second half is always on the higher side. So this year also we are expecting our H2 will be on the bigger scale. We'll be doing that, and that is a part of this. Regarding the margin, already we have been reflected that our Q2 has improved almost from Q1 very high, and I am expecting that Q3, Q4 will be still better, and overall impact will be seen in the our FY25 total performance, and I am will be maintaining the good margin. I'll say not like the earlier of 20% and on, but our idea is to reach cross the last year we had a very around 9%. So our trying to see that how we can cross or near around 10 to 15% or 12 to 15%.
No, right. Sir, which numbers are you talking about? Margins, sir, as we have, is around 19%. The EBITDA margins is what we're referring to. For the year, what should it look?
I'm asking on the PAT. I'm talking about the PAT. But EBITDA also will be almost around the 20 to 25% around.
25%. Top line growth will be 20%. EBITDA margin will be in the vicinity of 20 to 25%. And working capital days will be what?
Working capital days, last year we have come to almost 120 days. You are talking the receivable, not the working capital?
No, the working capital, sir. The receivables, payables, as well as inventory, put it together. Working capital.
Yeah. So our idea is to bring it to the level of around 3 months. 3 months, but right now we are, last year it was around 4 months. So I am trying to bring it to the 3 months this year. So far, the performance is good. So let's see that how we can, because our aging, our sundry debtors is very less today. More than 1 year is very less. So we are expecting that it will improve further.
All right, Mr. Jha, just one question. When we see these orders come in from defense forces, and you were you will supply to these on the defense side. What is your sensitivity to the three forces? I mean, in terms of orders which come in, or is it it doesn't matter? I mean, do you have higher sensitivity to in terms of supply to Army, the Air Force, Navy? Could you give us a sense?
See, if you see the application of high-end materials, aerospace or Air Force is on top. The Navy also is there. So the two fronts, mostly the naval requirement, and we are not giving directly our material to the services. It goes in the different platform to the other vendors. So directly it is not there, but in fact indirectly also if you see, the application of niche materials are basically in both in our air and also in the seawater. So both the things, that area is dominant. Regarding our armed forces also, we are doing something like in the armor category, that lot of work we are doing armor one. But as far as the alloys and high-end alloys are concerned, the Air Force and then also we have this naval system are taking the, I think, bigger pie of our order execution.
Sir, Mr. Jha, you said that obviously you're getting more export opportunities. So tell us also where are these markets where you're exporting? And this is a bit of an out of context question maybe, but we're just trying to understand from a learning point of view. Now we know what's happening globally, right? All these trade wars are happening. And the highlight of last week was China saying we're not giving rare earths to the US for their security and military needs, right? I think they spoke of gallium, germanium, a couple of these other elements. Now, I don't know if you are into any sort of materials or alloys which can be a replacement or whatever. What we're trying to understand, question is, first part of the question, which are your key export markets? And second part of the question, with trade wars happening, if China limits the supply of these materials used for semiconductor and defense, can Midhani benefit in any way?
First of all, I want to make clear that we are not in the area of semiconductors material. What we are, we have the application of rare earths metals is mostly in the alloying of making the super alloys for the application in the aerospace, aero engine per se.
Sure.
So that way, we are not having any impact because of this type of supply chain issue. But as far as the other segment is concerned, like you are talking about the different segment in the export side.
Yeah. Which are your big markets?
We are targeting the export in our expertise domain of high-end alloys, which is nickel-based alloys, super alloys, which goes in the core of the aero engine, which goes in the outer many manufacturing of the aircraft. Also, it is going in the domain of let's say in the oil and gas in the high-end applications. So these are the areas where we are targeting with our nickel-based alloy. Titanium also has a specific application in the aero engine and the aircraft. So that also we are targeting in that side.
And are you exporting most of these alloys, the nickel-based alloys, titanium, etc.? Is US the main market? Is it Europe? Where are you exporting to?
We have a various customer. Today it is going to the US also, and today it is on the European market also. And we have at least 20 to 25 different customers we are serving our materials. We are also seeing in our special alloys goes in the healthcare also. So we know that many specific grades are required in our manufacturing of our health care related equipments, which in India it has to pick up yet. So we are serving the international market today.
So it's good to know, sir. We just wanted to know because you never know these days with all these tariff talk and wars. Someone bans someone else. We just want to know what's your area of expertise internationally if there is a kicker coming in. That's it.
Mr. Jha, just one last clarification. You said another 600 crores in orders in the next 3 to 4 months, right? You said.
Yeah.
Okay. All right. Got that. So by the end of FY25, order book should be what, sir?
Order book will be in the range of same around 2,000 crores in that domain only.
Okay, I think.
See, our orders, we cannot pile up the long order book because execution time is very short. Today, nobody is willing to give the long-term orders. So, and of course, we are looking for certain long-term contract, which we are yet to decide. But today, the turnaround time for the giving the order and execution is hardly in the months. It is not coming in the years. We have to put in 3 months, 4 months, 5 months like that.
Okay, we should. I think we were carrying one. There was a flash saying 600 crore order book by in H2, 600 additional orders in H2. So 2,000 odd crore order by the time Mr. Datu finishes F525. So we'll make that correction. Thank you very much, Mr. Jha, for joining us. It's a pleasure having you here. We take a break. Manisha on the other side. Commodities in focus.
हमारे असम में हमें गो हत्या को निश्चित करने के लिए कानून लाया थे। ये 3 साल हो गया, उससे हमें काफी सफलता मिला हूँ। लेकिन अभी आगे जाके हम ये निर्णय किया हूँ कि असम में गो मांस कोई भी रेस्टोरेंट और होटल में सर्व नहीं होगा और साथ में कोई पब्लिक फंक्शन में भी या पब्लिक प्लेस में भी ये सर्व नहीं किया जाएगा। सो ये हमने कंप्लीटली होटल, रेस्टोरेंट और पब्लिक प्लेस में बीफ को हमें कंजम्पशन ऑफ बीफ, मांस को खाना हमने आज से बंद करने का निर्णय लिया। पहले हमारा ये निर्णय था कि मंदिर का 5 किलोमीटर तक, लेकिन ये अभी हम पूरा स्टेट में एक्सपांड कर दिया हूं कि कोई भी कम्युनिटी प्लेस में, पब्लिक प्लेस में, होटल में, रेस्टोरेंट में आप इसको खा नहीं पाएगा। तो ये हमारा जो हमने शुरू किया था 3 साल आगे, इसको आज हम थोड़ा और एक कदम आगे बढ़ा के लेके गया। আছে বহুত শাস্তি আছে তাতে, আপোনালোকে পঢ়ি ল'ব। এইটোতো অলৰেডি আছে, জেল পৰ্যন্ত।
Welcome back. Let's shift focus to the commodity markets now. We have Manisha joining in. Manisha, so we discussed the Bitcoin headlines earlier. What else are you tracking?
Well, you know, it's been a very peculiar year, an year where you've seen the dollar index continue to gain, precious metals are higher, and so is Bitcoin and various cryptocurrencies. So it has been a year where you've seen buying happen into many of these safe havens apart from the fiat currency there. Well, I'm talking about silver right now because we've seen stronger gains come in for this one as well. We're trading at 1 week highs right now. 3% of gains is what we've done in this week. And for the year, we are up by 32% till time right now. Well, silver also seems to be going forward strong. That is because markets are anticipating China's stimulus expectations, and that is keeping the industrial metals and silver prices both on the higher side here. It also has to do with the Indian silver prices, where we've seen ₹1 lakh per kg here in the month of October. From those kind of levels, of course, we've seen some bit of a decline coming in, but silver is ending 2024 as a 4th year of deficit in the global markets, with an expectation that 2025 could also see deficit continuing in sense of global supplies there. Well, the markets also have seen industrial usage in sense of silver continue to gain, and that has been supportive. If you look at those prices, if you look at those numbers, you can see starting 2021, the demand has been higher than supply going forward. 1.2 million ounces of a demand is at record highs, and the street anticipates higher number going forward in 2025 as well, while the supply or production perhaps will not be able to catch up. So that clearly is supportive. Industrial demand when it comes to silver is 60% of its overall demand right now. So that tells you that going forward, the kind of tariffs, trades, policies, especially when it comes to renewables, EVs, all of going to be very important in 2025 there. Coming back to the prices then, and an all-time high in case of silver prices is way back in 1980 during those Hunt brothers at 49.5. In this year, the global silver prices finally broke a 12-year highs, and we did see prices at almost $35 an ounce. Currently, we are trading at 31, and the street does believe that higher highs is what you could see going forward, at least in the next 2 to 3 years as well. If I show you the prices, then average prices have continued to gain up as well. The last couple of years did not do much, $21 to $22 an ounce of an average price. But this year, we definitely have taken a leap ahead at $27 an ounce of an average price and $35 of a higher price in this year as well. Going forward, the expectation is that you could be looking at higher prices. So from JP Morgan to Citi to Bank of America, Most of them believe that $35 is what Bank of America says, but 38 to 40 on the higher side is what you could be looking at in 2025 in case of silver prices. If you do the maths right, then that means 25 to 35% of gains in the next year as well in case of silver prices.
Okay. Manisha, thank you very much for that. So that's commodities in focus as always, and precious metals is what we sort of shown the spotlight on today. Well, let's get a quick macro outlook on 2025. Aurodeep Nandi is India economist at Nomura. He's joining us now to take some questions. Aurodeep, we'll get to specifics and from your report in just a bit, but at a broad level, for our viewers, I mean, what matters is asset prices and financial markets. And that kind of mirrors what kind of activity you will see on the economy side. In 25, looking a little more, is it looking tougher as compared to the last few years? Let's just start there.
Yeah, I mean, look, we think that the Indian economy is in a cyclical slowdown as we speak, right? And in fact, for FY25, we've downgraded our growth projection to 6%. For FY26, we're looking at 5.9%. Yes, there are some temporary factors that are at play currently. For instance, the government isn't spending enough, or we had some issues with the last quarter. But what we are more worried about is the fact that, one, on the global side, it's going to be a much tougher environment with the Trump policies coming in on tariffs, on around immigration. So it's going to be a tougher global environment. And also within India, the urban pent-up demand that was there post-pandemic has largely dissipated now. And on the urban side, it is showing up in terms of the macroprudential tightening, which the RBI has done, is showing up in terms of lower credit growth and is going to impact demand. The other thing also is that be it in terms of employment, be it in terms of income, they haven't grown strongly. So add to that the fact that private capex has yet to pick up strongly in an environment of global uncertainty, in an environment of weak domestic demand. And then you put that together, and then you say, okay, what are the positives, right? And the positives are that rural demand should be better because we have, at this point, a very good monsoons.
You kind of describe the picture. Let me just come in here. Can it be helped, the negatives, can it be helped through monetary or fiscal policy?
Oh, absolutely. I think for monetary policy, our view is that the RBI should cut tomorrow, right? Monetary policy has to be forward-looking. It has to be counter-cyclical. So we not only have the first cut on the 6th December policy meeting, but we have a deeper rate cut cycle of 100 basis points. On the government side, I think the capex run rate has been much slower than what is required for the year. So I think from the government side, it's actually pretty simple at this point. Ramp up spending to meet the targets that are already there for the FY25 budget.
Aurodeep, let me just go back to that. So you're saying a 25 basis points rate cut, not a CRR cut, right? Tomorrow.
We are also saying a 50 basis point CRR cut.
Wow. So you're saying 25 basis points repo plus a 50 basis point CRR. That's going to be a massive bazooka, right? Which takes me back to your overall note, because I think that's not just a knee-jerk call on the GDP. You're expecting India to see aggressive rate cuts in the Asian region as well. So just expand on that. And how does the RBI do this? How does it inject this big bazooka of liquidity and a rate cut at a time when inflation is trending above 6%?
I mean, we need to figure out what is contributing to that inflation, right? Once you take vegetables out of the CPI basket, inflation is at 3 to 4%. Core inflation has been low for a very long time. So the question is, if growth was strong, you could hold monetary policy tighter. But when your forward-looking forecast is pretty well anchored at 4.5%, and you're at a point where, I mean, the GDP print that we got of 5.4%, I mean, let's not kid ourselves, that is pretty shocking. right? India's trend growth is 6.5% to 7%. So that is not normal, which means that not only does the RBI need to downgrade its GDP forecast for FY25, which is at 7.2% currently, but also means that it has to reassess its confidence as far as the growth cycle is concerned. And again, the impact of the first rate cut now will only be felt in the economy around 6 to 9 months later. So, this is the time to do the rate cut because monetary policy, as I said, has to be forward-looking. The CRR cut is primarily because there's been a lot of forex intervention, hence liquidity out of the system, and so there is then the need to infuse durable liquidity. So the CRR cut comes from there, but on the policy easing, I think we need a pivot soon.
Absolutely. Government spending, or again, should not be any issue. I don't know why it should be constrained now, right? I mean, too much focus on the deficit. And I think this, I remember having discussions around the time of the budget, not just this one, but the previous one as well, when that's, government spending targets, etc. for budget estimates were brought down sharply. So do you think we will see a change in track there as well?
I mean, one is, actually, I completely agree with your view that there's technically nothing stopping the government now, right? So there is no election, there's no constraint on them. But I think there is also an issue of the institutional capacity to spend, to get all that money out of the door by the end of the fiscal year, given that we had a late start to the year. So I think on the RevX side, there's been some growth. We were really hoping that the October number for capex growth would be stronger because there was nothing stopping it, but actually it's still continuing to contract. So I think there is an issue in terms of sort of being able to drive up the spending. So a lot depends on the government sort of telling departments and getting this engine running again, because private capex isn't really in the picture. So much of this investment growth that we see in the GDP statistics is essentially reflective.
What's the number?
Public capex.
Auradeep, sorry, we're so sorry we're rushing you because we're hard-pressed for time. But just on government capex, second half, what's the number or the pickup that you're expecting? Because the first half was contraction in government capex. Just leave us with the numbers that you've penciled in right now.
So the way I'm thinking about it is that, reaching 11.1 trillion rupees, which is the budget, may be difficult. So there might be a saving of $1 trillion or so from there. So our baseline view is that the government will probably get more capex this year than last year. So there'll be a year-on-year growth, but probably will fall short of the 3.4% of GDP or 11.1 trillion rupees, which they have budgeted in the FY25 budget.
All right, Auradeep, we continue to track all of this with you. It's a great conversation. Thank you for joining us and looking forward to the next one. We'll see if the RBI does sort of oblige with a cut, although that is not consensus, and of course what the government does as well. 85 points lower on the Nifty, 24,384 is where we're at. It's time for a quick break. It's the economy. Lata will be chatting with Arup Rakshit of HDFC Bank on what to expect from RBI MPC tomorrow and how a CRR cut or a repo cut will impact banks. Stay tuned.
की या निवडणुकीने एक गोष्ट आपल्यासमोर निश्चितपणे ठेवली आहे, ती म्हणजे एक है तो सेफ है आणि मोदी है तो मुमकिन है.
Welcome to It's the Economy. The monetary policy announcement is only 24 hours away, and for the first time, there is a range of expectations from the Reserve Bank after the shocking second quarter GDP growth number of 5.4%. Should the RBI give a rate cut and or a CRR cut, or should it desist because inflation is still above 6% as of the last available data, that is October? On the other hand, should the Reserve Bank worry about the weakening rupee and desist from too much easing too soon? Well, too many questions. And so we have one of the best experts with us to guide us as to what to expect. We have with us Arup Rakshit, Group Head Treasury at HDFC Bank. Arup, good morning and thank you very much. Well, first up, what do you expect tomorrow?
Good morning, Lata. So tomorrow, I don't think RBI, we don't expect a rate cut from RBI. There will be no repo cut. See, it's too early to use the GDP number to start on the rate cut. Yes, there are concerns which is coming up on the GDP growth numbers. So there will possibly be a discussion, but we still feel it's a little time away. Earliest is Feb, maybe even April, depending on how things pan out in the coming months. If you see, there has been the October and the November seems to be having, the early indications are that the GDP seems to have been rebounding a little more than what happened in the second quarter. So to start with, I would see a rate cut.
No, I take your point. Vahan data, especially for two-wheelers and even to some extent for SUVs, has come out very good, our auto analyst was telling us. But Arup, the fear also is that there was liquidity tightening, credit growth has fallen a bit. So is there a case for a CRR cut? Also because the Reserve Bank is selling dollars. That also means further tightening, maybe even in the coming months.
There is a case for some CRR cut. Now, whether this will happen in December, little unlikely. I still think it's a little away. Maybe February, or CRR cut can happen even in between. It doesn't have to wait till February. This is not a MPC decision. See, the thing is, the system liquidity has come down. If one was to look at the last December, the liquidity is December 2nd, the liquidity stood at 92,000 crore against a 2.12 lakh crore at the beginning of November. There's also a question of durable liquidity. Now, durable liquidity has come down from a 4.8 lakh crore in beginning of October to about 1.88 lakh crore in November.
Yes.
So there is a cause and a reason why the CRR cut can happen, because RBI will have to find a way to add durable liquidity. Yes, the selling of dollars has had some amount of sucking out of the liquidity has happened. So that's a larger possibility. Will it happen in December? Unlikely.
Okay, okay. The chances are that it has to go on supplying dollars. There is a possibility because January 20th is President Trump swearing in. It's possible that it is going to be an aggressive speech while taking over. It's possible that actions will be fired immediately because the president is coming with strength in the Senate and House as well. So is there not a case that, you have to be more careful, that there is danger on the currency? I mean, where do you see the rupee basically? 84.6, where does it go?
I still think 85.5 should be a toppish level. I mean, that's my view, which I've held. Maybe going into next year, it may go down to 86, up to 86 levels. Going next year, fiscal is what I meant. But I don't see a complete run away into a 87 or a 90 kind of ranges.
Okay. So 85.5.
85.5, still a rupee away.
Okay.
There is a pressure on the rupee, no doubt, but and because of that, I don't expect a rate cut to immediately come through.
Okay, fair point. Rate cut, no, but the Reserve Bank. I mean, there is a reasonable argument that there is both an attack on unsecured loans, as where the risk weights were pushed back to pre-COVID levels, and there was this verbal communication to banks also to get the credit deposit ratio in place. Do you think that the deposit war needs to be brought down? And actually, when do you see this cutthroat competition for deposits declining?
So if you see the latest number, the credit growth is about 11.1, and deposit growth was about 11.2. So that runaway credit growth of about a 16% and a credit growth, deposit growth of about 11% with a 5% gap has actually eased out.
Okay.
But going forward, you will possibly have a credit growth more towards a 12.5% and a deposit at around 11, or maybe a little 1% higher on both sides. So there will be a gap, but it will not be a runaway gap, what we have seen earlier. So which leads to the scenario of what will happen to the deposit side. I think the rates will moderate. See, if I were to look at a little medium term over the next 1 year, March 26, I think the repo rate should be more towards a 5.75, maybe even a 5.5 kind of a thing. So 3 to 4 cuts over the next 15 months. Now, if that was to happen, the rates, deposit rates will also start cooling down. But the problem today is the liquidity is not uniform in the banking industry. The liquidity resides with some of the nationalized banks, where the asset growth is not really at par with what is happening with possibly some of the private sector banks and a few public sector banks. So that anomaly will still force people to look at deposit rates, and there will be some amount of buying of deposits, but I think the rates itself will start cooling down.
This anomaly is old, for the Indian banking system. It has always been that, private sector banks are borrowers in the call market, public sector banks are the givers in the call market.
And if you see, the CD ratios are also in the same manner.
I agree. So when should I expect deposit rates to fall, you think?
So once the rates start coming down,
only after a repo cut? You think if the Reserve Bank were to supply some sustained liquidity, say 1 month repo, variable rate repo, or
or even a CRR cut.
Or CRR cut, you think that will push down deposits?
CRR cut will push down deposit rate. See, in this quarter, starting October, the CD rates came down.
Yes.
So your bulk deposit rates have come down by about a 5 to 10 basis.
Okay.
I can't say it has come down significantly, but the moment some amount of liquidity was injected into the system, the rates did come down. Come down, and it's maintaining it there. It's not going back to a 8+ kind of a thing on bulk deposits.
Okay, help us understand the impact of CRR on the banking system. Do you think that since, every subsequent deposit will mean, every subsequent loan will mean lower CRR, you don't have to keep 4.5, 4, say if there is a 0.5% cut. Do you think it subsequently, it continuously gets easier for banks? How does CRR impact?
it continuously gets easier. But to start with, if it's a 4%, if there's a 0.5% cut, that roughly adds about a lakh or 1,15,000 crore into the system, and that's a durable liquidity which comes into the system. And then obviously subsequently also it has only a 4% requirement for every deposit you take. The other factor is on the moment the CRR is actually cash balances with RBI at a zero rate. So that bottom line impact also comes to the banks.
Okay. So there is an improvement in margins, you mean?
Marginally, say, but at least there's some improvement.
You can also cut loan rates, because if you don't want to keep too much for yourself, you can also prop up loan growth.
Yeah, I think all this will lead to some amount of rate moderation. But see the entire, if you see the rate hike passing had not gone to the asset side fully.
Yeah.
While it came to the deposit side fully, it had not come to the asset side fully. So how much of that will immediately get passed on to the borrowers will have to be seen on what is the credit growth which is happening.
Okay. Okay. Tell us this. If there is a repo rate cut, how much does the banking system's margins get impacted? I mean, how much do they fall? If there is a CRR cut, how much do the margins increase for a typical bank?
This will be a difficult one because it will depend on each balance sheet.
Yeah, so give me a range then. That's also okay.
See, it will not be significant. See, the immediate repo rate cut. See, repo rate cut, you have a variable loans which are on repos. There can be some some banks have loans which are on other benchmarks also, maybe T-bills, which would have possibly got impacted already.
Yeah.
So immediate repo rate cut, and if it leads to a deposit lowering also, there will be a lag of possibly a quarter kind of a thing before the thing picks up.
Okay.
So to quantify the number will be a little difficult, but it will not be a significant kind of too large a number.
But would it be fair to say that the CRR cut will give you an immediate few, 4 or 5 basis points and will continue to give a margin impact?
I don't think it will be a 4 or 5 basis point because it will depend on the size of the actual quantum. As I said, about 1,15,000 will come in. Yeah. But yes, that will come into the system and that will give a likelihood of a better yield management from the bank's perspective. And yes, it will give a little better NIM.
Okay. Okay. Well, just a final question. Therefore, what happens tomorrow and when is your first rate cut?
More accommodative kind of language possibly. What happens tomorrow is, so no rate cut tomorrow, possibly no CRR cut either, and a more accommodative language. Possibly a reworking on the overall GDP number by RBI, rebalancing even the inflation number to a little, maybe a 10 basis higher than what they have been saying so far. And my first rate cut, earliest Feb, latest April, depending on how the geopolitical environment kicks in after 20th Jan.
Fair point. All right, to prepare us very well for the Friday policy, thank you very much, Arup Rakshit, for joining us. So what definitely will come is a working down of the GDP forecast, a working up of the inflation forecast, just to average out the latest numbers. But, well, Arup says no action. There is a clamour for a CRR cut. There is not much of support for a repo rate cut, at least not among bankers, bond dealers and economists. But there is always an ask and a hope. With that, we wind up on this edition of It's the Economy. After a break, Chartbusters.
और अभी नवनिर्वाचित विधिमंडल के नेता के नाम में देवेंद्र फडणवीस जी का मेरा बधाई और नमस्कार। इस चुनाव के दौरान महाराष्ट्र के 14 करोड़ जनता जनार्दन के डिसीजन पूरे भारत के लिए एक संदेश है। ये रेगुलर असेंबली इलेक्शन नहीं है। लोकसभा चुनाव के बाद महाराष्ट्र के इस चुनाव, इससे पहले हरियाणा का, इन दोनों से जनता के संदेश स्पष्ट है और महाराष्ट्र से ऐसे अनएक्सपेक्टेड, अनप्रेसिडेंटेड विक्ट्री is a big message towards Vikasit Bharat.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen. We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India in with us.
Celebrating 25 years of CNBC-TV18. For 20 years, it has been India's most coveted stage for business leadership.
You're watching us here on Chartbusters on CNBC TV18. For the frontline indices, we've seen a bit of a decline from the highs, still holding on, with 24,400 on the Nifty, 80,800 on the Sensex as well. So it's consolidation from yesterday's high. We've seen a cut of almost 150 odd points, but it is this range-bound consolidation which continues in the market ahead of the RBI policy outcome tomorrow. Importantly, a bunch of these broader market stocks are doing extremely well, and most notably among them are the ones which entered the F&O in very recent series itself. So we have something like a Zomato, which is up around 3.5 odd %. Angel One itself has moved to the high point of trade, giving it company on the way up is something like a CAMS, which has done well. And then you have BSE. BSE also has been the latest entrant to the NSE derivatives list starting December series itself. And that stock continues to surge, has doubled in this year itself, up around 7.5% as we speak. Good time to get in Sachidanand Tekar for a quick technical check on the market. Sachi, do you think this is, what is likely to continue with consolidation on the frontline indices and a lot of individual stocks making their own moves?
Good morning, Mangalam. Absolutely true. In fact, if you look at today's movement itself, Nifty did make an attempt towards 24,500. But the way it has been slipping lower, I think we may see it revisiting the support of its 5-day exponential moving average, which is placed somewhere close to around 24,340. Now, for the last 4 trading sessions, it has maintained its tail above the same. So even today, we are expecting that 24,380, 340 would be an ideal zone wherein some long positions can be committed. But on the higher side, we don't see it breaking above that 24,500 cluster, at least in today's session. So probably we may see this range-bound consolidation when it comes to indices. But if you see some of the stocks, especially from the Nifty IT space, they have been doing really well. The mid-cap stocks are trending higher, and we may see some good opportunities coming on the long side from this particular pocket itself.
Okay, all right. Hi, Sachi. Good morning and good to see you. And Nigel on this side. What about the individual stocks? You want to give us some ideas?
Good morning, Nigel. Nigel, as I said, Nifty IT has been consistently performing, and we are seeing a lot of good, mid-cap stocks which have showed a good amount of strength in the last 5 trading sessions. The one stock which we have recommended to our clients is Tata Elxsi. Now, if you look at the overall structure, the stock was trending lower. We have already seen a change in trend in this particular stock in the last 2 trading sessions. If you look at the overall development, it has started trending confidently above its 200-day exponential moving average after almost 2 months. There's a positive crossover on its 5 and 20 exponential moving averages, which is a good sign of continued directional momentum. And plus, its ADX on the daily scale has broken out above that 25 level. So I think it's a healthy trend which has been evolving. We expect this particular move to extend towards 75.20 and eventually towards 78.50. And that's why we are recommending building fresh long positions in Tata Elxsi futures, keeping a stop loss at 70.10. The other pocket of strength has been from the banking side, and the recovery in SBI has been phenomenal. We have already seen a V-shaped recovery here. The immediate hurdle at around 850 has been, breached confidently, and it has been holding itself above that 860 mark well. So keeping a stop loss at around 852, one can, deploy fresh long positions in SBI for a positional target of 900.
All right, Sachi, thanks a lot for joining in. And as you were speaking about stocks, the stock that really caught everyone's attention was Swiggy, continuously up, moving higher. This morning, in fact, it was an underperformer when it came to Zomato and Swiggy. Zomato was up around 4%, but now it seems like, that valuation gap once again catching up. So Swiggy is swiftly caught up. Zomato saw a big up move and now sitting with a gain of almost 4%. Pull up the intraday chart of Swiggy, you would see it opened slightly flattish. For a large part of the morning so far was flat. Once it saw Zomato move higher, Swiggy itself moved higher and moved a step further, up around 6.5% for Swiggy as compared to Zomato. So the case for this valuation gap narrowing is something that the street is playing for between these two. Will be very interesting to see where this goes, because Zomato, being in the FNO right now, has the ability of a lot more liquidity and a lot more trades happening out there in terms of the FNO space itself. But Swiggy, due to paucity of volumes in the cash market as well, is continuously moving higher. Over the next few days, we'll probably get some more lock-ins coming out on Swiggy. We'll keep an eye out on that one. But for now, it seems like Mary had a little lamb. Wherever Mary went, the lamb went too.
Well, that's why the liquidity factor at play, Mangalam. So, the next few days, as you said, a better price discovery, I think, is something that we could work with. Another stock that we're looking at is Infra. Just pull up the chart out there. We here at CNBC-TV18 have been telling you for the entire of 2024 that chrome ore is in shortage. And if chrome ore is in shortage, then you'll have ferrochrome prices that will get a bit of a tailwind. And on this show itself, we have interviewed the management numerous times who have been indicating that yes, there is a shortage on ferrochrome and they are backward integrated. So they have it captively. If you pull up a year-to-date chart as well, you'll see that the stock has done well. And the last 1 month or so, the stock has really surged up. It saw a bit of a time-wise correction between July to around November. And from, off late, we've seen a big jump up on that one.
All right, we'll keep an eye out on that, and at the bottom of your screen as well, the city gas company is in focus, where the government says they do not see a rollback of APM gas sourcing for their requirements. City gas companies should do intelligent sourcing for their requirements. So this means there's a bit of a negative coming in for city gas as well. Those who are hoping for some sort of reprieve coming in from the earlier APM gas allocation cuts for city gas companies, hoping for a bit of a rollback. That doesn't happen. That is, the word coming in from sources. What we'll do is take a short break, come back, get Sapna to talk a little more about that. But, from prima facie, this looks like it is negative news that continues for all the city gas distribution companies.
The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC TV18's 20th India Business Leader Awards.
Presented by Standard Chartered in association with Reliance Industries Limited.
Committed more than 400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. Two different manufacturers came back to us and said, look, we just cannot deliver to the time frame that we had committed. There's going to be a delay. In one case it was 6 months, in the other case it was a little longer. So the program that actually should have physically started on the aircraft already will now not start until next year. The 787 aircraft, the first of the retrofit ship sets, will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that 400 million that you spoke of, that was committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes. In one case, we've had to change seat vendors. This refresh I talk about, which is an interim step on the 777s, is something that we hadn't provisioned for originally and is only necessary because of the delay to the seat deliveries. But look, we've made this decision to invest more because we realise that this is, we can change everything else about the airline, and we nearly have changed everything else about the airline. But until we change the last 40 of our legacy wide-body aircraft to the standard that we expect of ourselves, let alone what customers expect of us, I think people will not consider the job complete, and we won't consider the job complete.
So how much more are you going to have to spend over and above the 400 million which have already been committed?
Well, I won't say, but it's in the tens of millions.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you'd need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of fully.
Welcome back. Well, we have the hotel stocks that are in focus. Multiple brokerage reports since morning. Mangalam, tell us, a few of them are buzzing. Juniper is one of them.
Juniper is one of them. Then you have Park Hotels as well, both of them in focus. Juniper, let's start with that. More than anything else, more than just the reports, etc., it is December. Typically, hotels do extremely well in December. We have 48 lakh weddings in 34 days itself. So CLSA says that, this is a place to be. Not the hotel, but the sector itself. They've initiated by a target of 430 odd rupees. They say that Juniper has the largest, keys of Hyatt hotels in India itself, and they've got a strong track record of building assets with high entry barriers as well. And why is this space to be? Because one hotel, over the next 5 years, demand is expected to compound at around 10.5%. Supply grows at just about 9%. So keeping the demand-supply metrics in favor for the industry itself, and in that, these companies will benefit from the current upcycle itself. CLSA expects 16% EBITDA CAGR for this company over the next couple of years. They will benefit from increased average room rates and occupancy at the Grand Hyatt Mumbai post the renovation that has happened. And in Delhi as well, the Andaz Hotel will keep its ARR high itself. Speaking about Park Hotels, Anand Rathi has said that, they have a buy rating. They've trimmed their target price, but the target price trimming is due to the first half, which was weak. In the second half itself, there is strength because, there is robust festival demand, there is more wedding dates. And for them, two things are working. At the higher end, they've opened a couple of palaces, one in Chettinad and the other in Patiala. Both of them very expensive. Over 30 to 80,000 rupees per night is the room rate, management had told us. And Flurys, which is the lower end, which is the cafe, etc., likely to show 40% growth over, FY25 over FY24 with 18% margins. In fact, the management is committed to double-digit growth in the upcoming quarters. They had said to us post their second quarter earnings itself, with these palace hotels, the ARRs will improve, and Flurys, which is the cafe, will have 120 outlets by the end of this year. And every year thereafter, they will open 40 to 50 outlets with 300 to 350 outlets from Flurys targeted over the next few years itself. With all of these things, the question is what happens to the valuations and what are the next triggers that you're looking at? I'm looking at ITC. Why? Because over the next few days, we'll probably get the record date come in for the hotel business demerger of ITC. So that's something we'll most definitely keep an eye out on. And valuations, of course, there is the Taj and there's the rest of them as well. So you have Indian hotels, which is close to around 37 times, chalet hotels around 25 times. Then you have majority of them trading anywhere between 14 to 18 times EV to EBITDA. And you have some like Park Hotels as well as Sami at the lower end of the spectrum trading at around 13 to 14 times. So important space to keep an eye out on from a seasonal perspective, structural perspective, and perhaps, the weekend perspective as well.
All right. Well, we'll slip into that short break. Come back. We'll continue to focus on news updates and a lot of stocks that are moving around.
$25 years milestone. It's a very big thing for individuals who are working with the organization, who have been associated with it. And as an organization to achieve this milestone, it's difficult to stay at the top, but if you can do it consistently for 25 years, it's a brilliant outcome.
When you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. That was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power, I'd refer you to an article that was literally just released by IATA, which traces the how airfares have tracked relative to the CPI and relative to oil prices, not just in India, but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down. And not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable. And of course, we want to fill our planes. So there's always going to be a benefit to the customer in that respect.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century.
Welcome back. We'll keep an eye out on a few stocks. Granules India, a couple of sessions ago, there was this negative news that came in there. And then the stock went into the F&O ban. And those are this big surge in terms of short positions. Just take a look at the stock. From the lows that it made a couple of sessions ago, that was 525 odd. Now it's at around 560. So the news did play out, and it appears now the shorts are stuck in the system. That's why that stock is seeing that surge up. So just keep an eye on that one. The other one we're looking at is the graphite electrode companies. We had told you earlier today that that export ban that's been put on some of the Chinese items, that's on graphite, not on graphite electrodes. So for the time being, Graphite India is reacting to that. It's down close to around 6%. HEG, there was a large trade that took place at around 600 rupees also. We're waiting to see who were the parties on that. But the stocks have come off. Even HEG has come off the high point of the day. So let's see how that goes. But for the time being, it seems the stocks had run ahead of itself. Well, on that note, we'll wrap up on this edition of Chartbusters. Stay with us. Trading Hour comes up next.
Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
हमारे असम में हमें गो हत्या को निश्चित करने के लिए कानून लाया थे। ये 3 साल हो गया, उससे हमें काफी सफलता मिला हूं। लेकिन अभी आगे जाके हम ये निर्णय किया हो कि असम में गोमांस कोई भी रेस्टोरेंट और होटल में सर्व नहीं होगा और साथ में कोई पब्लिक फंक्शन में भी या पब्लिक प्लेस में भी ये सर्व नहीं किया जाएगा। सो ये हमने कंप्लीटली होटल, रेस्टोरेंट और पब्लिक प्लेस में बीफ।
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonal Bhutra. The Nifty is now trading below the 24,500 mark. So there is some give back after 4 days of gains. Down close to about 100 points in the Nifty. Sensex down 300 points. The mid-cap index, again, off from the session highs, but so far in the green. And this would mark the 7th day that the mid-cap index has a positive uptick. So far this week, it's gained close to about 3% Sectorally, IT is holding forth. The Nifty IT index is up more than 0.5%. On the way down, you've got cuts in banks. The Nifty banking index is down. CPSE index is heading towards a 1% fall. But in the broader markets, these platform companies, new age tech companies, Swiggy, Zomato, Ola Electric, they continue to see a lot of action.
Oh yes, and that was the case that we saw yesterday and day before yesterday as well, right? Swiggy, after reporting its numbers and the conversation that we had with the management as well, Zomato on the back of that as well has been surging off late, and as Reema pointed out, Ola Electric doing. A lot of these actually the new listings, they continue to do well. Niva Bupa, for instance, is also one stock which is continuously going higher. You have the pharma space which is not doing so well, so 0.8% lower on that one. We have the energy space as well, along with the CPSE basket, which does not look so good today. But the small cap outperformance continues, so that's where we are seeing a gain of around 0.5%. So that will continue to be in focus and on our radar as well. But one sector that continues to be in focus is the city gas space. It is in focus. Government sources tell CNBC-TV18 that they do not see a rollback of APM gas allocation cut to CGDs. Sapna is joining in with more details on this one. Sapna, what are you picking up? Okay, all right. So we'll get back to Sapna in just a bit. The stocks have been holding well. Yesterday as well, IGL and MGL both were up anywhere between 4 to 5%. After that massive cut that we saw in stock prices as well, there is some comeback that we have seen. IGL is up around 1.6%. Mahanagar Gas is up around 1.2%. And those important flashes that are there for at the bottom of your screen, which are coming in from Sapna, that government will not roll back the APM gas cut allocation that we saw earlier. So we'll get Sapna in just a bit. But Divi's Labs is the other stock on our radar. It is under pressure after Novartis loses an appeal in a US court for a key hard drug for which Divi's is a key API supplier. What does it mean for the company? Vinny is joining us with more details.
So absolutely. So this was an important case that was going on for a while. Now Novartis has not managed to convince the US District Court about this. And Novartis is an innovator. It was up against MSN. So MSN won the case for this Entresto drug, which is a drug which is got a lot of generic players as well. So now this ruling in favor of MSN means that there are other generic players that could also come in the pipeline for launches as well. So for Divi's, because it is a supplier for Novartis for this drug, it does impact them in terms of overall their EBITDA as well as a bit in terms of the volumes of Divi's that could be impacted as well. Now previously we had some analysts that had highlighted in terms of this case as well. They said that this drug contributes around 12.5% for FY25 in terms of EBITDA for Divi's. So keep an eye out on that. And this generic entries of other players could lead to a 10% downside in terms of FY26 and FY27 EPS also. So a bit of a risk coming in for Divi's on that front, and that is why we're seeing the stock is falling in trade today.
Thank you very much for that. Let's talk about Bajaj Auto, because despite the clarification coming in from the management about the repricing of the base variant of the Freedom bike, the news which came yesterday that they are cutting the bike prices by about 5,000 to 10,000 rupees for the Freedom 125cc. The stock slumped yesterday and today down another 2%. So no respite there. Sudarshan is here with more details. Sudarshan, what did the management have to say?
So stock is under pressure despite company's clarification regarding the price cut. UBS had yesterday put out the note saying that company has taken price cut for select variants of Pulsar and Freedom 125 bike. Now company has clarified, speaking to CNBC-TV18, company says that it has 3 variants in Freedom 125 bike, and top-end variant that contributes almost 72% of total sales, and price when the company had launched this product, price was rupees 1.10 lakh, and still the price remains the same. So there is no change in the price of top-end variant, which forms 72% of total sales. Price change in the base variant, which has been reduced to 90,000 from rupees 95,000. Another variant is the mid-level variant. Company says that during the launch, the mid-level variant which was launched, now the mid-level variant, it's not the same. So it's the new mid-level variant that company has brought into the market, and for that the price is rupees 95,000. So it's not be taken that mid-level variant during the launch, for which company had put the price of almost rupees 1 lakh, the price has not been revised for the mid-level variant. So 2 variants, there is no change in the price. Only price change is for the base level variant. And regarding the total build units, company says since the start of the production, it has built 66,792 units of Freedom 125 till November of 30th. Now it has retailed almost 40,000 units in the same period, and it has stock of 27,000 units, which as per the norm is normal. So there is not a concern on this front as well.
Okay, all right, we get that point. Thank you so much for joining in with all those details, Sudarshan. Let's get back to Sapna now. She's here to tell us what sources are suggesting on city gas companies. Sapna.
Well, yeah, hi, morning. So basically, the indication is that any kind of rollback is unlikely. I do not think that there is any such proposal, officially, so to speak. The sense that we have been given is that, basically companies should be doing they should pull up their stocks and do some intelligent sourcing, in the sense, try to tap the long-term LNG contract market more. I think that's where we have been kind of lacking. Of course, the other option is sourcing the supplies from the new wells. The basic fact of the matter also is that, overall natural gas production has been coming down, particularly the APM gas from the old wells. Around 8 to 10% decline has been witnessed over the last couple of years, and probably this trend is unlikely to change, at least as of now. So keeping all of this in mind, companies should be looking at other options rather than just trying to depend on the APM supply. That's one aspect. Second, we have also been given to understand that probably for the last 2 odd years, the way the production has declined, not all of that had been shared, not all of that has been kind of passed on to the CEDs. So, 2 consecutive gas allocation cuts back to back this year that we have witnessed probably are also fallout of the fact that, the attacking has not been passed on. This is what has happened right now. This is the situation as of now.
Got it. Thank you so much, Sapna, for joining us with all those important details. The stocks, of course, are not reacting right now. But do remember, if they do have to look at other sources of gas sourcing, it would be more expensive. Currently, they get it at $6.50 per MMBTU if they are sourcing it from domestic gas allocation. But the other sources would be $2 to $3 higher. LNG prices in some cases go up to $11 to $12 per MMBTU. So we'll have to figure out how these companies would go ahead and change their sourcing and how that would impact their volumes and margins as well. We'll slip into a short break for now. Manisha joins us on the other side to discuss the price of Bitcoin. That has hit a record high, so we'll discuss that.
कंजम्पशन ऑफ बीफ, मांस को खाना हमने आज से बंद करने का निर्णय लिया। पहले हमारा ये निर्णय था कि मंदिर का 5 किलोमीटर तक, लेकिन ये अभी हम पूरा स्टेट में एक्सपांड कर दिया हूं कि कि कोई भी कम्युनिटी प्लेस में, पब्लिक प्लेस में, होटल में, रेस्टोरेंट में आप इसको खा नहीं पाएगा। तो ये हमारा जो हमने शुरू किया था 3 साल आगे, इसको आज हम थोड़ा और एक कदम आगे बढ़ा के लेके गए। আছে বহুত শাস্তি আছে তাতে, আপোনালোকে পঢ়ি ল'ব। এইটোতো অলৰেডি আছে, জেল পৰ্যন্ত।
Welcome back. It's absolutely extraordinary what's happening with Bitcoin. It's a new milestone, a new record high on Bitcoin crossing that $100,000 mark. Manisha is here with the details. Manisha.
Oh, well, absolutely. 100,000 was a level that, the markets have been anticipated for almost a month, and we finally have seen that come in. Interestingly, the volumes with the surge also have been quite on the stronger side. So we're looking at a record $2 trillion of a market cap for Bitcoin. And if you look at the Bitcoin prices, we've gained up by 144% in this year until now. Well, importantly, when you look at the overall market cap as well, that also is at a record 3.89 trillion right now. So we're making records across when it comes to cryptocurrencies there. Well, when you look at this year, it has been quite on the stronger side. The latest support clearly comes in from the fact that the US President-elect Trump has actually named a cryptocurrency advocate, Paul Atkins, as a SEC chair. This is after Gary Gensler has said that he would step down in the month of January there. So this is seen as quite positive because there are various rules and regulations and clauses, etc., which could come in on a friendly way in case of cryptocurrencies, and that is where the sentiment really seems to be coming in from. The other thing is the US-based spot ETFs. Remember, these were launched in the month of January in 2024, and in less than a year, we've seen $30 billion flying into this product. So even as you're looking at these markets, you have seen institutions buy, retail has been holding, there have been corporates and companies and mutual funds as well adding cryptocurrencies into their portfolios and for their clients as well, taking these prices on the higher side. The other thing clearly comes in from Russia, where the President Putin says that nobody has the power to ban cryptocurrencies. Actually, it was in the last week itself that Putin has signed a law classifying digital currencies as a form of property in foreign trade settlement. I mean, at this point in time, this is being done as a trial, but the way things really seem to be going with various countries now talking about pushing into digital currencies, actually taking it into as a forex reserve as well, you perhaps are looking at just about a start when it comes to run up in this space.
Okay, all right. So 144% surge in the year so far. Thank you, Manisha, for joining us. We'll see what happens by the end of the year. We are very close to that as well. But it's time for a short break. Amit Dixit from ICICI Securities joins us next to discuss the defense sector after Centre has approved 5 proposals worth nearly 22,000 crore rupees.
Well, I actually started interviewing with CNBC-TV18 way back, almost 2006 or 7 or something like that. And when I look at some of those pictures and images, my eyes start watering because there is so much more hair and so much more black hair. So that's my first memory. Unfortunately, it is what it is. The main thing is the passion with which you and your colleagues, go about it every day. It's to find news every minute, every hour is not easy, right? And that to maintain that passion, that excitement, that authenticity is the one remarkable feature that I would like to mention to you.
की या निवडणुकीने एक गोष्ट आपल्यासमोर निश्चितपणे ठेवली आहे, ती म्हणजे एक है तो सेफ है आणि मोदी है तो मुमकिन है.
अभी नवनिर्वाचित विधिमंडल के नेता के नाम में देवेंद्र फडणवीस जी का मेरा बधाई और नमस्कार. इस चुनाव के दौरान महाराष्ट्र के 14 करोड़ जनता जनार्दन के डिसीजन पूरे भारत के लिए एक संदेश है. ये रेगुलर असेंबली इलेक्शन नहीं है. लोकसभा चुनाव के बाद महाराष्ट्र के इस चुनाव, इससे पहले हरियाणा का, इन दोनों से जनता के संदेश स्पष्ट है और महाराष्ट्र से ऐसे अनएक्सपेक्टेड, अनप्रेसिडेंटेड विक्ट्री is a big message towards Vikasit Bharat.
successfully.
Welcome back. You're still tuned into Trading Hour. Well, DSC, the Defence Council, has approved 5 acquisition proposals worth 21,772 crores. To understand what the opportunity is and what it would mean for the listed space, we are now joined by Amit Dixit, analyst at ICICI Securities. Amit, good morning. Thank you so much for joining in. Well, as per the release, it's still an AON, right? The acceptance of necessity. Can you give us a sense of, after this AON, how long does it take for these orders to get converted into final orders? Then how long does it take for execution? Which are the companies which would be impacted by this?
Yeah, hi. Good morning, and thanks for having me on the show. So from AON to ordering, you can expect at least 2 years. There has been cases where after AON things are pending, but generally, I mean, by thumb rule, by DAP 20 policy, it should be around 2 years. So that is the time frame we are looking at. And looking at the companies that are going to be benefited very clearly, almost half of this proposal is directed towards the naval support fleet, I would say, the smaller vessels. So the smaller vessels are manufactured by GRSC, by Hindustan Shipyard, L&T, Goa Shipyard. So these are the shipyards that could get benefited. Some of them are listed, some of them are unlisted, of course. Now, the overall benefit for shipyards, in my view, could be a little bit lower because it is going to be a competitive bid. Now, another proposal that is there for the EW system, including jammer pods and radar system for Sukhoi. I think BEL and Astra Microwave in the listed space would be benefited. Of course, HAL directly gets the benefit of the overhaul of Sukhoi 30, and then there are various other overhauls of T-72, T-90 tanks, including BMPs, for which ordnance factory boards would be benefited. However, having said that, in all these cases, if you look at the overhauls, if you look at the other work, I think BEL is involved at all the places, and therefore BEL is likely to get the trickle-down benefit of all of these. Astra Microwave, particularly, I think from jammer pods of Sukhoi, it should get the benefit, and so as other radar players. From the engine part, what we see that some of the companies who have actually built in their own infrastructure for producing metal stroke components like PTC Industries might get benefited from this engine overall in a long run. Now, execution, once the order is given, typically takes 18 months, 12 to 18 months for mobilization. So we could see the first rupee of revenue from this actually 3.5 years from now.
Amit, is it possible to break up the proposals which are worth about 21,700 crore rupees? You said, so BEL will be able to participate in what, 15,000 worth of orders of this amount, 20,000 worth, and if you could give that for all the companies. So for instance, Garden Reach, they may not win it, but at least in terms of the opportunity, is it possible to break up the individual companies?
No, so actually the press release of Defence Council doesn't break it up. However, as per our estimates, as per the past precedent, we believe that the opportunities in the vessels, that is the shipping, the AONs, 2 of them, could be to the tune of 9,000 to 10,000 odd crores. And this is the opportunity for all the shipbuilders. It may be L1, L2, because considering the number of boats that are there, 31 and 120. So this definitely would be split. However, yeah, this is the opportunity size available. Now, within that, typically we have seen that the electrical equipment, radar, etc., in these smaller vessels could be to the tune of 20 to 25%. So that benefit would come to BEL, even from that 9 to 10,000 crores kitty. Now, talking about the radar and EW part, so I think the total quantum of that could be to the tune of roughly 3,000 to 4,000 odd crores, and it directly goes to BEL. From there, it can go to Astra Microwave, can get some part of it, Data Patterns can get some part of it, some other companies can get part of it. Similarly, for the overall packages, the overall quantum could be to the tune of around 3,000 odd crores, 2,500 to 3,000 odd crores. And largely Ordnance Factory Board will benefit. But again, out of that, 25% almost would be electrical system, fire control system. For that, BL could be the one that would be benefited. And then from the 6 numbers ALH, of course, that is to the tune of around 1,400 to 1,600 crores. That directly goes to HL. And again, within that, the electronic component, to the extent it is indigenized, those benefits come to BL directly. So as I said, BL seems to be the largest beneficiary in this kitty.
Got it. So, Amit, these are some of the beneficiaries that you spoke about, and of course, it'll take some time for it to get converted into final orders as well. But till then, how do you look at the defense stocks right now when it comes to valuations? They have corrected from the top. Do you think this could be a trigger, because this order is smaller than what we have seen earlier, right? But it has come in after a long time, 3 months almost. So what is the valuation picture looking like in the defense space?
Yeah, so one thing is very clear that this AON is one of the smaller ones that we have seen in the recent time. The last AON that came in September was quite humongous, 1.4 trillion to be honest. This one is like almost 217 billion. So it pales in comparison to that one. Having said that, there are AONs last year. If you look at FY23, FY24, we have got around 2.6 trillion to 3.6 trillion respectively of AONs last year. And these would be coming for ordering, as we go ahead. So execution should pick up. Now, having said that, we are in fact positive on the names that have more of exports in their kitty, because one of the government's directive is to promote exports, and there are companies like Solar Industries, for instance, who have got a very good export order book in their overall portfolio, and that is also of shorter duration. So the revenue recognition could be a lot faster in some of these companies. Now, having said that, among DPSUs, BEL remains our top pick, mainly because of the fact that a lot of the execution parts are kind of ironed out because of its presence across the platforms.
Okay, all right. Amit, thank you so much for joining in today with those details and the analysis of what it could mean for the entire defense space, and individually which companies could benefit from this AON. Let's slip into a break. When we come back, we'll discuss market technicals with Vishal Malkan and also discuss the top trading bets.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay, and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. are here at the CNBC-TV18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18. For 20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC TV18's 20th India Business Leader Awards.
Presented by Standard Chartered in association with Reliance Industries Limited.
Committed more than 400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. Two different manufacturers came back to us and said, look, we just cannot deliver to the time frame that we had committed. There's going to be a delay. In one case it was 6 months, in the other case it was a little longer. So the program that actually should have physically started on the aircraft already will now not start until next year. The 787 aircraft, the first of the retrofit ship sets, will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that 400 million that you spoke of, that was committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes. In one case we've had to change seats.
Welcome back. It's in the red now for all the indices. So the Nifty was anyway down about 100 odd points, now down 130 points. But the mid-cap index, which was marginally up in the green, has now dipped into the red. Vishal Malkan is now with us on the show. Vishal, morning, and thanks for joining in. Is this just routine profit booking? Because the last couple of days have been good for our markets. And what will the stock calls be?
Yes, I think this is kind of a profit booking after a good rally we have seen in the last couple of weeks, especially Nifty and Bank Nifty both. So I can look at further downside of Nifty around 24,300, 350 as another 150 points, and Bank Nifty around 52,800. So the stocks which I would like to buy on this dips, one of them would be Voltas, which is around 1660 right now. So I'll go with the stop of 1650 for targets of 1690 and 1720. And the second one would be PSU Bank, which is PNB. With the stop of 107, I will go with the target of 113. And 117.
Okay. All right, Vishal, thank you so much for joining in today with your technical bets and picks. With that, we'll slip into a short break. When we come back, we'll discuss market fundamentals with Sahil Kapoor from DSP Mutual Fund. Stay tuned for that.
This refresh I talk about, which is an interim step on the 777s, is something that we hadn't provisioned for originally and is only necessary because of the delay to the seat deliveries. But look, we've made this decision to invest more because we realize that this is, we can change everything else about the airline, and we nearly have changed everything else about the airline. But until we change the last 40 of our legacy wide-body aircraft to the standard that we expect of ourselves, let alone what customers expect of us, I think people will not consider the job complete, and we won't consider the job complete.
So how much more are you going to have to spend over and above the 400 million which have already been committed?
Well, I won't say, but it's in the tens of millions.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy when you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. That was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power, I'd refer you to an article that was literally just released by IATA, which traces how airfares have tracked relative to the CPI and relative to oil prices, not just in India but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down. And not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable, and of course we want to fill our planes. So there's always going to be a benefit to the customer in that respect.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
Welcome back. You're still tuned into Trading Hour. It's time to discuss some market fundamentals. Sahil Kapoor from DSP Mutual Fund is joining in now. And in their December report, there is an interesting section which talks about why India outperforms over the longer term. Sahil, good morning. Thank you so much for joining in. I just wanted to understand that because so far in last couple of trading sessions, we talk about this big retail inflow. And maybe that is what is keeping the markets afloat despite FII outflows. What, according to you, are some of the major reasons that you attribute to this long-term outperformance that we've seen?
I think flows and probably GDP growth are two of the most simplistic reasons that we attribute to India's outperformance. But institutional flows in totality have been very consistent. They haven't been up or down if you add up all institutions. But I think the broader reason why India has done well has got to do with the quality of businesses we have. So we looked at data across the world. And we looked at, let's say, United States, India, emerging markets, China, etc. When you look at, let's say, US, 39% of companies have delivered an ROE of 20% or more over the last 20 years. India stands at the second place with nearly 1/3 of all companies in India delivering a consistent ROE of 20% or more. Now, this is very rare when you look at the emerging market basket as a whole and you adjust for cost of capital, because most countries have a different cost of capital. India again stands at the second spot, just behind United States. If you remove, let's say, the top FANG companies of United States, India will actually get to spot number 1. So first is, even adjusted for cost of capital, Indian businesses have delivered very high shareholder value when you measure it by ROE. And when you look at, let's say, emerging market as a pack, it has actually detracted shareholder value. It has delivered negative value to shareholders. So this is one of the chief reasons why India has done well. Second, of course, is the consistency of how this has happened. So when you look at the NSE 500 universe, there are about 50 companies, 49 to be precise, which have grown their book value, which could be one reason, not the intrinsic value, every single year over the last 20 years. And there are, for example, there are only 2 or 3 banks globally which have reported a rise in book value every single year over the last 30 years, and 2 of them are Indian banks. So these are very, very rare numbers. They are not available across the world. And third, possibly one of the reasons, when you look at global leaders in the top 14 sectors we looked at, for example, banking, aerospace, oil and gas, etc. We looked at 14 sectors. In 10 of these 14 sectors, Indian business leaders have a higher return on equity versus the global leader. So, and second, if you look at the earnings per share growth over the last 20 years, 12 out of these 14 sectors, India is ahead in terms of earnings per share growth. So I think these are some of the very, very important nuances which are more bottom up, which allows investors to identify good companies and probably ride them over time. Other parameters, for example, a stable GDP growth, of course, that is one of the factors, but it is, I think, only an enabler. When you look at it from a longer term perspective, there are many countries which have, for example, China, done much better in terms of real GDP growth rate, but the businesses there have fared much worse. And there is another country, for example, Brazil, where GDP growth has been dismal at about 2.5%, but their dollar returns have been much higher than India. So I think all these narratives of flows or probably of growth can be easily falsifiable if you just look at a few data points. So at the core of outperformance, I think, stands the quality of Indian businesses.
So that positions us very well for long-term returns in equity markets. And historically, equity has always done better than debt. But there have always been cycles, even in this uptrend, where debt has done better than equity. So if just someone looks at it, there is a 1-year cycle, 2-year cycle. So for the next year, 2025, what's the outlook on equities per se? Just again, 1-year view on equity versus the other asset classes like debt, gold. And while continuing your SIP, should also one be looking at, these other asset classes which could, just in the near term, give you better returns?
No. So 1-year outlook most likely is going to be random. I have no clue what will happen in the next 1 year. But one thing is very clear: Indian markets are trading at a very, very expensive valuation in some pockets. There are pockets where there is probably attractiveness, but as a whole, we are in, let's say, in a rich zone in terms of valuation. And the same report talks about where we are in that whole bucket. So when you look at these numbers in totality, and let's say you look at a number called let's say Nifty's price to earnings ratio versus the peak EPS, which is the highest earnings that we achieved. Currently, we stand at a place which is close to the peak of, let's say, 2008 or 2017 December cycle. So our valuations are not very attractive on the whole, which means that probably the recent returns may not get replicated in the future, in the near future. And to your second point, should we continue our SIP? I think if we can continue our SIPs for, let's say, infinite period or perpetuity, there is no reason to listen to any of these views, including mine. You are accepting, longer term average returns, which probably should be better. As I said, quality of businesses is good. And most businesses, some of them, if they come into a portfolio, will deliver returns which are higher than bond markets, right? So for any SIP investors, the idea is to continue their SIP forever, irrespective of where the market is or where the valuations are.
Get that point. Sahil, then let's just talk about the different market cap universes, right? We've been speaking about how, and your report suggests that large cap stocks are the smallest share of market capitalization. Then how does one go about investing in, say, small caps versus large caps currently? You think large cap outperformance, which was expected to happen in 2024, is a theme that could work in 2025?
It could, of course. I think when you look at the numbers, and if you are a believer in mean reversion, then possibly there is a place and idea to put money in, let's say, large cap in terms of relative allocation. From a small and mid-cap perspective, I think we'll have to be extremely focused on quality because there are pockets within this small and mid-cap space which have become expensive. And historically, we've seen that there are long periods where they don't deliver returns. For example, a period like 2008 to and then 2016, there were hardly any returns in small and mid-cap stocks because you had a stellar rally before that. So usually, high recent returns are followed by low returns eventually. And currently, we have a mix of high recent returns and also high valuations. So I will probably adopt a staggered investing approach in small and mid caps. In the last question we asked about SIP, if you are a SIP investors, you should continue just doing that. But if you're putting a new absolute rupee into the market today and probably looking at equity as an asset class, then I will lean towards allocating more to large caps. This does not mean that large caps on an absolute basis are cheaper, right? They are also trading at, as I said earlier, at rich valuations. They are not cheap, but on a relative basis, I think they will hit the value zone much earlier than mid and small cap if a correction occurs. And as you said, currently, let's say the top 10 stocks compared to the total market capitalization have a share of only 20% in terms of overall market cap, which is, I think, an all-time low. If you go back to data 30, 40 years also, you will not find this data occurring anytime in the past. And there are many reasons why this has happened. One of the reasons is that small and mid caps have done extremely well. And second reason is there has been a huge amount of paper which have been raised, equity issuances, and the average listing, let's say price to earnings multiple for a large number of these issues is more than 70 times. So which has taken a huge market cap to this universe and made the top 10 or even the top 50 stocks much more cheaper on a relative basis. So I think that is the reason why you should look at large caps.
Thank you. Thank you, Sahil, for joining in and giving us all those data points. Great conversation. Get into a break. On the other side, we'll tell you the key expectations from the RBI monetary policy slated tomorrow.
I've been with you guys before CNBC was called CNBC. I think it was called Asian something. So I've been a fund manager since 90s. So yes, and I've seen it grow all along, and I've seen my visibility grow because I meet people everywhere and they say, "Oh, we see you on CNBC." So thank you for that.
CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
हमारे असम में हमें गो हत्या को निश्चित करने के लिए कानून लाया थे। ये 3 साल हो गया, उससे हमें काफी सफलता मिला हूं। लेकिन अभी आगे जाके हम ये निर्णय किया हूं कि असम में गोमांस कोई भी रेस्टोरेंट और होटल में सर्व नहीं होगा और साथ में कोई पब्लिक फंक्शन में भी या पब्लिक प्लेस में भी ये सर्व नहीं किया जाएगा।
Welcome back. Now, the big event is the RBI monetary policy tomorrow after the lower than expected GDP print. Ritu's here with the key expectations. Ritu.
Well, the sharp slowdown in growth has put RBI in a very uncomfortable position. There is growing chorus for a rate cut, including from government officials, at a time when high inflation, which has now breached RBI's tolerance threshold, continues to be a spot of bother. Now, our poll shows that 7 out of 10 economists do not expect the lower than expected GDP print to accelerate the rate cut cycle. They believe the primacy of inflation will prevail. Now, the MPC is expected to leave the repo rate unchanged for the 11th consecutive policy because of, lingering inflation concerns and also the volatility in global markets. And instead of going for a rate cut, the governor could address the growth concerns with a dovish commentary, laying the foundation for a potential rate cut in the next meeting. In fact, an overwhelming 90% respondents said they expect to see the first rate cut from the MPC in the February meeting. The total quantum of cuts in the entire cycle could range between 50 to 75 basis points. Now, while a rate cut is ruled out with inflation above 6%, there could be an explicit acknowledgement that growth needs support, and as a step towards eventual easing, the RBI may instead go for a cash reserve ratio cut. But here again, the economists are pretty divided on the possibility of this happening, with only 50% seeing the chance of a cut, which could ease some pressure on the banking system liquidity. Now, the GDP forecast is also likely to grab a lot of attention. 70% of our respondents predict that RBI could lower its FY25 growth forecast to 6.4 to 6.7%, while 20% foresee a revision all the way down to 6 to 6.3%. On inflation, half expect the MPC to revise the current year's projection upwards to 4.8 to 4.9% given the concerns around food inflation, while 40% expect a more modest increase. Now, apart from the policy decision, the RBI statement is also expected to focus on liquidity management, and our respondents expect that RBI will continue managing liquidity through both main and fine-tuning operations as necessary.
Okay, that will be the big event to track tomorrow, and you can tune into CNBC TV18 for the analysis. But for the markets, if we take a look, it's a cut of around 110 points on the Nifty. There was a sharp fall when we started the show. There was some recovery from those levels as well. But for now, it's a cut that we are looking at. The Bank Nifty is the one which is contributing to the cuts that we are seeing as well. And if we talk about sectoral movers...
I think we have the CAA, V. Anant Nageswaran speaking right now at the AstroCham Summit. Let's cut across.
cold storage, and food processing, etc., we can look at a sustained 5% growth in agriculture, which, given its share of GDP of between 15 to 20%, that contributes about 3/4 to 1% of GDP. So there is still much room to extract greater value addition from agriculture. It is not a sector of the past. It can still be a sector of the future because climate change is going to make food security an important priority for many nations. And given our size and landmass that we have, if we can boost agricultural productivity, that can actually be a bigger source of exports along with the services sector. So these are the points, and we have actually a special box item in Chapter 5 of the Economic Survey published in July, which identifies some of the key things that we need to do to be able to make agriculture actually a sector of the future rather than something belonging to the past.
Thank you so much. Come and have a seat. Thank you. Really, this was fantastic. Thank you so much.
Okay, that's the word coming in from the CEA. We're going to take your leave now on Trading Hour. Don't go anywhere because after this short break is Halftime Report.
हमने कंप्लीटली होटल, रेस्टोरेंट और पब्लिक प्लेस में बीफ को हमें कंजम्पशन ऑफ बीफ, मांस को खाना हमने आज से बंद करने का निर्णय लिया। पहले हमारा ये निर्णय था कि मंदिर का 5 किलोमीटर तक, लेकिन ये अभी हम पूरा स्टेट में एक्सपांड कर दिया हूं कि कोई भी कम्युनिटी प्लेस में, पब्लिक प्लेस में, होटल में, रेस्टोरेंट में आप इसको खा नहीं पाएगा। तो ये हमारा जो हमने शुरू किया था 3 साल आगे, इसको आज हम थोड़ा और एक कदम आगे बढ़ा के लेके गया। আছে বহুত শাস্তি আছে তাতে, আপোনালোকে পঢ়ি ল'ব। এইটোতো অলৰেডি আছে, জেল পৰ্যন্ত।
Stocks get off to a soft start ahead of expiry with an eye on RBI's monetary policy meeting outcome tomorrow. IT and telecom eke out gains while utilities and metals drag. The mid-caps outperform mildly.
Vodafone PLC sells its Indus Towers stake via block deals. The proceeds will be used to repay its own debt and to invest in Vodafone Idea, which will use that money to pay down the dues to Indus Towers. The move is a positive for the tower major.
Bharat Forge joins the QIP rush with an over 1600 crore offer at an indicative price of near 1300 rupees per share. Sources tell CNBC-TV18 the offer comes on the back of a record month for Class 8 truck orders in the US.
Hero Motor drives in its new range of mass segment scooters with prices starting under $1 lakh. The launch heats up competition in the segment for Bajaj Auto and for Ola Electric.
Bitcoin soars past $100,000 after Trump names cryptocurrency advocate Paul Atkins as SEC chair. With this, the total cryptocurrency market capitalization nears a heady $3.9 trillion.
It's noon on this weekly expiry day. You're watching Halftime Report here on CNBC TV18. I'm Moramas Vatakia. With me is Mangalam Malu. And slightly off the highs of the day is the Nifty, over 100 points down now is the index. Some recovery as well from the lows. But for now, the indices are firmly in the red, as is the Nifty Bank. The broader markets, though, are holding on to gains. The small cap index is an outperformer, trading with gains of around 0.5%. And it is the IT index that is holding on to some semblance of gains. What is not doing well in today's session is the Nifty Pharma index, which is down 1%. Courtesy of Divi's Laboratories, and of course it is the metals index. But some capital market linked names are doing very well in today's trading session, be it the likes of BSC, CDSL. All of them are trading with very healthy gains in today's trading session. BSC at last count was locked in a 10% circuit, now is up 11%, and CDSL as well is trading with gains of almost around 7 to 7.5% as we speak. So good going for some select broader market names. Mangalam, good afternoon.
Good afternoon. It's looking very good if you're looking at the broader market stocks itself. But, for the Nifty, no real worries. We have been talking about this broad range of 24,350 to 24,550. Yesterday, we tested the upper end of the range, and today we are testing the lower end of the range. We tested the lower end, and from there itself, we saw a bit of a recovery as well. And the fact that the mid-caps are outperforming tells you that maybe the street believes that, there is downside support for our market, even as there is some supply on the way up itself. You're talking about BSC, briefly mentioned BSC being locked in upper circuit, but remember now the BSC is in the FNO, so there are no circuits anymore. So, the stock goes up 10%, waits for a temporary freeze. Thereafter, it is an up move that we are seeing. And taking note from BSC itself, we have the other new FNO entrants as well, the likes of CDSL, CAMS, both of them spiking. And again, both of them are capital market plays. And when you talk about capital market plays, you can't take away your eyes off all the brokers. So pull up something like an Angel One again, a new FNO entrant. That stock is up around 4.5% odd. And Motilal Oswal as well. If you look at Motilal Oswal Financial Services, that stock too, looking at all these other capital market space, has seen a bit of a spike, but that has been a spike in the latter half of trade as against the first couple of hours itself. So we'll keep an eye out on all these stocks as we move along the day, and tomorrow's imponderable, of course, will be what happens at the RBI policy meet. But Bajaj Auto, that's the stock on our radar, as the company has issued a clarification over repricing the base variant of the Freedom bike. Sudarshan joins in to tell us more. The stock currently at the low point of trade. Sudarshan.
That's correct. So stock has been under pressure despite company's clarification regarding the prices of Freedom 125 bike. Remember, yesterday UBS had come out with a note saying that company has taken price cut for Freedom 125 bike, but now company has issued clarification saying that company has 3 variants of Freedom 125, and top end variant forms 72% of total sales, and company says that there is no price revision in the top end variant. Price when the company had launched this product in July 2024, the price was rupees 1.10 lakh, and now also the price remains the same. Coming to the mid-level variant, company has said mid-level variant that company had launched in July 2024 was different, and for that the price was rupees 1 lakh. Now the mid-level variant that company is selling it's different, and it's not be taken as that price is revised. There are changes in that segment, and price for that is rupees 95,000. So here also there is no revision in the price. The price revision has taken place in the base variant, for which during the launch price was rupees 95,000. Now price has been cut by rupees 5,000 to rupees 90,000, and company has attributed this saying that it's to reach the larger audience. Now coming to the billing part, during the since the launch, company has built 66,792 units of Freedom 125 bikes till November 30th. And out of those, 40,000 units have been built. So in the stock, they have 27,000 units, and company says it's the normal norm. It should not be a concern. So price revision in only one segment, and on the billing part, it's not a concern. But despite the clarification, stock is sharply lower and it's under pressure. It's down currently 3%.
Thanks a lot for that, Sudarshan. You know, how quickly do fortunes change, right? Bajaj Auto, along with the Nifty, on the 27th of September, had made a record high of 12,774. It's down 31% from those levels in just less than 2 months.
But, you know, you speak about quickly fortunes changing. When we started the show, the Nifty was in the red. Now it's above that 24,500 mark itself. So it's a big, big recovery that we've seen from the lows itself. We're talking about metals actually, dragging the Nifty lower. Just look at all the metal stocks. So Reliance at the bottom of your screen, a ticker team telling us when Reliance moves higher, it is a big support coming in for the Nifty itself. But that stock has done well. Look at, these metal names. You have Hindalco, which has moved higher. Tata Steel has moved higher. All these stocks are seeing massive recoveries from the lows, and that's reflected in the market itself. 24,500 for the index as we speak. We were talking about range-bound moves. We tested the upper end of the range yesterday, tested the lower end of the range today, and now we're back around that 24,500 mark. Seems like a bit of a fulcrum around that 24,500 mark as well. With the Nifty checking in and checking out of the upper and the lower end of the range, it sets us up perfectly for the next set of stocks that we're talking about. And you guessed it, it is the hotel stock that we are talking about. And that's because, there are a bunch of brokerages which have written on it. And typically, towards December, we see these travel and tourism themes play out. We heard Manisha speak about 48 lakh weddings over the next 34 days, equating to 1.6 weddings per second in this season itself. So all these stocks are on our radar. Park Hotels is slightly lower, Juniper Hotels slightly higher. We have CLSA writing on Juniper Hotels. They've said that, the buy rating is what they've initiated their coverage on the stock with, and a target price of 430. It's the largest owner of Hyatt Hotels in India, which has a strong track record of building assets with high entry barriers in a sector. And this sector has strong tailwinds. Over the next 5 years, demand growth for the sector is likely to come in at around 10.4%. This compares with the supply growth at just around 9% itself. So this demand-supply mismatch will keep players like, Juniper Hotels and a lot of these organized players well bid itself. CLSA expects their EBITDA to, grow by about 16% on a compounded basis over the next couple of years. Increased ARR, annual average room rate, and occupancy at the Grand Hyatt Mumbai post its renovation will keep the stock afloat. Apart from that, we have strong ARR in the Andaz Hotel in Delhi as well, which does well. Park Hotels slightly lower in today's trading session because despite a buy rating, Anand Rathi has gone ahead and cut their target price from 285 to 238. But that is reflecting only the weakness that we saw in the first half of this year. The second half, we have robust festival demand, more wedding dates, opening of palace properties in Chettinad and Patiala, and Floories, which is their cafe business, likely to grow at 40% this year itself. And if you remember, here on halftime report itself, post their second quarter earnings, the management did speak about those palace hotels having 30 to 80,000 rupees per night in terms of room rates. They are committed to double-digit growth in the upcoming quarters. And for products which Hormaz and I can easily afford, which is Floories Cafe, they will open about 40 to 50 over the next few years, reaching about 300 to 350 itself. In light of all of this, the stock that we'll be looking at, apart from, all these hotel stocks, would be ITC, because anytime now we will get the record date for the hotel business demerger, and once that happens, Street will start ascribing the valuation to the hotel business as well, which they already do, but the separately listed arm. And while you're talking about that, don't lose sight of the valuations as well. There's Taj and there are the others. Taj trading at around 37 times for Indian hotels, FY26 EV to EBITDA, everyone else between mid-teens, some of them at lower levels like Park and Sami itself. So we'll keep an eye out on that, but time to check into a break.
It's time to check into a break, but don't lose sight of the Nifty as well, because it's now heading towards 24,550 within a few minutes. Is a very sharp recovery on the index that we have just witnessed. We'll keep an eye out on this as the show goes by. Well, time for a short break. On the other side, the management of Wonderla Holidays joins us to talk about their QIP and the road ahead. Stay tuned.
की या निवडणुकीने एक गोष्ट आपल्यासमोर निश्चितपणे ठेवली आहे, ती म्हणजे एक है तो सेफ है आणि मोदी है तो मुमकिन है.
अभी नवनिर्वाचित विधिमंडल के नेता के नाम में देवेंद्र फडणवीस जी का मेरा बधाई और नमस्कार. इस चुनाव के दौरान महाराष्ट्र के 14 करोड़ जनता जनार्दन के डिसीजन पूरे भारत के लिए एक संदेश है. ये रेगुलर असेंबली इलेक्शन नहीं है. लोकसभा चुनाव के बाद महाराष्ट्र के इस चुनाव, इससे पहले हरियाणा का, इन दोनों से जनता के संदेश स्पष्ट है और महाराष्ट्र से ऐसे अनएक्सपेक्टेड अनप्रेसिडेंटेड विक्ट्री is a big message towards Vikasit Bharat.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports.
24,600 on the Nifty. That's the kind of moves that we're seeing on our markets right now. 150 points from today's low, over 300 points on the frontline index. When we started seeing recovery, it was led by Reliance, it was led by the metal stocks, and now IT stocks seem to have joined the party. So one of the biggest contributors to the index on the upside is the IT pack. So Infosys and TCS accounting for nearly 30-40 points of gains coming by itself. So look at the IT index, and now we are also seeing some traction in the FMCG names. So we have HUL, which is among the top weights on the index, ITC, which is spiking. We have Adani Group stocks also, which are doing well. So basically, yesterday around the same time when we saw that basket selling on the Nifty, it was all the stocks that sold off, and as a result of which the market tested the lower end of the range, and right now all those stocks are recovering. So every stock which actually sold off is now recovering, and the stocks which were flat earlier as well are now the ones which are leading recovery. So it's all in sundry. It is a basket up move that we're seeing, and with this up move that we're seeing on the frontline indices, we have the mid-cap index, which at the start of the show, by virtue of not falling as much, was outperforming. By virtue of not gaining as much, is now underperforming. So the mid-cap index is up 1/3%, whereas the big caps are up nearly 2/3% itself. In that, we have one stock which is on our radar, which is Wonderla Holidays. Arun K. Chitalapilli, the managing director, joins in now. It's the fundraise season where, you know, we have around 4 or 5 QIPs lined up today as well. These guys went ahead and raised about 800 crores, completed the QIP as well. Arun, thank you so much for joining in, and congratulations on managing to raise 800 crores. I mean, it's that sort of market right now. The question actually is, one, who are the allottees? What was the price? And what happens to your promoter stake? Because 800 crores is nearly 20% of your market cap, so that's a fair amount of dilution.
Mangalam, always a pleasure talking to you. Thanks for the kind words. Yes, the final side of the issue has not been finalized yet. It will be between 500 and 600 crores, so not 800 crores. We are expecting less than 10% dilution. We have some of the top, mutual funds and some of the top domestic investors in the list. Also, we have some foreign companies based out of Singapore mostly who are also there. So the issue is not closed today, so I'm not allowed to talk about who's invested yet. But as of now, it's fully subscribed, and we are just making final adjustments in terms of who gets what and stuff like, and the price also. It's being negotiated. But safe to say that the issue has been successful, and we are very happy with the outcome.
Arun, good afternoon. Thank you for joining in. So would we expect the issue to close tonight and more details to emerge of it? Could you share a timeline for that? And the part 2 of my question is, what would you use these funds for?
Yes, I think today the issue will be closed and the final price will be decided, I think, before tomorrow. And I think by tomorrow, I think we'll have a clear idea in terms of who, the final pricing and the exact amount, etc. This money that we have raised will be used for our future projects, mostly Chennai, because we still have capex going into Chennai. Some of it will be used for our existing projects where we are doing some substantial capex as well. And some of it will be used for future projects and general corporate purposes.
Right. You said that you won't dilute more than 10% equity. Final size could be between 500 to 600 crore. Price, while it is not finalized, and you cannot talk about that, at an exact level, what we know is that the floor price was close to 829 rupees. How much higher above the floor price would the issue price be, according to you, basis the range that you've got so far?
I think we'll be giving some form of a discount. We had, promised some of them discounts, so I think we will be giving some discount. But the exact amount again depends on the, depends on the final demand and what is the final outcome of this. That's still being worked out by the banks. But I think there will be some discount that we'll be giving.
Discount to the current price or discount to the floor price?
Discount to the floor price. Floor price.
Okay, and promoters not participating in this at all. What does that do to your stake? Because you have around 70% stake in the company. With assuming a 10% dilution, it goes down to about 62, 63%. Is that correct?
Something like that, yes. That's what we are looking at, yes.
Right.
But if you're planning to invest these funds, what is the kind of IRRs that you're expecting from these investments and over what period of time? And if I can put in a business question as well, how have demand trends looked in the third quarter? The last time you spoke to us, you mentioned that you're expecting a flat to mild decline in overall footfalls for the year. Do you maintain that, or do you see that trend reversing as the year goes by?
First part of the question, we are obviously going to invest more into new projects, amusement parks, and resorts that we are already doing. So we can expect similar kind of numbers in terms of returns. In terms of footfalls, we are actually doing better currently as of now in this quarter. And we hope the trend will continue. But then, of course, there is also cyclone effect and all that. So hard to say how it's going to pan out. But we are hoping that this Christmas season and the New Year season should also be good for us. As of now, it's looking very good.
Could you tell us on a year-on-year basis, October and November, how have they fared versus last year, October and November? You have the data for that.
October, we have done marginally better than last year. And November also, I think we have clocked better than last year because we had higher demand from institutional sales. But then December we've just started, and we don't know how it's going to plan out. But as of now, we are doing better than last year. We hope that trend continues.
How much better, Arun?
Arun, if you could hear us, how much better are you doing? Since you said you're doing better than what you were previously since last year, how much better? If you could quantify that for us.
I think our footfalls are up by roughly about 2% as of now. Just for October and November.
All right, footfalls for October and November up by about 2%. And, the Chennai park, it was supposed to come by in 2025 itself. Has there been any change to the timeline? What are you expecting in terms of first-year footfalls and year 2, year 3 footfalls for the Chennai park?
Chennai park, we were supposed to open in the later half of FY26. So, and that will happen. Most likely in December or January of December 2025 or Jan 2026 is when we are planning to open this park. And footfalls, we are expecting at a steady state, we should cross 1.2 million footfalls. But in the initial years, we will expect maybe to start off with like 0.7 to 0.8 million footfalls.
All right, Arun, thank you so much for sparing time joining in. Wish you good luck for the rest of the year and await more details on the QIP as it closes later this evening. The management there of Wonderla Holidays on the final size of the QIP between 500 to 600 crore and estimating a dilution of up to 10% of the total equity. But what has been wonderful, though, has been the recovery in the market. The Nifty at one point touched 24,650 almost, is now hovering around that 24,600 level, but still a significant recovery from the lows of the day.
Seems like the bulls are telling the market Wonderla. Sorry the bad joke, Hormaz, but you have to do this. The market kind of move we've seen. Take a short break, come back, we get you an exclusive conversation we had with Sushant Das, who's the CEO of Tata Starbucks.
And as a cricketer, I would say 25 is a good place to be in to work towards the 100. Keep going on CNBC. 75 more to go for 100 and then many more.
We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18. For 20 years, it has been India's most coveted stage for business leadership. the benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC TV18's 20th India Business Leader Awards.
Presented by Standard Chartered in association with Reliance Industries Limited.
Committed more than 400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. Two different manufacturers came back to us and said, look, we just cannot deliver to the time frame that we had committed. There's going to be a delay. In one case it was 6 months, in the other case it was a little longer. So the program that actually should have physically started on the aircraft already will now not start until next year. The 787 aircraft, the first of the retrofit ship sets, will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that 400 million that you spoke of, that was committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes. In one case we've had to change seat vendors. This refresh I talk about, which is an interim step on the 777s, is something that we hadn't provisioned for originally and is only necessary because of the delay to the seat deliveries. But look, we've made this decision to invest more because we realise that this is, we can change everything else about the airline, and we nearly have changed everything else about the airline. But until we change the last 40 of our legacy wide-body aircraft to the standard that we expect of ourselves, let alone what customers expect of us, I think people will not consider the job complete, and we won't consider the job complete.
So how much more are you going to have to spend over and above the 400 million which have already been committed?
Well,
Fully.
Welcome back to Halftime Report, and since we are in a ekdam se waqt badal diya, jazbaat badal diye, mood for the markets, it's time to brew on some coffee because Tata Starbucks is commenting on how the company is banking on innovation to bring in more consumers. The coffee chain is also targeting 1,000 stores in the country by FY28. Shilpa Ranipeta had a conversation with the management. Listen.
For us, it is about, if we want new consumers to come in, we need to grow the category, right? Because that is how we'll get new consumers to come to the stores, and mainly as we expand into newer markets and newer areas. So I think our strategy has been to innovate on various fronts. I think the first area that we have innovated is in terms of the store format. And if you look at the store format, we have the Reserve store right at the top, which gives the unique experience, the coffee forward story. We now have launched what we call the experiential stores, which is in Dhanraj Mahal and in Punjabi Bagh in Delhi. We have opened our first store in Manali, which is in a hill station, which is also a greener store. So that is one part of the innovation, to get new consumers, to grow the category. The second part of that is in terms of innovations that we have done in food. We realized that one of the occasions where we could play a more critical role is during the brunch hours. So we have a whole lot of sourdough sandwiches. We have the classic sandwiches. And finally, I think innovation on the beverage front. I talked about the Indian flavors. We also launched the refresher for the Gen Z, which is a non-dairy, lighter drink, colorful, which is what they prefer. We have been trying to grow the cold brew category. You know, the fact that we are growing shows that we are confident that many of these are working.
How do you this then see translating maybe over the next quarter or so into better footfalls, into better same-store sales? You know, on the business end, how is that going to benefit?
That's why you do all of this. At the end of the day, your hope is that we'll continue.
Any indication that, you know, how much of a growth would you expect for the next
You know, if
quarter?
I had my way, I always hope every quarter will be better than the previous quarter, and I'll keep growing at a very aggressive rate. And that's the hope from all of these also. We remain committed to a larger medium-term target in terms of stores, in terms of business prospects.
This medium-term target is what?
1,000 stores. We have said that. I've said that to you also earlier. So yeah, that's the first target that we are looking at, and I think we are on our way to do that.
Right.
We have, if I remember my numbers right, we are at around 460 stores right now in around 75 cities across the country. I can assure you that you will see more innovation.
Okay.
Right through in terms of food, beverage, store format. We'll continue to do that. I think that's the only way to grow and be relevant.
It will be very interesting to see how Starbucks grows in India, globally facing a bit of a growth issue in India. However, these companies are doing well. Take a short break, come back on the other side. We'll tell you the F&O setup.
Tens of millions.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But you know, what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy when you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. That was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power, I'd refer you to an article that was literally just released by IATA, which traces the how airfares have tracked relative to the CPI and relative to oil prices, not just in India, but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down. And not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable, and of course we want to fill our planes. So you know, there's always going to be a benefit to the customer in that respect.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is fully.
With the stellar recovery that we've seen in the markets, it's very important to know it is also weekly options expiry where the options are placed, etc. And what happens in the second half will be extremely crucial. So the street was playing for a range. Now we're at the upper end of the range, 24,600 for the Nifty. The Nifty Bank actually doing well and the mid-cap index underperforming now versus an earlier outperformance. A couple of packs or sectors are doing extremely well. So you have more stocks advancing than the number of stocks which are declining. Up until now, we had more stocks which were declining. And thereafter, with the recovery in the market, the red line has actually gone below the green line itself. The themes which are doing well in the market, we have, the outdoor food delivery and quick commerce themes which are doing extremely well. So Zomato did well, because of which Swiggy did well. And at one point, Swiggy was up 10%. So Zomato continued to move higher as well. So that up move in both these stocks continues. We have a bunch of these capital market plays as well, which we've been pointing out through the day. A BSE up 9%. We have a bunch of other movers like Angel One and CDSL, all of them doing well too. Angel One, CDSL, BSE and Zomato, all of them entered the F&O space in December series itself. So that's something we need to keep an eye out on as well. For expiry today, the street was hoping for some support coming by at the 24,200 mark, 24,350, 24,200. And that's the action that we saw, the 24,350 put. But now look at the 24,500 call. All those who were hoping for the market to sustain above that 24,500 mark have been caught on the wrong side, and now they're running for cover, and that explains the sort of up move that we've seen in the market itself. And as the Nifty has crossed the 24,600 mark, writers at the 24,500 put have come back, and they are telling now the market may see some support at higher levels itself, around 24,400 itself. So 24,400 to 24,450 is where we could see support in today's trading session. The 24,350 put writers have been, there, and they are making the money because of the big up move that we've seen in the market itself, hoping for some support at lower levels. So the range has moved higher, and now we have to watch out for whether the market sustains here or not, because the 24,500 call writers have been caught on the wrong side. They may lead to a bit of a short squeeze.
Caught on the wrong side. When Mangla, we mentioned the capital market link names, those are definitely the stars of today's trading session, and more details on these names will be available on our website, CNBC-TV18.com, so do give that a read as well. Time for a short break. On the other side, what happens next with the Nifty? Aditya Agarwala will answer just that. Stay tuned.
Reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that make CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
हमारे असम में हमें गो हत्या को निश्चित करने के लिए कानून लाया थे। ये 3 साल हो गया, उससे हमें काफी सफलता हम मिला हूं। लेकिन अभी आगे जाके हम ये निर्णय किया हूं कि असम में गोमांस कोई भी रेस्टोरेंट और होटल में सर्व नहीं होगा और साथ में कोई पब्लिक फंक्शन में भी या पब्लिक प्लेस में भी ये सर्व नहीं किया जाएगा। सो ये हमने कंप्लीटली होटल, रेस्टोरेंट और पब्लिक प्लेस में बीफ को हमें कंजम्पशन ऑफ बीफ, मांस को खाना हमने आज से बंद करने का निर्णय लिया। पहले हमारा ये निर्णय था कि मंदिर का 5 किलोमीटर तक, लेकिन ये अभी हम पूरा स्टेट में
Welcome back. Above 24,600 is the Nifty. And what happens next? Aditya Agarwala of Invest for Edu is joining us now on the show. Aditya, good afternoon. Thank you for joining in. You know, we are in a market where you go for a short break and you come back and the screen has completely flipped from red to green. You expect more short covering on the index, and couple that up with your stock recommendations for the afternoon as well.
Hi, everyone. Thanks for the show. Good afternoon to you and Mangalam. It was actually a surprise move, as you mentioned. Markets were down about 140, 150 points, and from there suddenly it flipped, and then it's up 140 points right now as we speak. So this shows that there is strength in the market, and the short covering rally that we were expecting after that range breakout is actually following through, and it just tested that range in the correction that we witnessed in the morning, and from there it has bounced back sharply. So 24,400 continues to act as a major support area for the Nifty, and I do believe from here on it will pile on to its gains, and 24,800 is something on the Nifty that I feel that can be tested maybe in trade today or tomorrow. Or it could also be that a lot of people are factoring in a rate cut which is scheduled tomorrow, which is why we're seeing this kind of a short covering rally, especially led by banking stocks as well. So both the Nifty and the Bank Nifty, I believe, have further legs on the upside. On the Bank Nifty, I think 53,700 to about 54,000 is something that I feel can be easily tested on the Bank Nifty, and it's beautifully led by the PSU banks, which were underperforming big time, are seeing a bit short covering rally and long build up as well. So names like SBI, Canara Bank, PNB, all these banks are chipping in with their up moves, and now it's been participated by the likes of HDFC and Axis as well. So overall, I think it's a banking pack which is leading the rally, and that is likely to continue in trade today and tomorrow. Going at a Nifty, as I mentioned, 24,800 is something that we can easily see on the graph in a couple of days. Talking of stock-specific ideas, I've got a couple of buy recommendation. Since the banking stocks are up and away, SBI is something which is looking very interesting to me on the chart setup, has broken out from a downward sloping channel. At current levels, I would be a buyer in SBI for a target of 900 on the upside, with a stop loss at 840 on the downside. The second stock is from the IT space. Large cap IT names are looking attractive to me, Ormaz. So TCS is something which is looking interesting at current levels. I will be a buyer in the stock for a target of 4,600 on the upside, with a stop loss somewhere around 4,300 on the downside.
All right, SBI and TCS are two large cap names that he's bullish on. Aditya, thank you so much for joining in. It will be very interesting to see if the Nifty does cross past those 24,600 and 24,700 marks, because we have both the 50 and the 100-day moving averages placed out there itself. Were they to do that, then it goes all the way up to 24,800, as Aditya did point out as well. Though we need to keep in mind there has been some moderation from the highs on the mid-cap index in particular, which is just about holding into the green with 0.2 in terms of percentage gains, as against 0.35, 0.36 what we saw at the high point of trade. Take a short break, come back on the other side we get chatting all things crypto. Manisha Gupta joins in with Sumit Gupta, CEO of CoinDCX, on occasion of the Bitcoin hitting $100,000.
I'm sure 25 years doesn't come by easy. It's a lot of hard work and dedication that has gone in it. All I can say from the Embassy Group, for us, it's a trusted name, and just keep up the good work because, being reporting in India is not so easy, and staying on track is not easy. It's a country with so many influential people. I think you're doing a great job. Just stay as you are.
कि कोई भी कम्युनिटी प्लेस में, पब्लिक प्लेस में, होटल में, रेस्टोरेंट में आप इसको खा नहीं पाएगा। तो ये हमारा जो हमने शुरू किया था 3 साल आगे, इसको आज हम थोड़ा और एक कदम आगे बढ़ा के लेके गए। আছে বহুত শাস্তি আছে তাতে, আপোনালোকে পঢ়ি ল'ব। এইটোতো অলৰেডি আছে, জেল পৰ্যন্ত।
की या निवडणुकीने
Welcome back, and joining us on the show now is Sumit Gupta. He is CEO CoinDCX. Sumit, hi. If in 2014, when the Bitcoin was at $100, if somebody told me it would be $1 lakh in 2024, I would have rubbished that. But here we are, and here we stand.
Yeah, absolutely, Manisha. I mean, it's a long journey, and that too in just like 10 years.
What's your sense? While we have seen the international markets really play this up, we've seen statements coming from various sectors. How are you looking at India? I mean, big population, big growth. How have you seen crypto evolve within the Indian markets? I mean, I'm assuming the kind of volumes we saw in 2021, we are far away from that.
Yeah. I mean, like in terms of excitement, like I am very excited about today's historic milestone, and deep in my heart, I knew that someday it will happen. Bitcoin is going to touch 100K. In fact, we've had conversations before where a lot of people were expecting it to happen by end of this year. See, Manisha, opinions can be biased, but free markets are the ultimate truth, right? And today, the free market has decided that and told people that Bitcoin has value, and Indians can see that. They understand it, and they understand this global trend as well. We see a lot of excitement among our customers as well. Yeah, I mean, like, I think in terms of the overall sentiment, people want to do it, people want to buy it, just that there has been a lot of like confusion or not enough clarity in India. And I think that's a bit unfortunate, because then Indians will have to overpay for something that was known to them, accessible to them, available to them, but they'll have to end up paying more for the same Bitcoin.
You know, I was also reading into the Powell testimony that was on Wednesday, where he says that he doesn't see Bitcoin as a threat to the US dollar, but sees it as a competition to gold. What's your sense on that?
Yeah, so see, Bitcoin is now the 7th largest asset in the world by market cap. From nothing in 2009 when it started, it was nothing, right? But now, in just a matter of like 16 years, it has come this far, 7th largest asset. Google has been a company which started like 26 years back. Now it's a more than $2 trillion company. I think it happens, right? When a new technology, large technology is there, of course, you know, it grows in value. And you know, one interesting thing is that if Bitcoin rises by another 15%, it is going to be the 5th largest asset in the world, surpassing both Google and Amazon. I think, yeah, I mean, like in terms of fiat currencies as well, I do see that it is very complementary to strengthen the national fiat. I think that's the that's what I believe Trump wants to do, like strengthen the US dollars by backing it with Bitcoin, something that was you know, which was backed by gold in 1970s by Bretton Woods Agreement, and then it got discarded, and then now, you know, the fiat currencies are maybe hopefully again going to be backed by, or at least in some capacity, be powered by Bitcoin. At least in the US, I would see especially a lot more when Bitcoin will be a strategic reserve asset. If that happens, if at all that happens, I'll not be surprised if 100K is a you know, 100K. We will see Bitcoin, you know, reaching to much higher levels, you know, sometime next year.
You know, the kind of statements that we have seen coming in from US clearly have been quite supportive. And of course, Paul Atkins was one reason that we saw that number of 100K come in a jiffy there. But how would you look at 2024 gone by, from ETFs to the kind of statements that we saw, the institutional buying, etc.? What are the top 5 things that you would say worked in favor of Bitcoin or cryptos this year?
Yeah, I mean, like 2024 was very exciting. Of course, if you sort of zoom out and see 2022 and 2023 were equally tough for the entire sector, more so in India when the taxation came up. You know, Indians have sort of stopped talking about it, but I mean, we were building in the background. And the interesting thing is that all the work that happened in 2024 is now showing in the prices. In terms of large trends, we have seen ETFs coming in, which was a big deal. US elections, of course, cannot be discounted. It's one of the greatest movement for Bitcoin, you know, rally as well. There was Operation Choke Point 2. You know, that you might have heard of, which was sort of regulation by enforcement was happening in the US, but with Paul Atkins coming in, who is a very pro crypto SEC, you know, chairman. I think we'll see all of that easing out. We have also seen institutions also accepting it, acknowledging it. We have seen a lot of technological trends where Bitcoin and other cryptos as well, not just Bitcoin, but other cryptos have also solved for the scalability issues which were there before. And so many. I think one last thing is, like in 2022, we have seen a lot of bad actors who were there. All of them got flushed out. So now hopefully the space is a lot more cleaner, and there is a lot of activity, building activity that happened in the last 2-3 years, which is now coming to fruition. So I think all of this is now coming together and is now reflected in the price. And I think this is just, I believe that this is just the starting of it. We will see a lot more activity in terms of new companies coming up, not only limited to the price, but new companies coming up, getting countries being more open to Bitcoin. and which will sort of have a trickle-down effect in terms of new opportunities opening up. I would love to see Indian companies, Indian startups also coming up and rising in the sector, not just India, but globally. And yeah, I mean, like exciting. 2024 was very exciting. 2022 and 3 was very, very challenging. And hopefully 2025, as the trend suggests, is going to be exciting again.
Well, on that hope, well, absolutely signing off. Thank you so much for joining us with that, Sumit. Well, yes, one good thing about 24 also is that we did not see any bad news come in from the crypto side of it. No frauds, no rag pulls, nothing of that sort. And it only was positive news. And we clearly have seen that trickle in case of prices. But with that, that's all the time that we have on the show. But Business Lunch will take all the action forward.
समोर निश्चितपणे ठेवली आहे ती म्हणजे एक है तो सेफ है आणि मोदी है तो मुमकिन है.
अभी नवनिर्वाचित विधिमंडल के नेता के नाम में देवेंद्र फडणवीस जी का मेरा बधाई और नमस्कार. इस चुनाव के दौरान महाराष्ट्र के 14 करोड़ जनता जनार्दन के डिसीजन पूरे भारत के लिए एक संदेश है. ये रेगुलर असेंबली इलेक्शन नहीं है. लोकसभा चुनाव के बाद महाराष्ट्र के इस चुनाव, इससे पहले हरियाणा का, इन दोनों से जनता के संदेश स्पष्ट है और महाराष्ट्र से ऐसे अनएक्सपेक्टेड, अनप्रेसिडेंटेड विक्ट्री is a big message towards Vikasit Bharat.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai.
Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of
Stocks get off to a soft start ahead of expiry with an eye on RBI's monetary policy meeting outcome tomorrow, but rise sharply off lows to trade at the day's high. IT index hits a record high, mid-caps outperform. Vodafone PLC sells its Industar stake via block deals. The proceeds will be used to repay its debt and invest in Vodafone Idea, which will use the money to pay down dues to Industars. The move is a positive for two majors. Bharat Forge joins the QIP rush with an over rupees 1,600 crore offer at an indicative price of a near rupees 1,300 per share, sources tell CNBC-TV18. The offer comes on the back of a record month for Class 8 truck numbers orders in the US. Bitcoin soars past $100,000 after Trump names cryptocurrency advocate Paul Atkins as CEA chair. With this, the total cryptocurrency market capitalization nears a heady $3.9 trillion. Chief Economic Advisor Anant Nageshwaran says corporate India should do better on wage growth and capex spends. Hence, the 2025 economic survey will focus on a need for the deregulation and aid growth. Hello, good afternoon. You've tuned into CNBC. You're watching Business Lunch, and I'm Vinny Motiwala. Markets surely have seen a good recovery coming in, almost at those highest levels that we're seeing, near the day's high that we're seeing the Nifty trading at as of now. 24,583, very close to the 24,600 mark. At one point of time, I think it did touch that mark and then it's come off. But still, now the day's highest point, Nifty holding on to gains of 0.5% in a trade. Other than that, let's pull up the mid and small cap. They are also holding on to good gains today. Nifty mid cap holding on to gains of 0.2%. Small cap is holding on to some bit of a better gain that we're seeing, 0.5% approximately gains that is coming in for the small cap as well. Nifty Bank, that's continuing to do well in trade in the last few trading sessions. Today also holding on to gains of 0.5%. Today what is doing well and extremely well is Nifty IT. Top sectoral gainer is coming in from the Nifty IT side, and we're seeing good moves coming in for some of the names in the IT pack. So Persistent System, Infosys, TCS, LTI, Mindtree. These are the names that are performing well and leading to good gains because in supporting the Nifty IT move. Nifty 500, let's look at some of these mid and small cap names that are doing well. We have BSC that is holding on to very good gains, CDSL, MCX, Angel One among these names. So those capital market names, something on those front are holding on to very strong gains today in trade. And other than that, we have Maharashtra Seamless as well as Gillette India, Castrol, which are also seeing very good gains in trade today. So let's keep an eye out on all these stocks in trade today. But we have to get started with the show, and we'll talk about what is going to be happening. Tomorrow is the RBI monetary policy meet outcome that is there, and what is the expectation over there after the lowered the expectation for the GDP print, low GDP print that came in. Ritu is joining in with us to highlight what are we expecting now from the RBI policy. Ritu, good afternoon. What is the expectation this time, given that the GDP growth was lower than what one was seeing?
Well, Winnie, those GDP numbers have really put RBI in a very uncomfortable spot because, there is a growing clamor or a growing chorus for a rate cut, including from government officials you heard at the Global Leadership Summit for CNBC-TV18. And this is coming at a time when high inflation has breached RBI's tolerance threshold, and it continues to be a spot of bother. Now, our poll shows that 7 out of 10 economists do not expect the lower than expected GDP print to accelerate the rate cut cycle, and they believe that the primacy of inflation will prevail, at least for now. Now, the MPC is expected to leave the repo rate unchanged at 6.5% for the 11th consecutive policy. Why? Because there's lingering inflation concerns and also the volatility in global markets, because a rate cut at this point that could accentuate the pressure on the currency currency. So instead of going for a rate cut, the governor could address the growth concerns with a dovish commentary, and that could lay the foundation for a rate cut perhaps in the next meeting. In fact, an overwhelming 90% of our respondents now see the first rate cut from the MPC in the February meeting, and the total quantum of rate cuts that the economists are split between 50 to 75 basis points. Now, according to, while the rate cut is ruled out because of the inflation reigning above 6%, there could be an explicit acknowledgement from the RBI that growth needs support, and as a step towards eventual easing, the RBI may instead go for a cash reserve ratio cut. Now, the respondents are pretty divided again on the possibility of this happening. Some of them see about 25 to 50 basis points of a cut, which could ease some of the pressure on the banking system liquidity. Now, the GDP forecast, that is going to grab all the eyeballs. 70% of our respondents expect that the RBI will lower this projection by as much as 50 to 80 basis points to about 6.4 to 6.7. 20% see it being lowered even further, all the way down to 6 to 6.3%. Now, on the inflation front, about half the respondents are expecting that the MPC will revise its projection upwards to about 4.8 to 4.9%, some even to 4.6 to 4.7% because of food inflation pressures still persisting. Now, apart from all of this, if you go to the next place to tell you, the RBI statement is expected to focus on liquidity management. So systemic liquidity that has been impacted because of increased forex interventions. The government cash balances have been volatile as well. So our respondents expect that RBI will continue to manage liquidity through both main and fine-tuning operations. But that is as far as the policy is concerned. The other big question mark for the markets and for all of us is the Reserve Bank of India Governor Shaktikanta Das's tenure. What happens to that? As of now, the current term ends on the 10th of December.
Okay, thank you so much for that, Ritu. We'll keep an eye out on the outcome that will be there tomorrow. So stay tuned in to CNBC-TV18 for all those updates on the RBI monetary policy tomorrow. But let's move on. And Chief Economic Advisor Anantha Nageshwaran has stressed on more deregulations at the state and central levels while urging for corporate sector to step up its investments. Listen in.
The focus has to be on the plumbing of deregulation that has to happen in state and local governments. We touched upon it quite a bit in the economic survey in July, and that is going to be the big theme. Deregulation or letting go is the big theme for the coming economic survey as well. And this is an example. If Indian businesses have to comply with all the rules for building guidelines, small and medium enterprises may not even have 1% of land available for actual production. And of course, corporates have used the profits to reduce their leverage, which is a good thing. They are deleveraged, their balance sheets are healthy, but therefore now it is time to engage in a good combination of capital formation and employment growth as well.
Okay, and now it's time to shift focus and talk about cryptocurrencies, because earlier today Bitcoin crossed that $100,000 mark. Manisha is here to give us more details on this one. Manisha, $100,000 coming for Bitcoin. What are we looking at now?
Well, 2024 has been an exceptional year when you look at cryptocurrencies. There were no reports of frauds. Nothing really went wrong. There was very less negative news as well. So all you saw actually was all very positive. From a Bitcoin halving year, we also saw positives coming in sense of ETF that was launched in this year itself that has been able to garner almost $30 billion of inflows there. I mean, this is what we've done in sense of market cap there. So when it comes to Bitcoin, the market cap now stands at a 2 trillion all-time highs, and overall crypto market cap stands at a 3.86, which is the highest as well in sense of $1 trillion there. So with this 2 trillion, Bitcoin actually is the 7th largest asset now in the world. So we've seen that kind of money actually flow there, and the price rise, as you can see. The latest thing that has taken the Bitcoin or the cryptocurrencies higher clearly has been the US President-elect Trump now advocating that Paul Atkins should take over as an SEC. Gary Gensler would be coming down in the month of January. That is seen very, very positive and very crypto-friendly going forward. And that's exactly the sentiment that the market seem to be working with right now. As I said, Bitcoin halving, ETFs, a very strong institutional buying, no negatives really. And then US clearly leading spearheading it in sense of very friendly crypto, as in sense of rules, regulations and expectations that you could see more coming into the markets in 2025 has been supportive. And it's not just Bitcoin. We've seen other altcoins also do quite well. There are more stable coins coming into the market. And we also have seen cryptocurrencies like XRP or Solana hit all-time highs as well. If you look at XRP, so even as Bitcoin has gained up by 140% in this year, XRP has gained up by nearly 250%. You have a Solana which is gained up by 300% in this year. So we have seen these kind of gains come in, continue in case of cryptocurrencies there, with an expectation that 2025 could be a positive year as well.
Wow, 144% in 2024, Manisha, and we're expecting positives coming in that time in the next year as well, 2025. So that's interesting to watch out for in terms of cryptocurrency, an exciting space as of now. But let's move on. And the U.S. Federal Reserve Chair Jerome Powell says that the economy is stronger now than central bank had expected in September, and the central bank can afford to be a little more cautious. He also rules out that risk of Fed losing their independence under Donald Trump and commented on the regulation of cryptocurrencies. Listen in. Okay, on that note, we're going to slip into a very short break, but don't go anywhere because we'll be back with more news and updates after this break.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18. For 20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC TV18's 20th India Business Leader Awards.
Presented by Standard Chartered in association with Reliance Industries Limited.
Committed more than 400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. Two different manufacturers came back to us and said, look, we just cannot deliver to the time frame that we had committed. There's going to be a delay. In one case it was 6 months, in the other case it was a little longer. So the program that actually should have physically started on the aircraft already will now not start until next year. The 787 aircraft, the first of the retrofit ship sets will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that 400 million that you spoke of, that was committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes. In one case, we've had to change seat vendors. This refresh I talk about, which is an interim step on the 777s, is something that we hadn't provisioned for originally and is only necessary because of the delay to the seat deliveries. But look, we've made this decision to invest more because we realise that this is, we can change everything else about the airline, and we nearly have changed everything else about the airline. But until we change the last 40 of our legacy wide-body aircraft to the standard that we expect of ourselves, let alone what fully.
Welcome back to Business Lunch on CNBC-TV18. Now let's move on. And Google CEO Sundar Pichai says that Google's popular search engine will change profoundly in the next years as the generative AI is evolving and the company is getting ready for the next gen AI models. Listen in to what more he had to say. Okay, and let's shift focus to the automaker Honda that has launched its all-new third-generation Honda Amaze priced at just under 8 lakh rupees. The car is the cheapest in India, featuring the ADAS safety system. My colleague Shivani caught up with the CEO of Honda at the launch event and spoke to him about the new launch as well as Honda's plans for the Indian market. Listen in.
Yes, actually, like this, currently sedan market is a little bit shrinking, but on the other hand, with the other competitors' cars as well, I believe that the people waiting the new models. Some period we don't have the new models in this segment, so I think this one will make to lift up or remember again about we have that good sedan in the market, and we believe that we could sell certain number.
Tell us about the outlook. How does Honda see the manufacturing, the car systems, the car market in India and also globally? Do you see some pressure on the car sales?
Actually, anyway, talk about the Indian market. It is very rapid growth happening last 2 years, but this year a little bit slowed down. But with the population of India or the economy growth, it is promised market for sure. So then as global Honda, also paying more attention to the India, and we are now reinforcing the lineup in the future. Today I announced, but 2026 and 27, we will introduce 3 new nameplates in the market, and so on. It's coming later, another model as well. So we will try to inform the new information in the near future.
Okay, my last question to you, sir, is the sales expectations. What is the kind of number that you have in mind? What is the outlook for the new Amaze?
So then I don't say exact figures, but of course we are seeking certain improvement. So I'm pushing our sales member at least 10 to 20% up minimum than current sales.
Okay, on that note, we're going to slip into a very short break. But after the break, we'll return and we'll give you updates ahead of Devendra Fadnavis swearing in as the Maharashtra CM.
I think people will not consider the job complete, and we won't consider the job complete.
So how much more are you going to have to spend over and above the 400 million which have already been committed?
Well, I won't say, but it's in the tens of millions.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy when you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. That was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power, I'd refer you to an article that was literally just released by IATA, which traces how airfares have tracked relative to the CPI and relative to oil prices, not just in India, but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down. And not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable, and of course we want to fill our planes. So there's always going to be a benefit to the customer in that respect.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership.
Welcome back to Business Lunch on CNBC TV18. I just want to mark the flashes at the bottom of your screen. We have a clarification that's coming from Divi's on the Entresto drug that we were talking about, which is made by the innovator Novartis, where Divi's is a supplier to Novartis. Now, they're saying that they are not going to be commenting on the patent lawsuit of Novartis that is going on and their impact as of now on them. They are saying that they are CDMO suppliers as well as API suppliers to many of their customers, and they are in agreement with a lot of clients as well. So as of now, no material impact of this news article on the company, but we'll wait out for more details in terms of that. As of now, that's a clarification that's coming from TVs. Let's move on, and Devendra Fadnavis is set to take oath at Mumbai's Azad Maidan this evening. And what are we watching out for? This is going to be his third term there. Santya is joining in with us to give us the latest update on that front. Santya.
Please increase the audio, Baba.
Okay, I think we have... we'll connect back with Santya as of now. But today, for 5 p.m. onwards is what we're watching out for in terms of Devendra Fadnavis taking oath as the Chief Minister of Maharashtra. And there was a lot of suspense around this before this in the last few days of who's going to be the Chief Minister. Yesterday, finally, we did get the name that came in from that front. And Santya, I think, is connected back. Santya, what's the update that you're picking up latest in terms of the swearing in?
See, Devendra Fadnavis is going to be the next Chief Minister of Maharashtra, but what I want to talk about now, I'm at Azad Maidan where the swearing-in ceremony is going to take place. I want to show you how grand the venue is looking. So first of all, this is the stage where the swearing-in ceremony is going to take place. Devendra Fadnavis is going to take the oath as the next Chief Minister of Maharashtra. The ceremony will be attended by the Prime Minister, 9 union ministers and 3 Chief Ministers. Now, towards the left-hand side of this stage, that particular section is reserved for religious leaders. And if I can ask my camera person Ajay to tilt the camera towards the right of the stage, that's where the artists, people from the art and culture world will sit. Over 50,000 people are expected to attend this swearing-in ceremony. And right next to the stage, and right in front of the stage, this is the section for VVIP people. That's VVIP, that's the category for VVIP. So this is how grand it's looking. It's orange everywhere, life-size posters of Prime Minister Narendra Modi and the next Chief Minister of Maharashtra, Devendra Fadnavis, along with his partners Ajit Pawar and Eknath Shinde. The swearing-in ceremony is likely to start at 5 p.m.
Okay, Santia, thank you so much for the latest coming in from Ground Zero, where Santia is there at Azad Maidan in terms of the setup coming in there. But with that, we're absolutely out of time on this edition of Business Lunch. Thank you so much for tuning in. Midcap Radar up next.
Unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that make CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
हमारे असम में हमें गो हत्या को निश्चित करने के लिए कानून लाया थे। ये 3 साल हो गया, उससे हमें काफी सफलता मिला हूं। लेकिन अभी आगे जाके हम ये निर्णय किया हो कि असम में गो मांस कोई भी रेस्टोरेंट और होटल में सर्व नहीं होगा और साथ में कोई पब्लिक फंक्शन में भी या पब्लिक प्लेस में भी ये सर्व नहीं किया जाएगा। सो ये हमने कंप्लीटली होटल, रेस्टोरेंट और पब्लिक प्लेस में बीफ को हमें कंजम्पशन ऑफ बीफ, मांस को खाना हमने आज से बंद करने का निर्णय लिया। पहले हमारा ये निर्णय था कि मंदिर का 5 किलोमीटर तक, लेकिन ये अभी हम पूरा
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Mangalam Malu. Recovery. That is something that we are seeing right now. It's a 300-point recovery on the Nifty from the lows. Banking index, IT, all of them contributing as well. And the mid-cap outperformance, at least in terms of the number of days we have been seeing mid-caps gain, continues today as well.
Absolutely. You know, when we started the day, we had the mid-caps outperform by virtue of not gaining as much as the big caps. But then you had the big caps surge in the second half of trade around midday itself. And now the mid-caps are underperforming by not gaining as much as the big caps itself, but still we're up about 0.3%. Let's talk about all the top stories that we're tracking this afternoon for you. Market near day's high after a soft start ahead of expiry. The RBI's monetary policy meeting outcome tomorrow. IT index too rallies and it's moved to the day's high along with pharma and realty, which are slumping. The mid-caps up around 1/3%.
Indus Towers surges after Vodafone PLC sells its stake in the company via block deals. The proceeds will be used to repay its debt and invest in Vodafone Idea, which will use the money to pay down dues to Indus Towers.
Torrent Pharma is in focus after the company has entered into an agreement with a German pharma giant, Boehringer Ingelheim, to acquire its 3 anti-diabetes brands. Acquisition is expected to be completed by March 2025.
Juniper Hotels is up around 2.5% after brokerage firm CLSA initiates with a buy call and a target price of 430 rupees a share. They say that they expect 16% EBITDA CAGR over FY25 to FY27.
Mid-cap IT firm Persistent Systems up in trade on the back of a positive brokerage note coming in from CLSA. The brokerage firm gives an outperform call, raises its target price to near 8,500 on the back of multiple growth drivers and margin levers.
Okay, all right. Those are the top headlines for the markets. Of course, the headline is that there has been a sharp recovery from the lows. It's a 150-point uptick that we're looking at on the Nifty, and it was just like half an hour back that we saw that sharp surge from the lows come by after the fall that we saw from the opening highs as well. Nifty IT is contributing to the gains. The mid-caps continue to do well, and there is an outperformance which is coming from the small cap index in the last couple of trading sessions. That continues. Small caps continue to outperform mid-caps as well. So that index is up around 0.7% as well. A lot of moving parts in the broader markets, which of course Hormaz will tell us in just a bit. But otherwise, we'll have to see whether the surge that we're seeing that continues or not, or there's more volatility by the end of the trading session.
Absolutely. You spoke about the small cap index. The Nifty is up 0.2%. The small cap index is up almost 1%. And in that, if you look at some of these cash names as well, you know, they are spiking. And how we have a double-digit gain that we've seen for names like Shalimar Paints up around 10%, AGI Greenpack up around 4.5%, Swiggy continues to do well, 63 Moons continues to do well. We have Maharashtra Seamless, which is up about 11% as well, and the new F&O entrants doing extremely well too. So let's go straight across to Hormaz, who has all the mid-cap movers this afternoon. Hormaz.
Mid-caps certainly turning from outperformers to underperformers swiftly on the back of that outperformance that we are seeing in the Nifty. But in there, plenty of movers then within the broader markets and mostly on the positive side as we speak. So we'll start off with the gainers in the broader markets, and Castrol is one of them, and it's continuing to grow from strength to strength in today's session as well. 6% higher there on Castrol. Kalpataru Projects is up 7%, a sharp spike seen there as well. And Max Healthcare, in fact, too, seen some gains in today's session. The capital market linked names, though, are the stars of today's trading session, be it BSE, be it CDSL, or both of them have hit record highs. Motilal Oswal is near its record highs, and Angel One continues to recover from the lows. It's still down on a year-to-date basis, but still up 4.5% in today's trading session. Some other names that are doing well in today's trading session include the likes of Zomato and Swiggy, both of them hitting new highs in today's session. Zomato crossed 300 on an intraday basis, a good going there as well. Stocks doing well on the back of strong volumes, and they'll come up on your screen. Some of the movers there: Maharashtra Seamless, as Manglam just highlighted, Triveni Engineering, Action Construction, and HEG I wanted to highlight in particular, not because of the gains, but almost 12% of equity has changed hands through the course of the day in HEG, and you can see that in the stock reaction as well. And lastly, some underperformers in today's trading session, and they include the likes of Graphite India moving in line with the fall in HEG as well, TBO Tech, Vodafone Idea, and Oil India, Divi's Laboratories, all of them. Divi's has recovered from the lows of the day, but still remains in the red. Back to you guys.
Okay, all right. Thank you so much for joining us, Hormaz, with all those details and names as well. It's a good time to get a technical check on the markets. Vinay Rajni from HDFC Securities is joining us for just that. Vinay, good afternoon. Well, do we see some addition, or I would say more buying from on these levels, or we could see some consolidation? What's the important level to watch out for now?
Yeah, so Nifty has given a clear-cut breakout. The inverted head and shoulder pattern breakout was seen, and it is into continuation of the uptrend. And the target which I see for the Nifty is around 25,000. So 400 points more upside we can expect from the Nifty. And as we have been discussing, the mid cap and small caps have been outperforming. So Nifty small cap and micro cap as well as the mid cap index actually has been rising for last 10 consecutive sessions. So today is the 10th consecutive session. We have seen back-to-back rise. So breadth of the market has been very strong, and small cap and micro cap indices are actually just a couple of percentage away from their all-time high. While if we were to talk about the Nifty is still 6% away from its all-time high. So in a way, the breadth of the market and the mid-cap, small-cap indices are showing great amount of strength. That's a very good sign. And the pattern which we see in the Nifty has reclaimed a level of above 50 and 100 days EMA, that's a very good sign. So I see a target of 25,000 in the coming trading sessions and in a couple of weeks, and I see a strong support emerging at 24,300. So keeping that stop loss in mind, one can continue to hold on to their long position, and the next target for the Nifty I see is around 25,000 to 25,100.
25,000 to 25,100. Well, Vinay, what stocks are you betting on right now?
Yeah, so if I were to look at the large cap stocks, the Larsen and Toubro can participate because we have been witnessing the consolidation in this particular stock for last many weeks, and in fact we can say for last many months this stock has been into consolidation and it looks very strong and it is on the verge of giving big breakout on the medium to long term charts. So L&T I am taking bet on, which is trading around 3,800. One can buy with a trading stop loss of 3,740. For the short term I see a target of 3,900. So L&T is one of the stock which I like. The second one I pick is from the PSU Bank. So Canara Bank is looking very strong to me, and PSU Bank index is given a fresh breakouts on the chart. So Canara Bank can be bought around 108.5. I would suggest a stop loss at 105, and for 1 week we can take a target of 113. So Canara Bank and L&T would be my preferred picks from the large cap segment.
Okay, all right. Thank you so much for joining us and telling us what the next important levels to watch out for in the Nifty are. With that, we'll slip into a short break. Sriram Khattar, the Vice Chairman and MD at DCCDL, will join us next to discuss the latest deals and the outlook on commercial realty. Stay tuned.
I remember these conversations with Shireen in Davos every year, and those have been fond memories of mine with CNBC. But it's a terrific channel, and congratulations on the 25 years. It's amazing to get there and to dominate the space the way you guys do. It's tremendous what you guys have built, so congratulations.
एक्सपांड कर दिया हूं कि कोई भी कम्युनिटी प्लेस में, पब्लिक प्लेस में, होटल में, रेस्टोरेंट में आप इसको खा नहीं पाएगा। तो ये हमारा जो हमने शुरू किया था 3 साल आगे, इसको आज हम थोड़ा और एक कदम आगे बढ़ा के लेके गए। আছে বহুত শাস্তি আছে তাতে, আপোনালোকে পঢ়ি ল'ব। এইটোতো অলৰেডি আছে, জেল পৰ্যন্ত।
Welcome back. You're still tuned into Midcap Radar. Well, DLF has been in news after the subsidiary of DCCDL, which is the commercial arm, will be selling Kolkata Tech Park to RDB Primark Techno Park. And this is for over around 600 crore rupees. Mr. Sriram Khattar, the Vice Chairman and MD at DLF Cyber City Developers, is joining us now to take a few questions on this and the commercial outlook generally for the company as well. Mr. Khattar, good afternoon. Thank you so much for joining in. Before I ask you about this sale that has happened in the IT park, I just want to understand the current occupancy levels that you're seeing right now. It has been consistently increasing. What is it right now, considering that we did have the festive season? Was it better than Q2? And what is the outlook for Q4 as well?
So we started the year with a vacancy of about 9%, which at the end of Q2 came down to about 7.5%. And we plan to end the year at a vacancy of 5 to 6% on the commercial offices side. On the retail side, the vacancy has been consistently between 2 to 3%, which will continue because of the normal tenancy churns that keep happening in the retail industry.
Right. And when do the rentals of DLF Atrium Place and the next phase of Downtown, Gurugram and Chennai start coming in? I mean, you typically pre-release your buildings before starting.
Yeah. So I'll split it into three parts. I'll start with the two downtowns first. So the downtown Gurgaon has already got about 1.7 million square feet of operating buildings. About 2 million square feet is getting completed in about 2 months' time, and the rentals for this will start by May, June of next year. The downtown in Chennai, 2 blocks of 2 million are already occupied, rented and operational. And another 1 million, the rentals will again start by May next year. Atrium Place is a project which is about 3 million square feet, out of which 2 million will be ready by April next year, and the rental will start by about August next year. One tower of about 1 million square feet will be ready by end of next year, and the rentals will start by about April, May of 26. Now, this is on the existing assets which are just completed or about to be completed in the next 12 months or so. We have two very large projects that are going on. One is the phase 2 of downtown Gurgaon, which is 5.5 million square feet of offices and 2 million odd square feet of retail. The construction work has already commenced, and we are planning to complete these assets by FY28. And the rentals will start in the beginning of calendar year FY28. Similarly,
Please go ahead. Please go ahead. No, please go ahead. Yes.
Similarly, in the Chennai downtown, whilst we have finished phase 1, construction on phase 2 started in the month of June, July, which is likely to finish by 27, and rentals are going to start in 28, and that is about 3.5 to 3.6 million square feet.
Okay, so that's a lot of addition that you're going to see in the pipeline, right? In different geographies. So, in 6 months, FY25, you've done rentals of around 3,200 crore rupees. Say 1 to 2 years down the line, when all or most of these projects also come on stream, you start booking rentals from that. What would the exit run rate look like? What's the target?
So, as we have given it in our analyst presentations, our run rate in DCCDL will be about 5,000 crores as of FY25, going up to 5,800 crores in FY26. In addition to that, there are certain assets, commercial assets, which are housed in DLF and not in DCCDL, where the rentals for FY25 will be in the ballpark of 300 crores, but FY26 will go up to 800 to 850 crores because of certain rentals starting at Atrium Place and the 3 malls coming up in the books of DLF.
So including DLF and DCCDL, by FY26, you could have a run rate of close to around 6,500 crores.
About 5,900 to 6,000. 5,000 in DCCDL and 8,900 in DLF.
All right, take that point. And what about, the SEZs? How much area have you denotified out there? And what's the mark-to-market rentals for these denotified areas? And I just wanted to understand what the incremental percentage from the last rental has been here?
Yeah. So SEZs, we have already denotified about 2 million square feet. Out of this 2 million square feet, about 1.2 million has already been leased. In the Gurgaon area SEZs, we are getting better rentals than in the SEZs. Whereas in Chennai and Hyderabad, where the general stock in the city of SEZ assets is quite large, the rentals we are getting are similar to the rentals that we get for SEZs.
Okay. All right. Mr. Khattar, then coming back to this recent sale that you made in Kolkata, what will those 600 crores be used for? And you also have a land in Pune. So will you be making a comeback there with any more commercial properties?
So this sale which we did was actually, it's a slum sale at 637. But if you add the deposits, etc., the value of the asset is about 675 crores. This has gone to pare down the debt of about 250 crores, which was there on this asset. The balance 400 crores comes to our normal cash flows, which will be used in the construction and growth of DCCDL.
And Pune, yeah.
As far as Pune is concerned, we keep looking at options and opportunities and comparative advantages of whether to develop it or to hold on for some more time. At the moment, we are not finding the rental rates attractive in the location where we have our properties to invest in that at present. But, as you know, land is something which can go sick but does not die. And at some stage, once it comes out and we find it competitive and we find a good ROI, we'll surely develop it.
All right, take that point. Thanks a lot, Mr. Khattar, for stopping by and giving us all those details on your business right now. We'd have liked a longer conversation to get a sense of how retail is doing in the festive season, etc. as well, but we'll leave that for another day itself. Take a short break, come back, focus on the markets, a bunch of individual stocks which are buzzing down.
The steep fall in the second quarter GDP growth to 5.4% makes the RBI policy very crucial, especially because inflation too is high at 6.2% in October, with food inflation at over 10%. Can the RBI MPC prioritize growth over inflation? Can they cut rates, or will they choose to cut the cash reserve ratio or CRR? And what can both these actions mean for your investments, loans and your businesses? Catch the RBI policy live straight from Mint Street, along with instant analysis from bankers, economists, policymakers and veteran investors. RBI Monetary Policy.
की या निवडणुकीने एक गोष्ट आपल्यासमोर निश्चितपणे ठेवली आहे, ती म्हणजे एक है तो सेफ है आणि मोदी है तो मुमकिन है.
अभी नवनिर्वाचित विधिमंडल के नेता के नाम में देवेंद्र फडणवीस जी का मेरा बधाई और नमस्कार. इस चुनाव के दौरान महाराष्ट्र के 14 करोड़ जनता जनार्दन के डिसीजन पूरे भारत के लिए एक संदेश है। ये रेगुलर असेंबली इलेक्शन नहीं है। लोकसभा चुनाव के बाद महाराष्ट्र के इस चुनाव, इससे पहले हरियाणा का, इन दोनों से जनता के संदेश स्पष्ट है और महाराष्ट्र से ऐसे अनएक्सपेक्टेड, अनप्रेसिडेंटेड विक्ट्री is a big message towards Vikasit Bharat.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports.
At the high point of trade for markets right now, it seems like it's a formidable move above the 24,600 mark right now. If this sustains, that maybe we see further short squeeze as we move towards the expiry on the Nifty itself. We keep an eye out on that. The Nifty is up almost 0.75% right now. The last leg driven by IT stocks. So Infosys at the high point of trade. Alongside that, we have TCS. And then the pharmaceutical stocks also playing their part, even as the financials continue to do well. Speaking of financials, the capital market plays, they have to be kept an eye out on. Angel One is now up 6%. Again, a recent F&O entrant, along with BSE, which is up in double digits. IGL, Indraprasth Gas, is actually at the high point of trade as well. And this, as the board is considering a bonus. So started off slightly soft and then thereafter disregarded the news that came by where there was no respite coming in on APM gas allocation. And the stock seems to have priced that in, up almost 6%. Castrol is the other one from the broader markets, which is surging towards the higher end of today's trading range. Tata Elxsi made a comeback in the F&O in December series. That stock too seems to be moving higher, currently at the high point of trade. With that, we'll leave it to the team of Mutual Fund Corner when we return. Thank you for watching Midcap Radar.
We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18. For 20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long. It's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC-TV18's 20th India Business Leader Awards.
Presented by Standard Chartered in association with Reliance Industries Limited.
We committed more than 400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. Two different manufacturers came back to us and said, look, we just cannot deliver to the time frame that we had committed. There's going to be a delay. In one case, it was 6 months. In the other case, it was a little longer. So the program that actually should have physically started on the aircraft already will now not start until next year. The 787 aircraft, the first of the retrofit ship sets, will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that 400 million that you spoke of, that was committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes. In one case, we've had to change seat vendors. This refresh I talk about, which is an interim step on the 777s, is something that we hadn't provisioned for originally and is only necessary because of the delay to the seat deliveries. But look, we've made this decision to invest more because we realise that this is, we can change everything else about the team.
Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. And today we are going to discuss hybrid funds. They saw big inflows of around 16,863 crore rupees. This is in October. It's been consistently moving up. And that's a significant rise of around 244% that we saw in September, where the inflows were around 4,901 crore rupees. So we'll understand the key drivers for the surge, the risk associated with this, and when does this category become ripe for investment. This and much more with Nitin Rao, CEO at Incred Wealth, and Prableen Bajpai, founder at Finfix Research and Analytics. Mr. Rao, Prableen, thank you so much for joining in today. But lady, let me start with you, because we saw that big surge and big inflows in the month of October, around 16,863 crore rupees. But is this a sustainable trend? What is driving the interest in this category?
Good afternoon, Sonal. Great to be on the show. I think it's the current scenario states that it's the volatility in the markets and, of course, the changes in the taxation. I think two primary factors which have driven the funds into the hybrid category. And that is not just in the month of October, Sonal. I think that's what the trend has been over the past few months. And if we just broadly analyze, extrapolate and just look at the past 13 months overall, starting from October 2023, we'll see that the monthly inflows are primarily the primary segment which drives, because within hybrids we have these 6 categories, and out of these 13 months, it is actually the arbitrage funds which have led the contribution and the inflows into the broader category of hybrid funds in 10 out of the 13 months. And in 2 out of these 13 months, it was the multi-asset category. And in one, it was the dynamic asset allocation. So definitely it's the market volatility, deployment of funds, the decision-making becomes slightly more difficult for investors. Debt as a segment is less lucrative with the changes in taxation. So overall, I think arbitrage is definitely the space where the funds are getting parked, and then of course the hybrids, because of the market volatility and with their ability to protect the downside, I think overall it's sort of increased the interest. But interestingly, in the month of September, because we did actually see outflows from arbitrage, because it's used for parking purposes, Sonal. So I don't think the trend is sustainable, to answer your question. And I think it'll always be this huge inflows during specific months and then the outflows during probably advanced tax payments, and quarter-ending months. So I think it's not a sustainable trend, but overall good interest in the hybrid space for sure.
Okay, all right, take that point. So that's an important opinion coming in. Mr. Rao, do you agree with Prableen? Because if there's a difference in opinion, that is something that makes markets, right? But what do you make of the hybrid fund flows that we saw? Do you think it's a sustainable trend?
Thank you, Sonal, firstly, for having us around. I personally think hybrid funds is a trend which is here to stay. There are two main reasons for that. We've had long bull markets over the last 2 years across the world, and India is no different. And we are entering into a phase of reduced returns in equity over the next year with a lot of volatility. In such scenarios, where do clients protect their money is one concern. The second concern, like was mentioned, was debt taxation, which has now become marginal tax rate in almost all categories. How can we kind of improve the returns and try and protect capital as an option for debt investors, which is where hybrid funds come in. So like was rightly mentioned, arbitrage is one area which I think gets about 45% of the money. But an interesting trend within all that is also multiple asset allocation funds, balanced dynamic funds, and equity savings funds are also seeing maybe 30 to 40% of the flows, which is a result of the changes in the taxation and the fact that volatility and tax planning makes this segment attractive. More importantly, even the equity savings scheme is now coming up as an attractive option to FD investors in hybrids, while balanced advantage and multi-asset allocation are coming as attractive options for volatility investors. Hence, I think this trend will kind of improve going on from here.
Okay, so it will improve. So just to follow up on that, I know it can't get too specific. So everyone has been thinking that maybe 2025 year could be the year for hybrid multi-cap funds. If that is happening, what are some of the other factors, according to you, Mr. Rao, which could work here?
See, firstly, we saw a strong bull market where I think 25-30% returns was quite standard across most categories. Now we are seeing a lot of volatility in India with stretched valuations and a slowing economy. We are seeing a topping of markets across the world on valuations, and hence internally we believe that here on returns from equities will be subdued. We also think debt returns may see some upsides as the interest rates come down, but it will be volatile. China remains volatile. All these factors reduces confidence of investing directly into equity type of mutual funds. How do you balance that? By balancing debt and equity in products and fund managers who try and balance views out into good strategies. And that's why I think they are perfect. If the equity markets will give 10-12% returns, if debt gives 7-8% returns, hybrid category, if thought of properly, can give you 10 plus kind of returns quite easily.
Okay, all right. So that's the outlook, what could happen possibly in 2025. So Prableen, is it fair to say during market corrections, it's better to look at hybrid funds? That's what we saw in October, right? A sharp correction. And how do they handle the dips and give better returns in this case?
Absolutely, Sonal. I think, like Mr. Rao has mentioned, investors definitely are looking at the risk management nowadays, because they understand that with volatile markets, you're looking at more stable returns, and that is where hybrids come in. And I think most of them have actually done a great job with containing the downside. So when market corrections are concerned, it is not that you just move into a hybrid fund, but probably the newer allocations, that is what is going into the hybrid funds, and especially for those funds, Sonal, which are with a 3 to 5 year point of view. Let's say you have your child's education in the next 4 years, then probably at these levels, you don't want to take up your equity exposure. You don't want to sit with all your money in the fixed deposit as well. So that is where hybrids come in. And broadly, if we just look at the category, how they have been able to contain. So, the recent fall, which we saw in Nifty 50, where from the 26th of September till about 21st of November, Nifty was down close to 11%, 10.93%. Category averages across across the hybrid segment, I think they performed wonderfully. If we look at the balanced advantage, the category average was down by about 4%, much lesser than the broader markets. Multi-asset again was down by 5%, half of Nifty 50's fall. Arbitrage, of course, was in the positive because that's what it's meant for. Equity savings, the schemes were again, very small. You get equity taxation, but the unhedged allocation to equity is usually very little. It was down by about 2%. And of course, the category like the dynamic asset allocation, aggressive hybrid, they were also, much lesser. The fall was much lesser. So overall, I think they are doing a good job by protecting the downside. But at the same time, Sonal, the construct and, how these funds, within hybrids, it's these 6 different subcategories. And then within them, there are different constructs, especially within the multi-asset and the balanced advantage space. So then the returns actually vary so much within the category as well. So investors, should not just invest looking at the category average. They have to deep down, and then look at what is best suited for their objective.
Oh, yes, that point is absolutely taken. So, Mr. Rao, coming to you, if we compare different categories, not the subcategories itself within hybrid funds, how have returns been during biggest monthly downsides and upsides? This gives a greater idea to investors, right? What a category does in a certain cycle.
So we did an analysis where we tried to see how different categories performed when the markets fell. And broadly, there have been some 7-8 instances where markets, as represented by Nifty, fell about 6-7%. And we have seen that the balanced advantage category and the aggressive hybrids would have only fallen about 3% broadly in those times, while the equity savings fell maybe 2%. Obviously, arbitrage went positive, and this is not once, but maybe 7-8 times in the last 4 or 5 years. So clearly on a market fall, because they do allocate some amount of money into categories which cover either other asset categories or hedging, etc. These funds always outperform in a fall, and track record has shown that the alpha on the fall to the index has always been in excess of 3-4%. The other point that I want to also add is equity savings and arbitrage can also replicate FD type of returns on a recovery. So not only do they outperform on the fall, but they also give stability in a recovery on the market.
Okay, so historically, balanced advantage funds have corrected lesser than what we've seen with some other categories. That point is well taken, and it's a very insightful discussion, but we have to get into a quick commercial break. On the other side, we'll continue our discussion with Prableen Bajpai and Nitin Rao, understanding everything about hybrid funds. Stay tuned for that.
Changed everything else about the airline, but until we change the last 40 of our legacy wide-body aircraft to the standard that we expect of ourselves, let alone what customers expect of us, I think people will not consider the job complete, and we won't consider the job complete.
So how much more are you going to have to spend over and above the 400 million which have already been committed?
Well, I won't say, but it's in the tens of millions.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy when you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. That was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power, I'd refer you to an article that was literally just released by IATA, which traces how airfares have tracked relative to the CPI and relative to oil prices, not just in India, but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down. and not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable, and of course we want to fill our planes. So there's always going to be a benefit to the customer in that respect.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Hopefully.
Welcome back. You're still tuned into MF Corner. We have with us Mr. Nitin Rao, CEO at Incred Wealth, and Ms. Prableen Bajpai, the founder at FinFix Research and Analytics. We've discussed so far how the subcategories in hybrid funds have done, why there's a lot of surge that we're seeing in terms of inflows. But Mr. Rao, how do we differ this category from flexi-cap funds, and why do they perform better in extreme market moves versus the other category?
An interesting question, but there are two different asset categories. Flexi cap essentially looks at a distribution across equities, and they play between large cap, mid cap and small cap as the fund management strategies. While hybrid funds will have equities in a similar distribution maybe, but they also have maybe 20-30% in either other asset categories or in hedged products, which decreases the returns. The net result is that when the markets do very well, and that also we've seen over different time frames, say 6-7 times when the markets did very well, flexi cap funds have outperformed hybrids by a large margin. And I would logically say that the alpha over a balanced advantage or an aggressive hybrid will be 5-6%, which means they will give 5-6% more returns than the hybrid on the upside. But that's the very nature of the funds. But it's important to understand portfolios seem similar. It's only that a small percentage of the portfolio is locked into products which try to reduce volatility, which is why flexi cap will outperform on an up move, whereas on a down move, the hybrid will outperform the flexi cap.
Okay, that explains the analysis of the returns in these two categories as well. So, Prableen, while we're talking about how these asset categories perform in different market cycles, and especially for hybrids, you think that this outperformance might not sustain. So there could be some risk associated with hybrid funds as well, right? What are they? Who should not go for such funds?
Absolutely, Sonal. Some amount of risk is always involved in the hybrid space. If we are talking about arbitrage, then there can be very short time periods where there aren't enough, lucrative opportunities available, and returns can be very meager and very, very rarely negative as well. But arbitrage is the safest within the hybrid space, so you can take it as a category which is going to give you single-digit returns with equity taxation. So it's a real good place to go in. The risk is limited there. Now, talking about the other categories, they all have some element of equity, and wherever equity is involved, and of course, because that is, you're taking direct equity exposure, because not all the equity exposure is hedged. So the unhedged equity exposure is going to add some amount of risk. So there is a sudden correction, or the market movement, suddenly turns there is some event which is disruptive, maybe the fund is also sitting on slightly higher equity allocation. There can be a steep fall there. So number one, investors need to remember that risk cannot be totally eliminated. There will always be risk, but the risk-adjusted returns are going to be good. So if you're investing, please have at least, minimum of 2 years, because that's when the lucrative taxation kicks in. So you start with the 2-year kind of a horizon in mind, going up to 5 years and beyond, depending on the objective. Secondly, Sonal, that the taxation within some of the categories of hybrid is slightly complex, in the sense that, let's say, one multi-asset fund may not be eligible for equity taxation even after 2 years, depending on the percentage of equity that's going to hold. It may be different for another multi-asset fund. So you have to be sure of which fund are you investing in. So within the same category as well, the holding period when equity taxation kicks in can be different, as well as in rare cases, debt taxation is also there. And of course, the debt taxation is there for the conservative hybrid category. So that needs to be checked. And thirdly, I think it's just that, investors cannot buy a multi-asset fund or a balanced advantage fund and think that, everything is going to be all right. They have to do their asset allocation at a personal level of their, when they're constructing the portfolio, and not leave everything to the scheme. So the scheme can give them a better risk-adjusted return overall over a time period. But they have to be sure of what they're investing into. Like Mr. Rao also initially mentioned, that you have to understand what you're investing into and then, invest. And I think that's the biggest risk of investing without understanding. So other than that, I think it's a great category and subcategories for investors to invest.
Yes, totally get that point. And it's understandable. Unless you understand a category, how can you just go ahead and invest as well, right? Mr. Rao, your take on the risk associated with different categories. Who do they cater to? Which risk profile, so to say? And are they a better bet than fixed deposits? Is it fair to compare the two, first of all?
It's not fair to directly compare the two, because fixed deposits obviously guarantee returns, and you get exit a little overnight or immediately if you have a bank account, etc. But today we have reached a peculiar situation where taxation is at marginal rate for almost every way of debt investment. And today, and the hybrids or equity-based investments and equity investments more than 65% today give you the benefits of 12.5% long-term tax beyond 2 years. Therefore, you can consider them as a proxy for a fixed deposit with a limited amount of risk in arbitrage, and more so in equity savings funds, because there the equity exposure may be 35%, the debt exposure may be AAA, and the rest would be hedged kind of products. So I would say that investors should distribute their investments, which is in fixed deposits, across partly in fixed deposits, partly in arbitrage where the short-term returns is what the goal is, and FD should be a little bit put into equity savings funds, where on the downside you get 1 or 2%, but on the upside you get 7-8% long-term over 5-year track records. So the FD equivalent to me is either arbitrage or equity savings. On the broader risk on the category, I agree with most things that were said by Taulin. But I just am concerned that the markets today are at all-time highs across the world. So the risk is slightly higher. People should not be thinking that it will not impact. But as we saw that even at a 6% fall, hybrids give alphas on the fall. So I'm not so worried about the risk. It's just that the time frame of investing should be minimum 2 to 3 years, because that is the time frame where risk gets evened out.
We get that point. So makes sense, not entirely fair to compare the two returns or the two categories as well. But Prableen, before we wrap on the show, if you can quickly tell us some of the recommendations for the viewers in the hybrid category that they can look at and analyze before they invest.
Absolutely. Sonal comes with the disclaimer that they must do their due diligence. Some of the funds which I like are the SBI Balanced Advantage, Parag Parikh Dynamic Asset Allocation. It's a newer fund, but I think it's a very credible fund house. They've managed their conservative hybrid fund very nicely, but that now comes under debt taxation. So dynamic asset allocation can definitely be looked because it qualifies for equity beyond 2 years, 12%, 12.5%. Then within the equity savings, I would say Edelweiss is a good fund to look at. It can contain the downside well. ICICI multi-asset, and I would say arbitrage, any of the credible bigger fund houses, SBI, Tata, ICICI, Kotak. I think arbitrage is you don't really have to bother much. Any of the good fund houses, credible fund houses, you can go with.
Okay, all right. Take that point, Mr. Rao, Prableen. Such a pleasure speaking to the two of you and to get your insights on a topic which is very interesting and topical as well right now. So thank you so much for joining us today.
Thank you very much.
Thank you so much.
Okay, all right. With that, we'll take your leave on this edition of MF Corner, but you stay tuned for Closing Bell to take you through the last hour of trade.
Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macro.
You look at the ASX 200, Shanghai, all of them are trading in the positive territory.
Third time he's going to take the oath as the Chief Minister of Maharashtra.
Important support comes in about 24,281.
We can make our decisions without them being reversed other than by Congress.
Vodafone PLC is going to sell 3% stake in Indus Tower via block deal.
The price has been revised for the base variant, and it's just to reach the larger audience.
71 points higher, 24,540.
Novartis has, which is an innovator, has lost an appeal against MSN in the US District Court.
Our view is that the RBI should cut tomorrow.
Nifty is now trading below the 24,500 mark.
100,000 was a level that the markets have been anticipated for almost a month, and we finally have seen that come in.
7 out of 10 economists do not expect the lower than expected GDP print to accelerate the rate cut cycle.
300-point recovery on the Nifty from the lows. Banking index, IT, all of them contributing as well.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that's the day so far, and what a terrific, terrific day it has turned out to be. Just an amazing one-way ride from mid-afternoon, exactly 12 o'clock. It's almost as if, you had those boosters put in and vertical takeoff, 330 points. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues, Surabhi, Reema here. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon, folks. Santa is definitely in town.
Absolutely, Santa's in town, and how, right? And we're just getting started with regard to this series. In December 2023, that series, we were up close to 8%. So is Santa going to be doing ho-ho-ho all the way and even better than 2023? Let's see if, that's going to play out. But today has been one of the best days we've seen in terms of trading action from a bullish perspective in the last many sessions. And we pointed this out in the morning. There's a possibility that tech index will outperform. That index is up close to around 2%. So last couple of sessions with the banking names, today the tech said, let me take center stage.
Tech is, the IT index is at 2%, is the top performing, top gainer across sectoral indices. So doing very, very well.
High on the tech index.
Just a extra push for the IT index. But, but the takeoff itself is quite remarkable because, the takeoff from 12 o'clock, there you go, exactly at 12. And we never looked back. So there was that sharp, almost 200-point bump. Then there was, trading for a while for the next 1.5 hours or so, and then another move up. So from 12 noon, Nifty is up 400 points. That is how sharp this has been. Now we are, by the way, at 24,825. My God, 24,815. So we've taken out the 50% retracement of the fall. I think as I was sort of putting those numbers down, we were just around there at about 24,770. Actually, we were at 24,770, which is the 50% retracement of the fall from the all-time high on the 29th of September to the recent lows in November. And that is 24,770. And we've taken that out now. We're trading above it as we sort of get into the thick of the last 1 hour of trade or so. Banks, of course, are continuing to do very well, 0.8% there. So the gap between where the Nifty Bank is and the all-time high for the Nifty Bank, it's about 1%, 1.25%, that's it. And you'd be at that 54, I think 440 or so was the all-time high for the Nifty Bank. So not very far away, not 0.8, 1%. So actually, in the last 10 minutes, there has been further acceleration which has happened. And of course, as we said, the IT index, 2% gains, looking very, very smart. 2.33% gains on the Nifty IT index. Reema.
82,000 and counting on the Sensex now as it's moved up 1,250 points. So 82,000 level has been scaled today. The Nifty's added on close to about 350 points. Mid-caps, though, compared to the frontline action, has been a little relatively softer. So the mid-cap index is only up close to about 0.5%, which is why the advance decline ratio stands at about 1,350 stocks advancing for 1,050 stocks declining. So on a day when you have a 1,200-point Sensex rally, you would have expected the gap between the winners and losers to be a lot more wider. but that's not the case. The small cap index continues with its up move. The Nifty small cap index is up nearly 1%. IT's leading charge, as we said, the Nifty IT index has hit a fresh record high. And in the broader markets, you have names like BSC, CDSL. BSC is at a lifetime high, 11-12% gain on that. CDSL too, fresh 52-week high with a 7% up move.
Yeah, I mean, big moves in a lot of these capital market plays. A lot of other names like Swiggy, and we'll talk about these stocks as we go forward. But I'm looking at global screens as well. And actually, it's full risk on. If you're looking at Europe right now, most of the markets are up between 0.5% to about 1%. The Bitcoin anyway staged that big, grand move of 100,000, taking out that level. And look at the French market. That's where there's been political unrest with the Prime Minister being ousted. But the market's all right. I mean, it opened negative, it's turned positive. So things are chugging along quite nicely. By the way, while we track a lot of the Vodafone news here in India, the big international headline is Vodafone's merger. And it's a $19 billion merger, by the way, with Hutchison 3 UK. And this will create the largest mobile operator in the country, in UK itself. So some pretty big business strides going on in, in the home market for Vodafone as well, so to speak. So anyway, those are, some of the major news points. Coming back to the market here, a lot of today's gainers include sort of newsmakers, for instance, in IGL, where there's a bonus issue that's coming in. A couple of other names like Triveni Engineering. Granules is recovering. Remember, Granules was the casualty in the earlier part of this week because of their plant in Hyderabad. But there's, the company then clarified. The clarification came in yesterday, but it seems now the market's in a mood to kind of move on. And the dips are being bought in Granules. So lots of names on the radar. November auto sales coming in from the UK for JLR, Jaguar and Land Rover. A slight dip over there. Plenty to keep us busy in this last hour, Nigel.
Well, that's right. Surbhi, if you recall on Granules, I made this point yesterday, right? The shorts had piled up. The negative news came 2 sessions ago, and it went into the F&O ban just, in the last 45 minutes of trade. And since it was in the F&O ban, all those short positions could have got stumped out, which in fact is the case that's happening today. So it's recouping some of those losses that we saw in the previous trading session. That technical factor of it going in the ban, I think that's played out. A few more stocks that are moving around. Imfa, the ferrochrome maker, we have been pointing this out, that chrome ore prices have been moving up, which could help it out. But I'm looking at ferrochrome prices, they actually haven't moved up that much. So it appears now some part of the street is, realizing maybe value, maybe the shortage of chrome ore, and that's why that stock has been bid up. In fact, in the last 3-4 trading sessions, it's moved up on very, very strong volume. So just keep an eye out on that one. The other one we spoke about was Graphite India. HEG, large trade taking place. I think 10% equity has changed hands as of now. We'll have to find out who are the parties. But Graphite India is going according to the fundamental news that maybe that large move that we saw in the last few sessions isn't really warranted. So that's why that's down close to around 7%. Let's get in Mitesh into the conversation. Mitesh, what a rocking rally we have seen. We have pulled back quite a lot of the losses that we saw earlier. And who would have thought we're on the verge of going to around 25,000 odd? What's your take? If you had a long positions, what would be the trailing stop loss?
Yeah. So, couple of things here, Nigel. One, I think, today morning I had spoken about 24,350 coming into play, and there was this big sell-off which happened for about half an hour. And, but we didn't get an hourly close below 24,350. So I think the next target on the upside was 24,750, 800. I didn't expect 24,800 to be taken out so easily. But now that the market has done that, I think good chance that we are looking at 25,000 and in a good case scenario, 25,150 as well. So stay positive, use declines to buy into, and, on an hourly chart, just place your 20-day average. As long as you're not getting a closing below that, buy. In case you get a pullback to that average, again, buy with a suitable stop loss. That's the way to approach the index. The good thing is that the Bank Nifty, the Bank Nifty also has cleared an important level. There was a big gap down on the 30th of September, which had started the decline and the correction. That has been captured. Now what remains is the all-time highs of 54,375 on a closing basis and 54,460 on a intraday basis. So 54,375, 54,450 should be your zone target area, which is where you would want to take profits on the Bank Nifty.
Okay, thank you very much for that. Deven Choksi is now with us on the show. Deven, it's a buyer's paradise today. Everything is up. So have you been purchasing in the markets over the last couple of days, or you think it's now getting a bit excessive?
Yeah, good afternoon, Rima.
Well, I think for portfolio investors, I think it's a happy time that you see your values going up because of the market actions. Nothing fundamentally has changed that I think it warrants buying at regular speed. In the contrary, I think in the fall, probably we got the opportunity to buy into some of the good quality names in the portfolio. So we still continue to hold on to them. In my viewpoint, I think this rally is driven more by the momentum at this point of time, largely coming in because of the additional fund flows which are coming into the market from the FPI side. And they're buying into the heavyweights. So as a result of it, the reflection comes directly onto index. And the consequent action thereafter would be on the short covering as well. So I think it is compounding at this point of time. Maybe I think technically the Nifty is supposed to I think score 24,750, which it has already done. It is close about trading above that level. I think one could possibly see a possibility of 25,200 once again re-entered into the technical point of view since the momentum is strong. But otherwise, fundamental remains as strong as they were before, and nothing changes as far as we are concerned in the portfolio.
Okay, so Deven is technically looking at 25,250, and even Mitesh spoke about perhaps the markets heading to 25,150. Mitesh, what would your stock calls be?
Yeah. On the stock side, I'll have a couple of buy calls. Tata Power, I would want to see the stock get past 431, 432. So it's trading at about 429.5, 30. Above that, buy with a stop at 425. Look for a target of 450 to begin with. That's another stock which is just giving signs of reversal. And Tata Steel is the other one, which I would recommend buying with a stop at about 145 or just maybe 10% below that, and a target of 154 on the upside.
Okay, all right, Mitesh, got that. Thank you very much for that. We have Deven Choksi joining in. Deven, hi, great to have you on the show as always. We want to start with this whole big surge that's happening on some of the market-related stocks once again today, right? There's BSE, there's Angel One, a lot of brokers, a lot of capital market infrastructure-related pieces. They're all going up. I'm not sure if there's any fresh news or trigger. And also give us your sense. I mean, there was a note from one of the brokerages today, local brokerages, talking about how options premium turnover is going up for an exchange like BSE. I don't know if your teams have noticed something like this or not. But what's new? Any new trigger for these stocks?
Yeah, Sylvie, good afternoon. Well, maybe on one side, I think the option markets, I think the new additional entry of 43 stocks for the BSE, I think could probably lead to the volume numbers. But more importantly, BSE is holding about 15% stake in CDSL. And CDSL prices have gone up. So from the value perspective, if you look at it, it's close to around 6,000 crores worth of value of CDSL that is held in the books of BSE, which is about 68,000 crore kind of a market cap. So from that perspective, I think the market is a bit little excited at this point of time because I think that value is going up. And generally, BSE would probably, I think, monetize the stake at some point of time further, I think having monetized a significant amount of it already. So to a greater extent, I think that is one level of, I think, understanding that we carry. That's why I think the traders have entered into, and probably BSE stock went in for a circuit for a while, and I think trading at a higher levels currently.
Indeed, big move is what we're seeing on BSE on very, very large volumes. But let's turn our attention to the quick commerce space then. Jefferies, they have written a note on aggressive discounting strategy in this space. Manglam joins us to fill us in with more details. Manglam?
Well, interesting note at an interesting time, especially because the big moves that we're seeing on both Zomato as well as Swiggy. What's happened is that Jefferies, they created a little basket of products that, all of us would use, something that comprises of personal care, F&B, home care, dairy, etc. The MRP value of that basket was close to around 11,500. They took all these products and compared it across all the other, quick commerce offers that are there, and they saw the discounting, and that was startling. The facts that it threw up. The average discounting on quick commerce is 14%, with personal care having 26% discount and dairy products having about 8%. Now, if you look at across platforms, the most aggressive is the most recent entrant, Flipkart Minutes, with 22%. DMart Ready itself is 21%. Then you have, Blinkit at 15%. But Zepto's Super Saver actually makes the discount at around 26% itself. So to all of this, Jefferies says that because there is so much aggression by the current players, there might be, a place where all the other existing players, the likes of Blinkit and Instamart, will have to respond to this aggression, and that may pose a risk to consensus estimates on profitability, not only on other listed QCOM players, but also the modern trade players as well. We've seen DMart call out the quick commerce impact, and with DMart ready prices now being comparable to Flipkart Minutes or Zepto with Super Saver, the street is worried about it spilling over to modern trade as well as the mom and pop stores that are there as well. And overall, this will create a fair amount of pressure to shorten delivery times across all product categories and across e-commerce platforms too.
Okay, all right.
Jeff. Yeah, no.
Yeah, I think Surbhi, you want to make a point? Please go ahead.
No, I was just saying that, you remember our conversation with Mr. Majeti just, I think it was yesterday, right? We asked him this question, point blank question, saying Amazon's coming in, what happens to the platform fee and other charges? I don't think, there were any clear answers. He just said that we're prepared for competition. We've seen competition in the past, and the buyer will ultimately vote with his or her thumb. But I guess, as Manglam is pointing out, Jeffries is definitely penciling in some of those concerns. Nigel.
Well, that's right. Let's get in, a view then on this space. Devin, what is your view? There was a lot of attention that's coming in there, but how does this discounting and competitive intensity going up fit into your space? What do you like from here?
Well, on one side, the fundamental story remains intact. I don't see too much of change. Do agree that I think the competition is going to have its own say. And I think one of the larger challenge would come from JioMart, I think, who is basically having tie-ups at the back end with all the Kirana merchants. So they could possibly enter into it with a force. And I think who knows how exactly the pricing would change, or the platform access fee would change, or take charges would change. One doesn't know that part of it as well. What I am concerned about is that between these two companies, listed companies, Zomato as well as Swiggy, I think they assume the total market capitalization of somewhere around close to 3.84 lakh crores. And on which I think the Zomato is making some profit, Swiggy is yet to make profit. We are paying significantly large amount of premium to these assets. I think even though I buy that point that I think it's a fantastic consumer tech, and it has a game plan in place. But still, all said and done, I think everything is in price. At this point of time, I believe that Zomato's momentum is largely also because of the fact that getting included into the index, Sensex. And that's where probably I believe that I think the larger part of the momentum is chasing this particular stock. Expensive in my viewpoint at this point of time, because they don't have enough amount of margin of safety to offer at current price. If at all, I think anything in the competition comes up, it could possibly have its own say on the stock price. That's what the concern would be.
Zomato's crossed that 300 rupee mark today for the first time ever and went on to hit a level of 304, 4.5% higher. And Swiggy too, seeing green on the screen for the fourth day in a row. But all eyes are going to be on the RBI monetary policy tomorrow. And after the lower than expected GDP print that we got, what is the street expecting? Ritu joins in with the key expectations.
The sharp slowdown in growth has put RBI in a very uncomfortable position. There is a growing chorus for a rate cut, including from government officials, at a time when high inflation, which has now breached RBI's tolerance threshold, continues to be a spot of bother. Now, the CNBC-TV18 poll shows that 7 in 10 economists do not expect the lower GDP print to accelerate the rate cut cycle, and they believe the primacy of inflation is going to prevail for now. The MPC is expected to leave the repo rate unchanged at 6.5% for the 11th consecutive policy because of lingering inflation concerns, and also because of the volatility in global markets, because a rate cut at this point can also accentuate the pressure on the currency. So instead of going for a rate cut, the governor could address the growth concerns with a dovish commentary, which will lay then the foundation for a rate cut in the next meeting. In fact, an overwhelming 90% of respondents expect to see the first rate cut from the RBI in the February meeting, and the total quantum of rate cuts is seen between 50 to 70 basis points. Now, while a rate cut is ruled out with inflation above 6%, there could be an explicit acknowledgement that growth needs support, and as a step towards an eventual easing, the RBI instead may go for a CRR or a cash reserve ratio cut. But the respondents are pretty divided on the possibility of this happening, with only 50% seeing the chance of a 25 to 50 basis point cut, which could ease some of the pressure on the banking system liquidity. Now, the GDP forecast, that is likely to grab all the eyeballs. 70% of our respondents are predicting that the RBI will lower its FY25 growth projection to 6.4 to 6.7%, and 20% foresee a revision all the way down to 6 to 6.3%. Now, on inflation, half the respondents expect the MPC will revise its projection for FY25 upwards to about 4.8 to 4.9%, while 40% are expecting a more modest increase. Now, apart from the policy rate decision, the RBI statement is also expected to focus on liquidity management, because systemic liquidity has been impacted because of increased forex interventions, and the government's cash balances have also been volatile. And so our respondents believe that the RBI will continue to manage liquidity through both main and fine-tuning operations. That's as far as the policy is concerned. Of course, markets also want to see what happens with RBI Governor Shaktikanta Das's tenure, which is supposed to end on the 10th of December.
Okay, absolutely. That also remains a huge question at this point in time, along with whatever will happen in the policy, right? Ritu, thank you so much for that. Well, let's get you some thoughts from CEA Anantha Nageswaran. He has stressed on more deregulation at the state and central levels, while urging for the corporate sector to step up investments.
The focus has to be on the plumbing of deregulation that has to happen in state and local governments. We touched upon it quite a bit in the economic survey in July, and that is going to be the big theme. Deregulation, or letting go, is the big theme for the coming economic survey as well. And this is an example. If Indian businesses have to comply with all the rules for building guidelines, small and medium enterprises may not even have 1% of land available for actual production. And of course, corporates have used the profits to reduce their leverage, which is a good thing. They are deleveraged, their balance sheets are healthy, but therefore now it is time to engage in a good combination of capital formation and employment growth as well. The staff cost of private listed companies, whether it is information technology firms or general, has been coming down. In other words, compensation growth has become weaker and weaker, compensation to employees. And if you take out managerial compensation, this will look even more acute, the decline. And of course, corporates have used the profits to reduce their leverage, which is a good thing. They are deleveraged, their balance sheets are healthy.
Okay, so yeah, that was the CEA. And he's also made a reference on the GDP numbers, and the whole possibility of whether we can have upward revisions and whether growth in the subsequent quarters will actually improve from the first initial shocker print that we saw in the second quarter. Anyway, that's on the economy front. Back to Deven. Deven, let's talk stocks. Now, it's anyone's guess whether we get a 25 basis points rate cut tomorrow. We spoke with one economist. He says 50 basis points CRR cut and a 25 basis points repo rate cut. So that'll be a shock, right? But in any case, from a short-term point of view, banks, NBFCs, what's the trade?
Yeah, so it'll be all the best to all of us. I think if we get 50 basis point cut on CRR and 25 basis point
and 25 repo.
Well, looking at what RBI and the MPC wants to do probably in last few many quarters, I think they are overly concerned about managing the inflation using the monetary policy, which is not probably coming in their hand, and I don't think that it is working well with them. At the same time, on the other side, government has a compulsion. They are basically spending money. They want industry to contribute to that as well. Unless the rate of interest comes down, I think the enough amount of confidence will not come to corporate side. These are all some of the known facts. I am of the belief that I think the RBI will probably infuse liquidity. And given that kind of a situation, when the rate comes down eventually, I think there will be a revival in the spending. And that's where probably I think one is looking at higher amount of growth. Given that situation, maybe I think some of the stronger banks, and particularly I think the public sector banks, which have already participated in the rally, I think they could possibly be the winners in this game. Maybe the likes of SBI, likes of BOB, they may probably, I think, relatively remain stronger case for upside. Of course, I think the larger NBFCs, I think, will also have some better things to talk about, including the likes of Bajaj Finance and among them. So we like this entire possibility going forward, and we believe that I think it's good to hold some of the good quality banking stocks in the portfolio.
Okay, all right. Devin, we'll leave it there. Thank you very much for joining us and running us through some of that. By the way, the markets cooled off and we were up cruising, and it was actually looking like it was picking up pace. From the highs, we've given up almost about 150 odd points. So that's a very sharp drop which has happened in the last, actually 237, the Nifty made a high of 24,860. And we're at about 680. So actually it's almost 200 points gone in the last 10 minutes or so. So it's actually as fast and furious on the way down as it was on the way up as well. But there is still almost 0.9% gains coming through on the Nifty right now. Maybe just a quick look at what is moving as well before we take that break. If you can just pull up the Nifty draggers and just see if there is any change here which is really coming through. I think what is up is still up, but I think it's just given up a little bit of gain. So Infi, ICICI Bank, Reliance and TCS, they've all come off a little bit from the day's highest point. There you go. They're all there in terms of gains. There's nothing significant or a one-off on the other side. There's very few stocks which are down in the red, and you can see them up on the screen. Devin, thank you again. Appreciate it. We'll take a quick commercial break here. We'll come back with Dinshaw Irani, who will be with us. He's with Helios Mutual Fund. That conversation on the other side. Stay tuned.
Well, I actually started interviewing with CNBC-TV18 way back almost 2006 or 7 or something like that. And when I look at some of those pictures and images, my eyes start watering because there is so much more hair and so much more black hair. So that's my first memory. Unfortunately, it is what it is. The main thing is the passion with which you and your colleagues, go about it every day. It's to find news every minute, every hour is not easy, right? And that to maintain that passion, that excitement, that authenticity is the one remarkable feature that I would like to mention to you.
हमारे असम में हमें गो हत्या को निश्चित करने के लिए कानून लाया थे। ये 3 साल हो गया, उससे हमें काफी सफलता मिला हूं। लेकिन अभी आगे जाके हम ये निर्णय किया हूं कि असम में गोमांस कोई भी रेस्टोरेंट और होटल में सर्व नहीं होगा, और साथ में कोई पब्लिक फंक्शन में भी या पब्लिक प्लेस में भी ये सर्व नहीं किया जाएगा। सो ये हमने कंप्लीटली होटल, रेस्टोरेंट और पब्लिक प्लेस में बीफ को हमें कंजम्पशन ऑफ बीफ, मांस को खाना हमने आज से बंद करने का निर्णय लिया। पहले हमारा ये निर्णय था कि मंदिर का 5 किलोमीटर तक, लेकिन ये अभी हम पूरा स्टेट में एक्सपांड कर दिया हूं कि कोई भी कम्युनिटी प्लेस में, पब्लिक प्लेस में, होटल में, रेस्टोरेंट में आप इसको खा नहीं पाएगा। तो ये हमारा जो हमने शुरू किया था 3 साल आगे, इसको आज हम थोड़ा और एक कदम आगे बढ़ा के लेके गए। আছে বহুত শাস্তি আছে তাতে, আপোনালোকে পঢ়ি ল'ব। এইটোতো অলৰেডি আছে, জেল পৰ্যন্ত।
Okay, welcome back. Market off highs very, very sharply. And my God, oh my God, look at this. Market has got 35 points.
Happened?
You know, I was referring to the 150-point sell-off from the highs. Oh dear, this is
350 now.
Catastrophic, right? I mean, it's just amazing. We were up 350 points and there's 30 points left on it now. That is how fast things have come off. That's how thin the ice is on which the market has been skating in that sense, right? It just completely disappeared, all of it. And I suspect a fair bit of this could be attributable to what's happening on the futures and options market as well. A lot of complaints, by the way, that premiums today, especially today, are too high. Premiums have been too high. Is that attributable because volumes are lower? Remember, last month, if you look at futures and options volumes, if you look at cash market volumes, they've been lower. I'm talking about the previous month. We'll have to do a check. What is the situation now? But generally, the complaint has been from many that premiums are too high. I'm not sure if this is coming through from, it's feeding through from that perspective. But this is a very, very sharp fall that we are seeing once again. As I said, the high was at 237. The high was 24,860. And we've given up, 350, nearly 350 points since then. So it doesn't get bigger than this. So both the ramp up 400 points from 12 o'clock to, about 240 or so. And then, of course, I mean, the drop that we've seen, which is now 350 points, almost all of it given back in a very short time span. We'll get to individual stocks and what's happening as well. Dinshaw Irani is with us, CEO at Helios Mutual Fund. Dinshaw, good to have you with us here. Before you say it, the price is 50 points here and there. So let's just say it anyway. What's going on?
Hey, Prashant. Very good afternoon to you, your team, and the viewers. Actually, I came in on a very bullish note, but looking at the correction in the markets, I'm still bullish, by the way. So that doesn't change. Anyway, the fact is that we weren't expecting the market to rise so sharply today because we were also wondering what happened suddenly. Why is the market moving up so sharply? And obviously, the downturn also has taken us by surprise. But the fact is, Prashant, I think the bulk of the problems are over in the sense that at least the FIIs which are moving out, and we've always been calling it out as a Trump trade. We never thought that it was China which was seeing the money diverted from India as such. It was mainly US, the money flying back to the US as such. I think that trade has reversed now. And obviously the worst coincided with the worst time for the fundamentals at least. So September, we believe that these are going to be the worst numbers. Going into December quarter, you'll see some uptick happening, maybe not that much healthy signs, but you may see some uptick happening. So overall, I think the things are not bad at all for the markets. And even globally, I mean, I don't think globally the markets are seeing some bad news on the sidelines or something, and that may impact the market. India needs to be driven by global markets also. I mean, you need the global factors also to be in place for India to keep on its way up. So we don't believe you'll see if I was to predict for you the FY25 thing, I don't think it's going to be a negative market for us.
All right. Hi, Dinshaw. Good afternoon. Good to see you win and congratulations. The AUM is just moving up, right? I think you'll hit a new record, I think, of 3,000 crores.
Yes. Thanks, Nigel. Yes, we crossed 3,000 crores quite appreciably. So next target is obviously not even 5. I mean, we're looking at much higher numbers than this. We're just warming up, I suppose.
Yeah, that's what Samir seems to, Samir was quite excited on Twitter, that 3,000 crore mark. And as you said, let's not look at 5. You're looking at 10,000. That's the next target. So good on y'all and congratulations to you as well as the entire team. Make a lot of money for all your investors. Let's talk about various themes then, Dinshaw. What are you all most bullish on? The markets gave you a bit of a dip. I mean, we saw a 10% correction on the Nifty itself. Individual stocks went down 20-30% odd. What's the top theme?
So, Nigel, fortunately for us, our NAV, the last declared number, which was yesterday's, is at an all-time high. So, touch wood, I mean, the markets have been fairly kind to us. Obviously, our investment team has done their job. I mean, they're really on the ball on this one. The good ideas that we came up with along the way have been all the platform companies. I mean, we've been bullish on the three names earlier, and we've added one more with the new listing which came by in November. We were the anchor investors there. On the day of the listing, we added a bit more, I mean, much more to our anchor holding also as such. So touch with that also has done fairly well for us. So I think this is one big mover which has helped us keeping our NAV back, I mean, bringing our NAV back as such. Four of the platform companies that we are into. Obviously, IT is another call that we had taken. The markets were very skeptical about it, but I think IT also has done very well going forward. And obviously, the one big mover has been the banks, and especially the ones which you guys keep questioning Samir and me about all the time. That has done fairly well as such. So I think that all these things have come together to help us make this fantastic money, rather returns for our investor.
Oh, yes, absolutely. Banks have worked really well for you. Then, Sean, they've had a great run, right? Last couple of weeks, we've seen some solid gains come through. Now there's talk about more monetary easing, so perhaps better times ahead. By the way, I just want to draw attention to the market. I mean, this is moving like a yo-yo. At around 3 p.m., we had this massive dramatic fall come through on the Nifty. Today is the weekly options expiry. I mean, if you just see the rise and the fall, and then multiple times this has happened today, really require a strong stomach to digest it. Between the lowest point of the day and the highest point of the day, the swing is 550 points on the Nifty. It's that kind of a roller coaster that's playing out. Pull out a Reliance, perhaps. Reliance was one of the stocks that had that dramatic fall along with the Nifty when we went down. Now there's some recovery from that lowest level. We'll try and get some trading perspective with some F&O experts as well to just figure out what is going on in trading positions today. Today is the Nifty weekly product expiring on the options side. But anyway, Dinshaw, so what new? 2025. Give us a hot new idea.
By the way, Surabhi, coming back to that yo-yo in the market, there's my doctor who keeps telling me to go in for a stress test, and I always tell him that market stress me every day. So don't worry. I mean, my heart is pretty strong on this one. So anyway, so talking about 25, we actually don't think as I said, I already said it out in the beginning itself, don't think the markets will be negative. It'll be positive. Maybe they may not be as positive as one has seen in the past as such. I mean, the 14-15% kind of returns that one has seen, maybe it'll be single digits. Who knows about that? But the fact is that I think the biggest mover in the market will be two, rather. One would be obviously the interest rates, how they pan out, how the central bank Indian central bank starts looking at that. The liquidity easing is already, hopefully something will come out tomorrow as such. If that happens, I'm sure interest rates will be the next one that the RBI will be looking at cutting off going into the next year. And obviously the biggest one of them all would be the policies of Trump, as and when he comes out with his thought process on what he is looking at in terms of trade tariffs and all that. I think that all will work out the future course for the markets as such. In terms of ideas, I think we'll stick with the ones that we have. We are very bullish on, as I said, private sector banks. The financial services space, that again continues to dominate in our portfolio. Platform companies will continue to dominate. Consumption will be a story which will pick up going forward. We are yet underweight on that one, but we'll be looking at that going forward. I'm sorry, I'm kitchen sinking out here because nobody knows anything about anything beyond a certain point in time. And I'm basically taking a call on what I see in the foreseeable future rather than anything else. So.
Dinshaw, hi. What about the hot themes of 2024? Defense, EMS, in fact, the last 2 years. What's the expectation of how they may perform next year?
So defense, actually, we are quite okay with defense. I mean, I don't think we believe that India at some point in time will become an outsourcing base for most of the defense players as such. You've seen that the private sector players, you've already seen that happening. Public sector also, there's some portion of exports which happens as such. But I think it's going to happen in a big way, given that the world is looking at friendly countries to source their defense from. And India, fortunately, has been holding its ground in terms of not leaning towards right or left or anything of that sort. And it's a fairly friendly country to source from as such. So that way, we are quite okay. However, we were really disappointed with the budget which was presented, and that's why we did trim a few defense names, but we got back into those names again as we realized that things are again on the way up. In terms of the EMS players, I mean, frankly, I mean, I think the China plus one story, I don't think that's going to pan out in a big way as such. China did what it did at the right time when the world was shrinking. They wanted to see cheaper outsourcing and stuff like that. But now the world is very apprehensive and they want their supply bases to be onshore or near shore and stuff like that. That's why you see US offering a lot of SOPs to semiconductor players, to PV players, to EV players, and to photovoltaic players and stuff like that. So I don't think that story is going to play out in a big way. There'll be selective pockets where you can play that with. And I think the biggest giveaway is the margins of our biggest outsourcing player. Fairly mediocre margins, I mean, or rather mid single digit kind of margins. That's not exciting enough for the valuation that player commands. So we would rather be comfortable looking at very selective players in that space as such.
You know, Dinshaw, you made just taking a small detour. We have Chandan Taparia joining in. Stay with us. We want to hear what's happening in the F&O side. So let's get the intel as well. Chandan, of course, is derivative and technical analyst with Motilal Oswal. Chandan, good afternoon. Absolutely crazy, wild moves. Can you tell us what's the backdrop? What's happening?
Yeah, Prashant, really a roller coaster ride in the market. If I look at the days low to days high, the index witnessed a swing of 500 points, but in actual, the movement was much higher. There are a couple of reasons behind this. First, an important part is tomorrow we have RBI policy. And second part is that this is the first RBI policy after the US presidents. And apart from that, the 3 or 4 factors which I believe are important and reason behind these swings. If we remember that recently the SEBI came out with the guideline that there will be only particular days for weekly expiry. So earlier the volatility used to kill from different days of the weekly expiry, like Wednesday from Bank Nifty or Tuesday from Film Nifty. But now the entire shifting has happened to your Thursday due to the weekly expiry of Nifty only. Apart from that, what we noticed that most of the options writer or most of the algo trader were participating well in the Bank Nifty index to get the benefit of your theta decay. And ROI used to be better because every day they used to write the different strikes or different indices. But now as ROI is lower due to the higher transaction, due to the lower expiry days, so most of the traders have shifted their focus to weekly expiry on Nifty. So I believe all these are the reasons that why such kind of swings could be there. One important part also we need to keep in mind that now because of all these, the monthly expiry is likely to be more volatile because at NSE, all the 4 indices will expire on last Thursday of the month, including Nifty, Bank Nifty, Fin Nifty or Midcap Nifty. So I believe that now the dynamic of the market has changed due to the recent change in the SEBI guidelines. And due to the change in the lot size also, I believe some more swings will be there. So these are the couple of reasons we need to keep in mind. And now expiry day will be more volatile and monthly will be volatile than the weekly. And this is going to happen. So traders need to keep that in mind. It would be very tough to buy option or sell option without putting proper support. But I believe because of this, a lot of new strategy like bull spread, bear spread kind of scenario may play in this market.
You know, the idea when they introduced all these margining requirements, lessening number of weekly expiries per exchange, etc., was to reduce the amount of volatility, right? I mean, in a way, at least what we're seeing now is, I mean, it's the same, if not higher, right? At least today seems to be significantly higher. Is there also element that since all these restrictions have come, the amount of swing that you need to generate the same amount of ROI, I'm talking about algos, etc., is that much higher. So is that also, I mean, there's no way to prove it, but do you think that also perhaps is at work?
Yeah, that is also a reason because earlier people used to use the same money to generate the ROI on every day. And let's say, for example, if you are making 0.1% every day, that it comes to 0.5%, and people can easily generate 2%. But now you only have 1 weekly expiry, that's on Thursday, so ROI is lower. So writers are charging more, and that is the important reason that why OTM strikes are now quoting at much higher premium. Now we are heading towards expiry, but if you notice at the beginning, even 400, 500 points OTM strikes were quoting at 30, 40 rupees. And usually it hardly happens on the weekly expiry. So because of the transaction cost, because of the pressure on getting ROI and due to your limited days on expiry are the reason that all such kind of things are happening. And I believe ROI pressure on all the algo traders is also reason. And one more important point we need to keep in mind that in last 1 month, all the algo traders have changed their stance because backtesting cannot be now applied. most of the people used to do the option writing, mainly for theta decay. And they were trading well with the Bank Nifty, but now Bank Nifty doesn't have the weekly expiry, so they need to apply with the Nifty. But again, the scenario has totally changed. Apart from that, people used to do the trading setup in monthly expiry as well, but now the scenario will also change because of the volatile swings. So most of the algo traders have changed their stance. People were also expecting that there will be good activity in Sensex, but now Sensex expiry will shift on Tuesday, but backtesting data has only Friday. So I think
Chandan. Yeah, Chandan, that's exactly the final point that I want to check with you, this whole business on the Sensex, because leave us with one final thought on the, the move, if at all, if BSE is gaining, because I think there's a note that one of your peer brokerages put out that apparently premium options turnover is increasing for the BSE. How much is the adoption? Because now other products from the NSE have been wiped out, the weekly products. So there's one Nifty weekly and there's one Sensex weekly. Is the BSE really gaining? Do you see a lot of traction of that product, that Tuesday Sensex expiry?
Yeah, absolutely. That is a win-win situation for BSE. In fact, if we notice that Friday Sensex was also gaining the momentum. However, they also focused on the BSX, but it was not comparatively doing well. But I believe most of the participants will focus on Sensex on Monday and Tuesday, being the expiry and T-1 day of expiry. They will focus on Nifty on Thursday and Wednesday. So definitely I believe the BSE, which might have 1/4 or 1/3 market share, may come to the 50% of the market share due to change in the expiry dynamics.
Absolutely. And that explains the excitement around the BSE stock every now and then. Chandan, thank you so much for that. Let's just pull up BSE as well. We were showing the Sensex, which is fine. Let's pull up the BSE stock price, 10-11% higher, right? So it explains the kind of enthusiasm that the market also has with them. And you just heard an F&O expert there saying that 50% of the business, the weekly business, 50% has been cornered by BSE. Monday, Tuesday are for the Sensex and Wednesday and Thursday are for the Nifty. Nigel.
Well, that's right. Good view on that then. Well, I think it's that time of the day. It's 3 p.m. So let's get in Nimish to help us out with what he's picking up on D-Street Chatter. Well, Nimish, what a wild day, right? I mean, the Nifty has moved 550 points intraday and the Nifty Bank has moved 1,000 points. I don't know what all the RBI governor has in store, but the bulls, they clearly believe a lot.
Well, actually, the volatility is largely because of the Nifty weekly expiry. That explains by the guests as well. But, in general, the trend seems to be that the momentum on the upside is backed by FI buying. I've been saying for the last couple of days that the flow seems to be have turned positive for India. And now the feedback is there is a bit of reallocation of global capital back into the Indian market. So again, that's positive at the margin from a large cap perspective. And even in the broader markets, the feedback is that there is basket buying even in today's market from a larger FI. So flow seems to be quite strong is the sense I'm picking up. The sector of the day is clearly IT index. The index is up to almost 2%. A couple of reasons. One, the Nasdaq was up almost 1.2% last night. And two, Salesforce reported Q3. That was quite strong and they've raised the guidance as well. The reading which I was looking at the Salesforce report and they very clearly say that from an India perspective, Persistent, L&T Mindtree and Tech Mahindra, they are the three ones who benefits or there is a positive read-through for these companies in India. So maybe that explains a bit of rub-off in the IT names as well in today's market. As you rightly pointed out, the RBI policy tomorrow, it's a big event to watch. I guess there is a bit of preemptive move now that maybe there's going to be some liquidity ease by the governor. And that's why you've seen a bit of momentum in the Bank Nifty as well. So need to see as to how that comes out. But broadly, barring the volatility of today, there is a clear FI buying and looks like there is a bit of reallocation of global money back into India.
Well, that's right. Ramesh, just a quick point on the tech index. I was looking at the last month's flows. The FPIs were net sellers. But on tech, they were buyers. $600 million approximately. And that takes their total holding to 10%, which is still 100 basis points lower than what we've seen on long-term averages. So, that's why that was one of the sectors of the day we gave earlier this morning. What about individual stocks?
So in terms of individual names, the first stock is Persistent, part of the IT pack. Big move on that name. The volumes are on the higher side. I understand there is aggressive buying from larger FIs in Persistent. On top of it, there is a strong buzz or an indication that the company is going to bag a large order very soon. So that's something to track in Persistent. Interestingly, CLSA today has actually raised the target price in Persistent to almost 8,400. So that's the first name. The second stock is PN Guardgill, part of the earnings season, part of the wedding season. There is a bit of interest back in all those names, jewelry companies. PN Guardgill stands out because I understand a domestic PMS investor is an active buyer of late in that particular stock. The third name is RBL Bank. While the stock is in the FNO band, there is aggressive delivery-based buying happening for the last couple of days. Yesterday, the volumes were at record highs. Again, the feedback is one of the domestic mutual fund who owns a big chunk. They have further added into RBL Bank, and also there is a buzz that maybe we'll hear a corporate development in RBL Bank very soon. The last name is Tata Elxsi, again part of the IT names. A big mover in that name as well, purely on back of FI buying. So the delivery volumes are going to be quite high today on the buy side. But again, the buzz is that largely the momentum in Tata Elxsi is on back of FI buying today.
Nimish, have you heard of any action on the mutual fund side? I mean, I heard someone saying capital market fund maybe from one of the fund houses.
Sorry, I didn't get you. This is regarding
a capital market fund, a sectoral fund, a capital market stock fund. I mean, have you heard anything of that sort?
No, not really. No, Prashant. Sorry, I've not heard anything on that.
Okay. All right. Nimish, thank you very much for that. We'll take a quick commercial break here. We're going to come back, buy today, sell tomorrow ideas with our technical experts on the other side. Stay tuned.
की या निवडणुकीने एक गोष्ट आपल्यासमोर निश्चितपणे ठेवली आहे ती म्हणजे एक है तो सेफ है आणि मोदी है तो मुमकिन है.
अभी नवनिर्वाचित विधिमंडल के नेता के नाम में
Welcome back. Now, once again, up close to about 300 points on the Nifty. Mitesh is back with us to make sense of the volatility and a few BTST calls. Mitesh?
I think I was hearing Chandan about Chandan saying about volatility on expiry day. I think the normal day volatility is also difficult to handle. Last few days have seen very strong intraday dips and then an immediate pullback. But the good thing is that the hourly and the 2-hourly charts, the indicators and the averages are positively poised, which means that declines will most likely be bought into. And while we've come off from the levels of 24,800, I think for the timing, my view is that it might take some effort to get past this 24,800 zone. So, take some profits off your long positions, buy and decline if you get closer to about 24,550, 570 zone is your buying area. And the range is shifted upwards now from 24,350, 500 to about 24,550 to about 24,800. So that's a positive sign, but maintain a long bias on stock side at least. And I have BTST on CESC, which I would recommend buying with a stop at 188.75 for targets of 185, 186 for tomorrow. And the other one is Bajaj Finance. That's a BTST with a stop at about 68.15 for targets of 69.20.
Okay, all right. Got that, Mitesh. Thank you very much for all the trading calls and ideas. You have a good rest of the afternoon. And we'll see you again with the market action tomorrow morning. Let's move on then. We're learning from sources that life insurers have likely taken price hikes in their term portfolios. And we've seen some of this play out. Remember the buzz in stocks in the earlier part of this week on the sort of indication that maybe one of the large insurers like HDFC Life is moving ahead with a hike in term premiums. Yash is here with more details. Yash, what are you picking up?
Well, Surabhi, you spoke about HDFC Life, and of course, HDFC Life was the one which started, looking at an increase as far as the pricing of the term book is concerned. What we've been given to understand from our sources is that HDFC Life is likely to have taken a price increase of about 5 to 7.5%. As far as the term book is concerned, under the Click to Protect portfolio, at an aggregate level, with all the price hikes that the company has taken so far in the year, the price hike at the portfolio level is about sub 5% for HDFC Life. Following HDFC Life, a few other life insurance companies have also undertaken a price increase. These include ICICI Prudential Life Insurance, Bajaj Allianz Life Insurance, and Tata AIA Life Insurance. All the price hikes from these companies are in their term insurance or a protection book as far as the portfolio level is concerned. Interestingly, SBI Life so far has not taken any price increase as far as the latest round of hikes are concerned. And my sources tell me that at this point of time, there is no thought on doing anything of that sort as well.
Thank you very much for that. We'll slip into a very short break. By the way, Vodafone Idea is down 4.5%. And on Industars, it's up 1.8%. So no outsized gain on Industars, but it's still in the green now. We will slip into a very short break. We'll come back and talk more on the markets. Just 5 minutes left for close.
जी का मेरा बधाई और इस चुनाव के दौरान महाराष्ट्र के 14 करोड़ जनता जनार्दन के डिसीजन पूरे भारत के लिए एक संदेश है। ये रेगुलर असेंबली इलेक्शन नहीं है। लोकसभा चुनाव के बाद महाराष्ट्र के इस चुनाव, इससे पहले हरियाणा का, इन दोनों से जनता के संदेश स्पष्ट है और महाराष्ट्र से ऐसे अनएक्सपेक्टेड अनप्रेसिडेंटेड विक्ट्री इज अ बिग मैसेज टुवर्ड्स विकसित भारत।
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai.
Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18. For 20 years, it has been India's most coveted stage for business leadership.
Welcome back. Well, we are down to the final moments of what has been a hugely volatile day. 550 points from the lows to the highs, but several huge swings in between. Look at that last gash, that big V in the last 30 minutes of trade. It's really everything happening. So let's start, recapping what the final tally is looking like. The Nifty is managing, after this whole swinging business, is managing a 230-point gain. The leaders include Trent. Trent is a very, very smart. Late rally on Trent, by the way. This move has happened in the last half an hour. And it's taken it to pole position on the Nifty. 3.5% up on Trent. Titan is also keeping it good company. TCS is also up and about. So the Tata Group is really shining bright this afternoon. Infosys, about 2.5% on the upside. Wipro was the other tech name, Tech Mahindra. So basically, most of IT has done really well. Dr. Reddy's, ICICI Bank, these are some of the other winners. Hindalco, M&M, and Lever. The Bank Nifty is up about 0.6%. It's underperformed the Nifty slightly today. But lots of big names. I mean, there's Kotak Mahindra Bank. Let's look at SBI. SBI is 0.5% up. And HDFC Bank is about 0.25% on the upside. So those are the winners on the Nifty.
BSE 14% higher, CDSL 8% higher, capital market plays in full action, Angel up 3.5%. Then you had gains in the form of Bajaj Housing Finance 6% up, Sagility. Tech platform names like Zomato, Swiggy continue to gain ground. Granules saw a recovery today, 4.5% higher. But on the way down, so largely there was more green than red, but the advanced decline ratio was just marginally in favor of the gaining side. On the way down, you had Graphite India, which sold off very sharply after yesterday's up move.
A few names which have been sort of, kind of dead for a while. Bajaj Housing Finance should come up on your screen. That had a sharp move higher today. And Credit Access, of course, that was up about 6% as well. These are, from the respective areas, Housing Finance and MFI, some of the higher, better quality names that we really saw coming in. Lots of other sort of movers as well. Actually, bulk of the movers is of course, capital market plays are different, but all kind of, industrials, manufacturing, those kind of names. Old economy maybe. IGL, Castrol, Maharashtra Seamless. There were gains in Skipper. Afcons was sharply higher. Phenolix Cables, PCBL. It was all old economy, manufacturing, industrials kind of names. IMFA. These are some of the big volume-led gains that we had through the course of the day. So, a pretty wild day with lots of moves. You total all of that up. I think you'd be easily in 4-digit kind of moves on the Nifty itself. And that's the day. But a good close nevertheless. We end at about 24,700 or so. The adjusted close, I think that is the adjusted close. So 24,708 or so on the index. Well, it's a wrap on this edition of Closing Bell from all of us here. Goodbye, but markets forward will pick up on all the action on the other side. Surabhi and Nigel take you through that. Stay with us.
the benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC TV18's 20th India Business Leader Awards.
Presented by Standard Chartered in association with Reliance Industries Limited.
We committed more than 400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. Two different manufacturers came back to us and said, look, we just cannot deliver to the time frame that we had committed. There's going to be a delay. In one case, it was 6 months. In the other case, it was a little longer. So the program that actually should have physically started on the aircraft already will now not start until next year. The 787 aircraft, the first of the retrofit ship sets, will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that 400 million that you spoke of, that was committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes. In one case, we've had to change seat vendors. This refresh I talk about, which is an interim step on the 777s, is something that we hadn't provisioned for originally and is only necessary because of the delay to the seat deliveries. But look, we've made this decision to invest more because we realise that this is, we can change everything else about the airline, and we nearly have changed everything else about the airline. But until we change the last 40 of our legacy wide-body aircraft to the standard that we expect of ourselves, let alone what customers expect of us, I think people will not consider the job complete, and we won't consider the job complete.
So how much more are you going to have to spend over and above the 400 million which have already been committed?
Well, I won't say, but it's in the tens of millions.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But you know, what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin?
Sharp volatility on the Wall Street. The Sensex and the Nifty see wild swings on expiry day to end near 1% higher, led by technology and financial stocks. Mid-caps relatively underperform in today's session.
Reserve Bank's Monetary Policy Committee to announce its rate decision tomorrow. A CNBC TV18 poll highlights that a majority of the economists do not expect repo rate cut despite a lower than expected GDP print. Only 50% expect a cash reserve ratio cut tomorrow.
Indus Towers surges after Vodafone PLC sells its entire stake in the company via a large trade. The proceeds will be used to repay its debts and invest in Vodafone Idea, which will use the money to pay down dues to Indus Towers. Separately, Swiggy and Zomato gain but come off the day's high after Jefferies turns cautious on quick commerce discounting. The brokerage firm believes that this poses a risk to their profitability. Hello and welcome to this fresh new edition of Markets Forward. Your go-to show will tell you about today's exciting trading session and will gear you up for tomorrow's trade as well. I'm Nigel and with me is Surbhi. Surbhi, what a day. You needed to have your seatbelt on all through the day.
I think I have a headache because it was up, it was down, it was up again, down again. And by the end of it, not bad because a 550-point swing today on the Nifty between the low and the high. Final tally is a gain of over 200 points. So I think the bulls will be relieved.
Well, you know, there's that factor at play. Earlier, we were getting used to every second day or every day we had a weekly expiry that played out. Now, because of the new regulations, you only have one day. That's Thursday, when in fact you have the Nifty weekly expiry that will play out. So the expiry-related factor definitely played out. As Surabhi said, the Nifty moved 550 points. The Nifty Bank moved 1,000 points. All of this in a day itself. Earlier this morning, we had pointed out that tech could be a big outperformer. You know, that was the part of our morning chat that we said. And that was because NASDAQ outperformed overnight, and the commentary coming in from Salesforce as well was good. The tech index, in fact, was the top outperforming index, up 2%. TCS and Infosys, top Nifty performers. The Nifty Bank, that's done well in the recent past. At the start of the series, the rolls were indicating that the longs were getting rolled over, and now it's less than 2% away from fresh highs. The advanced decline ratio, well, for a day, when you have the Nifty surging away, tech surging away, Nifty Bank doing quite well, even Stevens. So that told you that today was predominantly a large cap day, Surabhi.
Oh, absolutely. And that's very evident. I mean, the lines were even, Steven, and even if you look at the index, the mid-cap index could not outshine the Nifty despite all the volatility on that large-cap index. That's the Nifty tally, 1% higher. The mid-cap index was about 0.6% higher. And the Bank Nifty, again, 0.6% higher. So the Nifty did take the top honors. We'll boil this down to individual movers and shakers in just a bit. In fact, let's tell you what's lined up on the show. Lots of advice and lots of action coming your way. So here's what's in store. We'll start off with, of course, the granular details, a blow-by-blow account of what happened today with stocks. Hormuz will get going with that in just a bit. We'll put the spotlight on the quick commerce space. Jefferies has written in a note on some of the aggressive discounting strategies that are at play. These stocks were up and about today. Swiggy and Zomato had a great day. We'll tell you what Jefferies is saying. Of course, Indus Towers on the radar because of that big trade from Vodafone PLC. So lots coming up. And finally, of course, we'll dive into the key events to watch. And one of those major events, obviously, is the RBI policy. We'll tell you more about those expectations as well. You know, with that, let's quickly kick things off. Hormuz is joining in. Hormuz, what a day. All over the place today.
You have a headache. If only the day started off with a disclaimer that please don't try this at home. But yes, it was a day that was marked with a lot of red, a lot of green, but eventually ending in the green. And it was the capital market stocks that were the stars of today's trading session. Look at BSE, 13% higher, a record high for BSE, a record high for CDSL as well, 8% higher there. And most of the other names, be it Angel One, Anand Rathi, all of them seeing healthy gains in today's session. IT was another sector that saw new highs today. The IT index made a new high, and all the index heavyweights contributing, and everybody had a similar dip and a similar recovery towards the close of the session. It was brokerages that came out with a lot of commentary through the day, and two of them, be it Zomato and Swiggy, had a very good day, making new highs. Juniper Hotels after the CLSA initiation, Indus Towers as well, brokerages coming out with some dividend estimates after their dues being cleared, and Persistent as well getting a price target raise this morning. A lot of stocks that reacted to news flow. Divi's Laboratories at one point was down 6%, recovering from the lows, ending 2.5% lower. Vodafone Idea 2 extending losses, now down over 25% from its FPO price. NBCC after the order win. HEG, it'll be interesting to see who are the buyers in the block today. Almost 12% equity changing hands. And Graphite India, of course, ending at the lowest point of the day. And lastly, stocks that did well on the back of very strong volumes in today's session. Maharashtra Seamless, look at these gains there. Anywhere between 5%, 8%, 11%. The broader markets had definitely had a field day in today's session. Back to you guys.
Thanks a lot for that, Hormuz, for giving us that neat wrap. Well, let's welcome our guest. We have independent market expert Amrish Palika as well as Ruchi Jain of Motilal Oswal Financial Services who join us. Hi, Amrish and Ruchi. Thanks a lot for joining in. Ruchi, what a session you had today. The phone must have been buzzing. Plenty of volatility out here. But do you think these markets are seeking much higher levels from here on? And give us your levels on both Nifty and Nifty Bank.
Yes, hi, very good afternoon, Nigel. Very good afternoon to everyone. Certainly a day of volatility, but as we say, all is well that ends well, and the end was good. We have seen some intraday declines in today's volatility, mainly because of weekly options expiry. But during that intraday decline, the major supports were intact, and the closing is much positive. So I think the Nifty has managed to hold its important supports of 24,400 to 350, which are there. Until those levels are intact, it's better to trade in the direction of the trend because the overall momentum also seems to be positive. And one good thing is that the entire up move that we have seen today was not concentrated with fewer stocks, but mainly in the large cap segment. If you take it IT, whether banking, Now, most of the large cap stocks did better. I think till this support is intact, it's better to follow the trend. The 61.8% retracement level is coming around 25,100 to 25,200 zone. So probably if index manages to hold on today's low, then we could see a continuation of this momentum towards 25,100 in the near term.
Okay, all right. Stay on. We'll have some more questions for you in just a bit, and Amrish is also with us, so we'll go to him in a minute. Let's first address, of course, the big event that everybody has their eye on come tomorrow, and that is the RBI monetary policy decision. After that lower than expected GDP print, expectations are running high that the RBI may move, at least on the CRR front, if not interest rates. Ritu is here with the key expectations on the street. Ritu.
The sharp slowdown in growth has put RBI in a very uncomfortable position. There is a growing chorus for a rate cut, including from government officials, at a time when high inflation, which has now breached RBI's tolerance threshold, continues to be a spot of bother. Now, the CNBC-TV18 poll shows that 7 in 10 economists do not expect the lower GDP print to accelerate the rate cut cycle, and they believe the primacy of inflation is going to prevail for now. The MPC is expected to leave the repo rate unchanged at 6.5% for the 11th consecutive policy because of lingering inflation concerns, and also because of the volatility in global markets, because a rate cut at this point can also accentuate the pressure on the currency. So instead of going for a rate cut, the governor could address the growth concerns with a dovish commentary, which will lay then the foundation for a rate cut in the next meeting. In fact, an overwhelming 90% of respondents expect to see the first rate cut from the RBI in the February meeting, and the total quantum of rate cuts is seen between 50 to 70 basis points. Now, while a rate cut is ruled out with inflation above 6%, there could be an explicit acknowledgement that growth needs support, and as a step towards an eventual easing, the RBI instead may go for a CRR or a cash reserve ratio cut. But the respondents are pretty divided on the possibility of this happening, with only 50% seeing the chance of a 25 to 50 basis point cut, which could ease some of the pressure on the banking system liquidity. Now, the GDP forecast, that is likely to grab all the eyeballs. 70% of our respondents are predicting that the RBI will lower its FY25 growth projection to 6.4 to 6.7%, and 20% foresee a revision all the way down to 6 to 6.3%. Now, on inflation, half the respondents expect the MPC will revise its projection for FY25 upwards to about 4.8 to 4.9%, while 40% are expecting a more modest increase. Now, apart from the policy rate decision, the RBI statement is also expected to focus on liquidity management, because systemic liquidity has been impacted because of increased forex interventions, and the government's cash balances have also been volatile. And so our respondents believe that the RBI will continue to manage liquidity through both main and fine-tuning operations. That's as far as the policy is concerned. Of course, markets also want to see what happens with RBI Governor Shaktikanta Das's tenure, which is supposed to end on the 10th of December.
Absolutely, Ritu, got it. So the key takeaway is that only 50% of those respondents say that there will be a CRR cut. Amrish Baliga is also with us on the show today. Amrish, great to have you on. Look at the way bank stocks have moved this week, right? Bank Nifty is up 3%. The PSU banking index is up 4.5% in just 4 trading sessions alone, in anticipation of some sort of a relief. What about you? Any bank trades or even NBFC trades expecting easier liquidity ahead?
Yeah, I mean, clearly, I don't think too many are expecting a rate cut, but clearly we could have a CRR and SLR cut, and that should increase the liquidity within the banking system. So I suppose the PSU banks, which were languishing a bit in the last month or two, I think that's where we could see some sort of a move. And here my picks would be SBI, as well as PNB, which has been one of the poor performers, at least in the recent past, as far as the market is concerned. But financial performance, we have seen it improving in the last 2 quarters. So that's the other stock which is there on my radar.
Okay, all right. Gentlemen, hold on. Let's talk about Vodafone. And Vodafone PLC has exited Indus. It sold its remaining 3% stake in the company. Meanwhile, a couple of brokerages like Citi has put out a note on the stock. The stock ended higher with a gain of around 2%. So Indus was one of the stocks of the day. Nimish joins us to run us through all of these details. Nimish.
Well, sir, as you rightly pointed out, Vodafone PLC has sold the remaining 3% stake. The deal got executed in the block window, which do suggest that there is a very strong institutional demand. Now, in June, they sold 18%, and now they've sold the remaining 3% in Indus Tower. Going forward, what to watch out for? One, there is a board meeting from Vodafone India on December 9th for fundraising. So the understanding is that 2,000 out of the entire proceeds, 2,000 crores will be plowed back into Vodafone Idea from Vodafone PLC, and that money will be used to repay the outstanding dues of Indus Tower. As of September, the outstanding dues of Vodafone India to Indus is close to 3,500 crores. If indeed they paid this 2,000 crores, analysts are expecting that this works out to 7 rupees per share, which will be eventually paid out as dividend to the shareholders. So that's the trigger to watch out for, how much money they get from Vodafone Idea and how much dividend they pay going forward. For going forward for 26 and for FY 26 and 27, analysts are expecting that the dividend payout of Indus Tower will go up as high as 20 rupees per share, which works out to nearly 6% dividend yield at current price. So one, the overhang is out of Indus Tower. B, all eyes will be on the Vodafone Idea board meet, which means that money will come back from Vodafone Idea to Indus Tower going forward.
Okay, all right, got that image. So yes, indeed, that news came through, and it's good news for Indus Towers for sure. Thanks for that. Let's quickly move on. Today, some of the platform companies, Swiggy and Zomato, both of them were in focus. Actually, the stocks did really well. But there is a note out there from Jefferies on quick commerce specifically. And this note seems to be raising some concerns with respect to what could be aggressive discounting in the space. Let's ask Manglam about the details here. Manglam.
Well, interesting note at an interesting time, especially because the big moves that we're seeing on both Zomato as well as Swiggy. What's happened is that Jefferies, they created a little basket of products that, all of us would use, something that comprises of personal care, F&B, home care, dairy, etc. The MRP value of that basket was close to around 11,500. They took all these products and compared it across all the other, quick commerce offers that are there, and they saw the discounting, and that was startling, the facts that it threw up. The average discounting on quick commerce is 14%, with personal care having 26% discount and dairy products having about 8%. Now, if you look at across platforms, the most aggressive is the most recent entrant, Flipkart Minutes, with 22%. DMart Ready itself is 21%. Then you have, Blinkit at 15%. But Zepto's Super Saver actually makes the discount at around 26% itself. So to all of this, Jefferies says that because there is so much aggression by the current players, there might be, a place where all the other existing players, the likes of Blinkit and Instamart, will have to respond to this aggression, and that may pose a risk to consensus estimates on profitability, not only on other listed QCom players, but also the modern trade players as well. We've seen DMart call out the quick commerce impact, and with DMart Ready prices now being comparable to Flipkart Minutes or Zepto with Super Saver, the street is worried about it spilling over to modern trade as well as the mom and pop stores that are there as well. And overall, this will create a fair amount of pressure to shorten delivery times across all product categories and across e-commerce platforms too.
All right, thanks for that, Manglam. In fact, speaking of CNBC-TV18 about Amazon's entry into the quick commerce space, Swiggy's MD and CEO, Sri Harsha Majety, said that he feels good about the company's chances given its track record against larger companies in this particular space. Let's hear out what he had to tell us.
We are no strangers to competition. If you've tracked our overall company, we were born as like the 8th company in food delivery. When we came up, there was heightened competition even from Amazon in food delivery for a few years in between. So we feel very good about our chances. Ultimately, I think we have a lot of respect for Amazon, but at the same time, the quick commerce business and the needs are different and are emerging. They're not even clear. So I think it'll come down to which companies understand consumer needs better and serve them over the next few quarters.
All right, so there you go. The concern of perhaps greater aggression from large players like Amazon that are going to enter quick commerce very soon. Just back to our experts. Ruchit, actually, let me ask you for a quick chart check first. On Zomato, Swiggy, I know there's very little trading history, but if there's any recommendation, any thoughts, because the stocks are in serious momentum.
Yeah, I think no, definitely we have seen over last 1 year itself, whenever there are in between 8 to 10% decline, Zomato has been bought into, and that higher top, higher bottom structure is still continuing. And even at current levels, the stock tested at 300 mark today, but still, in spite of this recent rally, the volumes are quite good, which indicates buying interest at current levels too. Now, from a near-term perspective, I think the retracement of the previous corrections indicates a possible targets around 330 to 335. So I think the momentum is likely to continue towards 330, 335 for over a short period of time.
Okay, all right. Well, before we wind down then, Amrish, you normally give us one stock that you like. Help us out with that name.
Yeah, that's Vedanta. I mean, the companies across various commodity verticals, aluminum, they are the largest producer in India, about 45% domestic market share. Also into zinc, lead and silver, where zinc, they are the largest producers, 80% market share. Oil and gas, largest private sector oil producer. Even in iron steel, they are one of the largest in the Indian private sector as far as exports of iron ore is concerned, and the second largest player, in power. If you're looking at the private sector players. Copper, again, they are the largest smelters. But one of the major issues with this company was the debt burden and its maturities. I think that's clearly been postponed to FY27 and beyond. And already they have been able to reduce their debt by $4.5 billion recently. $2.5 billion will be reduced over the next 2 to 3 years. And recently they've got a rating upgrade, by a notch to AA. Moody's too, has upgraded the corporate family rating. And they've also been selling the non-core assets, which is positive. I think one of the major triggers which will happen over the next couple of months is the proposed demerger into 6 units, which is expected by the end of FY25, because it's already been admitted to NCLT, so it should come decently quick. And this would be well accretive for the shareholders. So valuation-wise, on a consolidated basis, I'm expecting an EPS of about 59 in FY26. Which actually means a target price of about 590, which is a decent return from the current levels.
Okay, all right, gentlemen. Thanks a lot for joining in. Took note of that, Amrish, and thanks, Ruchit, as well for joining in, filling us in with your insights on all of those stocks. For the time being, slip in a short break. Come back. We'll get you all the top corporate voices. We'll also tell you all the top market events you need to track.
For Air India?
Well, there's a whole regulatory and legal structure that you need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy when you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. That was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power, I'd refer you to an article that was literally just released by IATA, which traces the real how airfares have tracked relative to the CPI and relative to oil prices, not just in India, but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down. And not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will
Welcome back. Well, it's time for our special segment, D Street Chatter, where Nimesh will get us an insight into all the dealing room buzz that he picked up today. Nimesh, what a volatile day. So what did you pick up?
Well, extremely volatile thanks to the Nifty weekly expiry. A lot of individual names are buzzing in trade. So the first stock on my list is Persistent. That stock saw good delivery-based buying in today's trade. So as well aggressive buyers. I understand there is a strong buzz of a company winning a large order very soon. So that's the trigger as far as Persistent is concerned. Interestingly, CLS has also today raised the target price